Good morning.
Good morning, sir.
Welcome back to Forex Focus here on Tasty
Left you
Live.
hanging there. I kind of gave you the eyes I was going to do it, then I looked away.
I know. It's all right. I'll step up.
It's
Happy Thursday.
the amazing new background. It's eye-catching.
Yeah.
Look at you.
Booyah. That's really nice. Am I supposed to be like really low? Can we all
Or we
see
could be tastylive. It's either one. No,
Yeah.
it
Love
works.
Great job to our production team.
Absolutely.
Getting that up. This
Look
is
at that. Customizing this out.
so fun.
Yeah, very good. Look at you on inauguration day for the new backdrop.
Why, thank you.
Well,
Glad to be here.
You're the A talent now.
All right.
I mean, I don't know. There used to be a little redheaded guy, but I don't even know what happened to him. So
Yeah, do you want me to start wearing hats?
no,
That
and
make you
most
feel more
importantly,
comfortable?
don't wear Lululemon pants. That would
Okay.
be-
I mean, my Lululemon pants have buttons.
I was going
Is
to
that
say,
okay?
yes,
Okay.
because they're big boy pants, not string pants.
drawstring.
That's string pants. So, oh, poor guys.
What's new today,
4,000
Peter?
miles away, and we can't pick on them. I don't know. A lot of stuff going on today. A lot of movement. Interesting to see the. Again, we're going through the. I honestly thought the tariff piece was getting old,
I know.
and it is old.
It's old, but still.
It definitely, but it's interesting to see where they announced tariffs yesterday, and you saw Euro trade lower, Kiwi and Canada get hit, and all of a sudden buyers emerge right
Yeah.
away. I mean, they didn't spend more than 20 minutes down there,
Right.
and kind of stayed quiet through Asia. And the minute London came in, they're selling dollars, buying FX. So, and U.S. equities actually had a pretty down day,
Yeah.
traded a little bit higher, and they're getting sold again too. So I think everybody in gold, lifetime highs. We're up almost $45 in gold.
Insane.
They set at 350. I think we printed. Yeah, we're sitting at 390 right now. So, and no reprieve once we went through the highs, and that all didn't happen till about 4:30, 4 o'clock this morning. We were up maybe
interesting.
$5-6, 360, 362, and just the wall of buying came out. And this is the same thing we've talked about yesterday a little bit, where you get to new highs, and who are the participants? Well, you've got momentum guys who want to buy. The more it goes, the more they want to
Yeah.
buy. And then you also have hedgers and users who now are having to protect their need for the underlying. And then everybody who's either short premium or short the underlying put to a difficult choice. And the interesting thing is we got up to 3,095, I'm sorry. And we pulled back about $5 here, but we haven't gone 3,090, 3,050. So, and it seems to be, you never quite know where
Yeah.
the stop is, but it seems like there's a fair amount of gas behind it. So, is that helping some of the currencies today? I think maybe a little bit, but I think it's also that idea of, I mean, gold's up, U.S. equities are getting sold right now, and the whole time, the one thing that hasn't changed yesterday and today was continued selling in treasuries. So yields, while not ripping higher,
Yeah.
are marching higher. It's not helping the yen. Yen tried a little bit of a rally yesterday and then kind of got squashed. So dollar yen higher again, while everything else is a little bit lower. Dollar yen is higher, yen is lower, while the rest of the currencies are a little bit higher. So it's been kind of an interesting. It feels a little risk off, but
Right.
nothing's getting that far away. But risk off in a different way, because every other risk off time we've seen is dollar buying. I'm going
Yeah.
to the safe haven. Not so much. And my takeaway is interesting is that's not like we're not seeing Euro not do its usual thing, which is sell off with risk off at 102 or 103. We're seeing it at 108.
Right.
And we're seeing all these currencies, cable 129.35, holding on dollar selling at the higher end of the recent range, which is a little bit different behavior. So, you put that context in is we know we can't control the news cycle, and whether or not they're going to, I'm not going to say the L word. I refuse to get sucked into that. But April 2nd.
It's coming, no matter what.
Again, I just, stuff
It
like
will
this
be
is,
Liberation Day.
you had to do it.
Oh, yeah.
Whatever happens April 2nd, I mean, if we see anything, nothing sticks. And it's become a clumsy cudgel because it's not getting the responses. It's getting basically, Mark Carney in Canada is like, okay, let's go at it. I'm going to borrow a bunch of money and spend $2 billion to ensure domestic production. They're not rolling over in the same way that they did. Now, depending on the country and how far they fight, we'll see. But, this Germany exports a lot of autos to the U.S. The euro reacted to this by trading lower on that news. Well, it's going to be a little bit more expensive to get, cars not made in the U.S. here, and immediately discounted it. So with the euro rallying back, and that's not the euro, like I said, rallying at low levels. It's high levels. So there's a lot to parse through here as we're, rolling into the end of the week.
Do you think that there's some weekend risk with this? April 2nd, that's what? Is that Wednesday?
Tuesday. Wednesday.
I think it's Wednesday.
Yeah,
so is there still room for negotiation? Could things shake out over the weekend? Or do you think this one is one of the most telegraphed so far, and it should be pretty cut and dry?
I think that, is there weekend risk that they could take them off, put them on? Yes. I think the market, whether it's equities or anything, is getting tired of it because it is, again, making things. I think the market's telling us right now with the reaction from U.S. equity markets yesterday was the minute this was talked about, NASDAQ was down, 450 points or more at the end of the day. And it was one way. There was no bounce anywhere along the way. SPOOs down, not quite as much, but I think they'll end up being the one that gets hit hard today. I think everybody is kind of tired of. We're not willing to see if these are temporary or not. We're going to take stuff off the table. We got a good bounce. We got a bounce last week and the start of this week. Early into equities. If that turns out to be was a 3-day rally, and that was the best we could do. Really, a 2-day rally, and that was the best we could do. I think it speaks to maybe market structure is changing a little bit there, and the one piece that's unrelenting is the interest rate piece. We're almost back down to 115 in bonds, which, again, we were flirting with 120. We're back there. And it's not just the long end and the short end. It's all the pieces of the curve moving higher. So you would think that, because we always talk about, well, interest rates are higher in the U.S. That's good for the dollar. Not so much this time. So there's bigger things at play.
Not really, but if we pull up the platform here, you bring up a good point in that it's funny, earlier this week we were talking about, I made some slides on flight to qualities, traditional safe haven currencies, and the chance that relationship is kind of breaking down. And we've seen it play out almost immediately, taking a look first at this dollar-yen market, because you're absolutely right. We had that pretty strong sell-off in stocks, NASDAQ leading yesterday, and did not see the same thing as much in a bid in the yen, and way more reacting to U.S. rates as we had
You're absolutely right. Bonds down a full point this morning, and the yen getting absolutely. It's not the ripping rally to the upside, but there is no downtick to it. So,
a good range yesterday during the U.S. session, but by no means any strong continued down move.
No.
Stayed in there, and as soon as Asia came in, really picked it up.
Right, and that's when the initial note bond sign. I mean, by 8 o'clock our time, bonds were down 10, 12, 15 points, half a point. They're now down a full point, and that continues. So I think our takeaways practically is we know it's not perfectly correlated, but if I'm trading dollar yen, I'm not listening to the tariff stuff. I'm looking at U.S. rates.
And we had what a 5-year auction yesterday.
Yeah.
Is that mainly what this is on? I saw that there was some weak demand
They always
there.
talk. Again, the auction comes off, and they auction at noon our time, and they look at how many non-competitive bids, which are people
Right.
like, I just want to buy the issuance.
Regardless
I don't care what
of
I
the
pay.
yield.
But the bulk of it is taken down by dealers who put bids in, and it's how many bids they have to go through. Is there what they call a tail? In other words, they had to go through multiple bids to sell it. And I think this
Their
one,
whole block, right? Yeah.
right, rather than everybody paying through the estimated price,
Yep.
which is called, they stopped through. In other words, there was so much demand, they could sell. They got a better price for them. This was not the case. I think, again, when you look at 5 years, if they pay through a lot on a 30-year, that's bad, or a 10-year. 5 years or 7 years, not so much, and they don't sell as much of that. So I think any one auction doesn't tell us. There's always this thing. There's this huge amount of borrowing they're going to have to do coming out. Yeah, we're at 6% debt to GDP ratio. It would be great if we were back at 4. We're probably going to 7 if they pass this tax bill.
Uh-oh.
What does that mean? They're going to have to borrow more. Who's going to step up and buy it? Well, there's people at what price level. So
Gotcha.
I think there's positioning around that auction, and
Yeah.
if it doesn't work out, the hedgers take it off. But that noise is long gone. So
Gotcha.
I don't.
So
put
it's more
too
just
much-
a reading the scene.
Yeah,
and
I
selling
don't put
bonds.
too much credence into. We probably got a reflexive move in the 10s off of that auction announcement whenever they put that out after 12
Yeah.
o'clock. But it's really the quarterly refundings that are a little bit bigger. But again, that is an opportunity for movement. Don't guess that, well, they're going to have to borrow all this money, so all these auctions are going to be horrible. The market's going to tell you that. And the fact that what will be interesting is if this thought about borrowing more money is real, if we're below 112 or 110 in the bonds, then there's some thought. And now we're going through the whole dynamic. We're getting to levels we haven't seen in a long time. The market will get more elastic. IV rank and volatility will expand. And then you're going to have to be more mindful of the ranges you trade, just like we talked about here.
Right.
So same thing there too. It's
Interesting.
marching towards the downside. It doesn't make it. Again, if we were in, this Ukraine thing isn't getting good, and the Houthis are now shooting missiles at Israel this morning, and that's why gold's up $45. What about the flight to quality U.S. bonds? That's not working out.
Right.
So you don't argue that, well, the bond should do this. You don't
Yeah.
ever go down that road. Just go down the road of, well, it's not, other things are driving it right now. And I think when we look at yen, we know what's driving it right now, which is U.S. rates. So if we see U.S. rates go, if bonds go through one where are we right now? 115.10 in the June's, down a full point. If we see 114 or 113.5, that's near those lows again.
Gotcha.
I wouldn't be surprised if we see dollar yen back to 155.
Interesting.
So we'll see.
Speaking of momentum in bonds, do you want to get back into
Yes,
the slides?
let's do that because
Let's go over to
those
the
slides were
slides.
great. And we're talking, again, Glenn's put together some great content around indicators. And depending on the trader you talk to, they're all useless. They're all you should be open to looking at what works for you as support for your risk management and trading style, whether it's flipping trades every 5 minutes, or I'm a swing trader where I trade trades for multiple days, or I'm a long-term strategic trader. All of these are indicators and moving averages we talked about yesterday. They're all tools to help you better make disciplined decision-making. What they shouldn't be is
A crutch.
they shouldn't be tool. And this is where I've seen technical analysis go wrong, when it's a tool to obfuscate the decision making away from the trader and to the line. Well, the line says the market should be. When you're doing that, you've handed over your decision making to a line. Don't do that. But these are great, and let's go through some of these because it was a great walkthrough.
Let's take it from the top. So top momentum indicators for Forex trading, as you touched on, indicators very popular for Forex trading for a handful of reasons. As we compare it to other asset classes, Forex stands out because of its 24-hour market flow, first and foremost. So all of these momentum indicators are really just mathematical calculations to try and analyze an asset's price movement, the speed of it, and if that speed is increasing, decreasing, along with the magnitude. So really getting a gauge on how markets are reacting. And this is important because when you have an asset that trades 24 hours, you have no gaps, and stocks can be subject to a lot of gaps just because of the U.S. trading session, whereas Forex you get to access them 24/5, and that creates prints and smooth moves that a lot of these indicators can track better. Secondly, institutional dominance. You have a lot of big players in this space, as Pete, you know best, but you have a lot of people using these products, these rates, for real reasons, a lot more than a retail speculation, and bigger than one company. It's global institutions, countries, and companies hedging their risks, and perhaps needing to step in when things start to move, engage more when things start to move, and that can lead to more persistent trends as prices react. And lastly here, highly correlated markets. Here we're looking at all dollar pairs, a lot to look at. If you don't have the great memory of the great Tom Sosnoff, then this is a lot to look at, and finding potential opportunities based on something you've put together with a momentum indicator just to check it out when something is signaling you can remove a lot of the noise here across highly correlated countries' currencies like the euro and the pound, Australian dollar, New Zealand dollar. So that's the backdrop, right?
Yeah. Again, all we're doing is, and charts are great tools to historically see where prices have been. It's no necessary prediction of where prices are going. We know markets price efficiently. But when we talk about ranges and uncertainty and participants coming in at new ranges, that's all great. And these indicators all help you determine what market structure looks like. They don't help you make decisions for you,
right?
But they help you make better decisions. And again, you can put enough indicators on there to paralyze yourself.
Definitely.
That's not what you want to do. But this is a good exercise. And for the reasons you highlighted is that, again, when you have 12 hours of the day, no data, it can look a little hinky.
Right.
Here you've got a continuous stream of efficiently priced markets. And that, if you're going to use some of these things, probably lends himself best to it. So go through what we've got.
Yeah, so first we've got moving averages. These just, exactly as they sound, average the prices over a period of time. And you can do this over multiple time periods. And that's really what a lot of people use, is reacting to how different time periods averages relate to each other. So here we're looking at daily chart, and we have the 20-day, 50-day, and 200-day moving averages. And you can see when these lines start to cross, that can give you more of a clearer sense of the direction these prices have traveled, and potentially opportunities for where they'll travel in the future. So a very popular one is the cross between the 50-day and the 200-day, as we see on the left here. That this one, the 50-day, moving below the 200-day, would speak to continued downward momentum. And then you have some other examples here with other lines crossing that would speak to momentum to the upside. So this one is, again, goes back to the 24-hour. I think is the biggest Forex advantage here, is because you're getting no real blips in prices, and so those averages are as continuous as they probably could be.
Absolutely. And what Glenn is saying is the 50-day is more reactive. It will move up and down. And the 200-day obviously has 200 days of data in it. It moves slower. So it is taking a shorter time frame and a longer time frame and seeing if you can glean a crossover is, again, a shorter term to a longer term crossover. Some technicians look at as an indicator of a market running out of steam, not just the market crossing the line,
Interesting.
but the two lines crossing one another. So one way to look at momentum.
Yeah. Next up, we've got the relative strength index. This one's an interesting one that takes into account average gains and average losses,
Right.
and kind of weights them and puts it on a completely separate graph here with the popular boundaries. You can change this as you see fit, but of 70 and 30 on a 0 to 100 scale. And once it crosses those thresholds, can tend to mean that an asset is possibly overbought or oversold.
Right.
And this one, the Forex advantage here would be that over a long period of time, a lot of these markets are mean reverting.
Right.
And so when you say something is overbought in a stock, you could be right about that, or everything could be over the long term going up and to the right. Here, you tend to see that less historically. Doesn't mean that it has to come back in a day or anything, anything remotely like that.
You hit on a key piece of what struggles with. I don't use the RSI. A lot of guys do, though, but it will sit down there longer than you want.
Right.
It's like, okay, why is it's cheap? Why is it reacting? And it can sit there longer than you think. Good, excellent point.
Because even though we see just blips past these 70 and 30 thresholds,
Right.
you could see the price hover around there, or even move past it for long periods of time.
Yep.
But definitely a popular indicator. And the last one to call out here, the stochastic oscillator.
Okay, you've got me.
Yeah, the name alone, we've got this one. And this one, to your last point, maybe gives you a little second data point to compare, maybe pause and wait for second confirmation, because here we've got two lines. We've got a fast oscillator and a slow oscillator. And so the non-dotted line is the fast one, and the dotted line is the slow one. And so looking for confirmation of both of those, similar to the RSI, above the thresholds of, in this case, 80 and below 20 to identify shifts in momentum. And this one, I think, is most popular. Perhaps you could think of it within the sessions of the world, within London, Asia, and the U.S., because this one tends to work better in range-bound markets.
Yes.
When things aren't exactly moving through highs.
Right.
And will just remain in that range, helping to identify perhaps as close as you could get to the bottoms and the top within the range.
Yeah, and you can see going back, this week on a short-term basis, there was some interesting correlated points there for both, the Monday low and the rally up on Tuesday. But you go past that and you can see a lot of noise. So you've got to balance. These are tools in decision making. Try things out. And find what you feel comfortable with that adds value. Don't fight them, though. Don't let your mechanics come apart because, the RSI says it's oversold. It's got to bounce. So I'm going to now tag on another 30 pips of risk to my trade. Don't do that. Use them. But I think anything that gives you insight and that gives you consistency and supports your decision making are great things. And as you can see on the platform, you've got between 50 and 100 studies to choose from.
A lot.
I can't tell you what half of them are, but there is. I mean, there's everything from Fibonacci levels to all the things you can do, and I think they become powerful tools. So this is a great walkthrough of ways new traders come. What do I look at? Where do I start? How do I? And we talk about risk management. We've got a great Learn Center about foundational. How do I get into FX? Explaining product, movement, stuff like that. These are all additional pieces. There's no race. I know we've all seen on CNBC the guy who's got 800 lines on his chart. Don't go there. Find what works for you. Try some things out, but don't give away your decision making to the line. Great piece of content, Glenn. Thanks so much for bringing it.
Yeah, of course.
All right, take us out, my friend.
All right, thanks for watching Forex Focus. Up next, we've got Tom, Tony, and Vanetta. Thanks, guys.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at tastytrade. Make your move, genius. tastytrade.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. crypto. We got it. We get it.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. We made it to Friday, and look at this little upgrade. My favorite, Mr. Pete Mulmat, in the most immaculate sweater of all time.
Had to bring back the sweater. Vanetta, how are you? It's so great to be on air with you again. It's been a long time.
We talked about this in the hallway. I was like, Pete, I hope you are on the show. Pete's like, I don't know what the hell's going on. Tom is a terrible communicator.
I did not, Tom is masterful in his communication and kindness. So I have to display the appropriate benevolent responses.
Masterful at my kindness, said nobody ever.
Yeah.
Nor my communication skills. But no, I was waiting. I just forgot to text Vanetta last night, but I was waiting for other, yeah, it's very busy last night. I had to switch back and forth between different games,
Okay, now,
No, I asked you 10
didn't actually
times
use
yesterday.
Did you use a TV like us people use, or
Not really.
you people?
Not really.
Okay.
You people.
You people. I love that. He's going through that. You people who watch shows waste time sitting on couches yesterday, and I'm like. And he's getting everything from TikTok. It's not like you're running a marathon while watching TikTok.
I wasn't getting anything from TikTok.
Right. It's not like you're finding a new cure for cancer.
No, multitasking out there watching TikTok.
I was working. No, I wasn't watching TikTok. I was working, and I had the NCAA,
You're streaming the games.
Streaming the games in the background, and then I had. It was one of those rare days where Sox win, Cubs win, Bulls win.
Yeah, 8-0 or something in the Sox. It was
8-1. 8-1. 8-1. Yeah, and Tim Anderson
it's the best they've
came
ever.
back.
I was going to say, it's going
It
to
looked
be
like a real baseball team yesterday for about 3 hours. So, and they don't play today, so they can soak in their successes.
So what do you? The win was what? The win bet was 54, I think.
Yeah, 54, one down.
Does that change now?
No, it doesn't.
Okay, I don't think it does either.
No, and the Cubs won last night, and the Bulls won. I think I watched the Bulls highlights like 20 times. I don't know if you watched the.
It was a good Bulls game. Yeah.
I didn't watch. I mean,
they've won 9 of their last 11 games.
I know, but the end of the game, I think I can listen to Stacey King make the call. Stacey King and Adam Amin were calling the game, and it's so funny. You listen to those two guys call the game, and then you go side by side with the Laker guys. So the Laker guys calling the game at the end of the game, because I listened to them both. The Laker guys calling the end of the game just didn't say a word. They just didn't say a word, and Stacey was going nuts.
Yes. No, they had a shot of one of the Laker fans. He's just sitting there like, that didn't just happen.
Yeah.
Just utter sheer. Yeah, Scott was right. It was a good game. He should have gone.
Scott was right. It was not a good game. It was probably the best game ever. Regular.
What did the Cubs do against the D-backs?
They're telling me in production we have footage. We have footage of the last final seconds of the Bulls game. If you want to show it.
Yeah, if you got Stacey King making the call and Adam Amin.
James and John have it. They say so.
All right, let's do it. Let's see it. It's great. For those that missed this, I watched it like 25 times.
Well, that happens with you all. Herder.
This is the last minute.
Giddy, baseline, blocking foul and one.
Yeah, this is when they came back. John, fast forward just a little bit.
Well, it's Instagram. It's hard
game now.
Okay.
Herder, Giddy.
That's why you got to use TikTok.
Back to Kevin for free.
Give me the hot sauce, Kevin Herder.
And not be on the couch while you're using it.
Boy, he's switching up.
Vucevic covering Reeves.
This was great.
Reeves got it.
They got to stay away from that. Adam
Bulls have to hurry. Get it into Vucevic. Quick pass to Williams. Big shot for three. Good. 2-point game. 9.8 left.
This is where LeBron screwed up.
The steal. Right for the lead. Yeah!
Big time plays. Big time plays. Kobe waits. Sub-Zero. Bang.
What a wild sequence. And the cardiac. Final shot before that. Here's Reeves. Reeves straight to the cup. Lays it in to take the lead.
This is the best.
Bulls are out of timeouts. 2 seconds left. Giddy for the win. Go!
I've seen you make that shot before.
Believe this. Elizabeth, I'm coming, baby.
You give him the Elizabeth, I'm coming, baby.
Oh, boy.
Unbelievable.
Improbable.
Look at that guy's. Yeah, that was the guy's face. Just totally.
I watched that 20 times last night.
I know.
Yeah. But love when Stacey King goes crazy. Big time players make big time plays. Boom.
That was exciting. Wow.
It was. That was the best regular season game I think I've, end of a regular season game. Do you know that that's the longest game-winning shot in Bulls history?
Really? I wouldn't have thought that. I thought that somebody would have chucked a
That's
flyer.
the longest game-winning shot in Bulls history.
Very nice.
How sad are you that you weren't there last night? That UC was rocking.
It was, but I'm not that sad. They were down by 13 points with like 5 minutes to go, and they were down by 6 with like 12 seconds to go.
Now, are you down by 25 minutes left? You're leaving early?
I don't usually leave early.
Okay.
Depends where my seats are.
Oh, that's false. Yes, you do.
No, I don't usually leave early. I'm like a stay to the end of the game guy, but I don't
You
usually.
tell that to Case and the Ice Capades when you made her leave early.
Ice Capades, I leave
A
early.
little different game.
I will leave a baseball game in the 7th inning after the 7th inning stretch sometimes because it's baseball.
Yeah.
And, I can walk home too, and I don't want to stay till 11 o'clock.
To the herd goes, yeah.
Yeah.
Although they've made baseball a lot better now. The clock has definitely made it a much better game.
Yeah, the clock has made it a better game. But I will leave a baseball game after the 7th inning stretch. But I would never leave a Bulls game.
Okay.
That's
Anyway,
exciting. How was the start to the Sweet 16?
It was really good too. And the games were they were a little lopsided, but it was good. The best teams are in it. Like all the favorites are winning. No, I'm just saying sometimes there's like these upsets and all this kind of stuff. This is, all the best teams.
Pete, did you make a bracket?
I didn't because again, we didn't do that on our
He's
side.
an intellectual. He doesn't do that kind of stuff.
Oh, please. No, I didn't. Unfortunately, I didn't get the opportunity to do that. Now, who do you have going through?
I'm out.
Oh, you're out. Okay.
Yeah.
All right.
I had St. John's. I thought they were kind of the Cinderella team.
Right.
Right now, after watching all the teams play, Duke is really good.
Right.
They look really good. But Duke looks probably the best. Florida looks pretty good too. They're like both number 1 seeds.
Right.
So it's hard to say, but there's good teams left.
What about you, Vanetta? You still in it?
I do not gamble, Pete. I take my money and I go to Chipotle or Ulta. I do not spend my money with degenerate gamblers on the trade
I love
desk.
that. Now, which one is 1 and which one is 2 out of that choice?
Ooh, it depends. It depends. But no, Gus and I did interview people about their March Madness knowledge, but I'm not really keeping up with all the teams this year, but I just want everyone to win.
Oh, my God.
She wants everybody.
And my school
everybody
didn't make
gets a
the
trophy.
tournament. My school didn't even make the tournament in a very controversial choice. The Indiana Hoosiers did not get in. The Tar Heels did. I'm still salty about it, but whatever.
I thought Indiana was going to make it, but they didn't. Yeah.
Michigan did, right?
Yes.
Yeah.
Yeah. So
Michigan's still alive.
Right. That's what I thought.
Yeah.
All right, very good.
all right, good times. How about you, Pete? What have you been up to this spring season when you are not working? Are you taking any golf trips or doing anything fun?
No, I wish I was. Actually, we're working on getting the FX product into the Tasty Trade platform, so I'm really excited about that. We've been pushing.
I'm sure your
very
family's
hard.
excited about that.
What's
too.
that?
I'm sure your family's excited.
My wife, I
Is
actually
ecstatic.
make her go through a metal detector when she comes in the house because I think she's had enough of me by now. And the
I'm sure she's ecstatic
the
about
4 a.m. phone calls where it's like I can hear every word you're saying and the dogs are now awake is never a good situation. I mean, my life is good if I can be quiet enough in the morning not to wake my dogs and my wife. Then I got a fair chance of having a good day. But no, she's an absolute saint. Anybody who would stay married to me for 32 years deserves some sort of medal because it is.
And people don't know your wife used to work on the floor, right? That's how you met.
She did.
She's an icon.
She was, at that time there were 3,200 traders on the floor of the CME. 6 of them were women, and she was one of the 6. So youngest of 9, she's tough as nails, but sweet as could be. So, and I think she's watching, so I better be very careful what I say. But no, she's an absolute doll, but very tough. To be down there, you had to be. Yeah, I saw her get into it with some people and definitely get the better at.
You saw her get into it with some guy and then say, I got to marry that woman?
Yes, I got to. I asked her out for months. She wouldn't go out with me. And we finally her boss ended up messing up a trade in the pit. And he came back to me and said, listen, can you bust this trade? And I'm like, I really can't.
Only if she goes out with me.
I can't do that. And I can't do the other side. But if Michelle could go out to lunch with me, maybe we could get that all situated. So, yeah, she wasn't happy when that came back to the desk. But
my God, I love an enemies to lovers romance set in the office place. Oh, I love it.
We went out to lunch and we had a wonderful time. And she again made sure that, because she really didn't know me. It's like, I don't even know who this guy really is. Where am I going with him? So it was fun. We ended up going out to lunch. We sat outside. We played some cards. It was very nice. And 32 years later, it's all worked out. So good stuff.
Oh.
Yeah.
Don't make me cry.
I know. It's so happy.
Romantical.
It's so happy.
Hey, you're going to be happy because we got a great show for you today. A lot of really good stuff headed your way. I am tickled pink that Pete is here. I don't often get the chance to work with him, but Pete is one of my favorite people. So we got a great show for you today. Shout out to Julia for holding it down all week. That was not easy. Just in the trenches with a sassy Tom. But starting you off this week, this Friday at the top of the 8 o'clock hour, we're going to do an options jive, trading gold silver pairs. Pete is very, very smart. We call him the metals man. So we're going to talk some gold and silvers pairs at 8 o'clock in options jive. And it is Fast Friday. It's Fast Market. It's Fan Friday. 8:40. Tom and Pete. Will Pete still be in? I don't know what the schedule is.
No, we're going to be doing a switch over to TP if he's alive today.
Okay, so TP is
He hasn't
TBD
confirmed
if he's
that
alive.
he hasn't
we'll
confirmed
be in
he's
for
alive.
Fast Market at 8:40, and this is where viewers write in their trade ideas, or Tom may just do it by himself. Who knows? Then 9 a.m.
We're also taking telephone calls starting at 8:40.
Why are you taking telephone calls starting at 8:40 if Fast Market starts at 8:40?
Because I like when people call in with ideas about their trades too.
Okay, all right. Just way to blow up the schedule. Okay, we're apparently also taking calls
Can't handle,
at a time
you
we've
can't
never taken
handle
calls
the major
before.
change. You can't handle the major change there.
No, that's fine.
Hey.
You do you.
Hey, Batista Jr. Okay, if we change a little thing on the schedule, we'll be fine.
Okay, then 9 a.m. we have a market measures, or maybe Tom's just going to show you his favorite woman that eats a burrito in a car. Who knows? Market measures, 9 a.m. What to expect after a 10% decline, and then live from the trade desk. Are you going to take calls here too, or no?
Probably not, but we'll see.
All right. Well, Scott will be on maybe, unless he's been banned. Tom's just going to ban everyone because he can. And so Scott will be on counting down the top trending tickers over at Tasty Trade, and maybe taking calls, unless Tom issues an executive order banning Scott for life. I don't know.
You're spinning up a lot of drama.
Can I issue executive orders? Because this would be super cool if we could do that. Can I issue?
I mean, you have been all week. You have been issuing random ass production executive orders all week. So
I kind of like that concept. Yeah, if I could issue an executive order, I will.
You're king.
Yeah. You want to get rid of the production department? Anyway, that is our schedule for today. We'll see TBD. But if you want your daily dose, hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. Just in. Today's headline. This just in. Breaking news.
All right, everybody. Today's a fantastic Friday. It is March the 28th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
We're ready.
Can I just say one thing just real fast?
You're going to no matter what.
Yeah, I'm just going to say the difference between the sexes. Men are terrible at getting follow-up details. So TP is having some sort of procedure, and I'm like, oh my God, what happened? Is he going to be okay? Is everything? And I'm like, what's being done? And you're like, I don't know. He just said he was having something done. I didn't ask any follow-up questions. It's like your man will come home and be like, oh, so-and-so is getting a divorce. And you're like, oh my God, what happened? And they're like, I don't know. And you're like, why don't you ask questions?
Why do I want to know?
Ask a follow-up question.
No, stop asking the questions. Yeah, too many words. I can't tell you. I get home and it's like
nobody wants to know.
Yeah.
No, everyone wants to know.
If you ever told a guy that so-and-so is getting divorced, you know what the guys say? They're like, yeah, the same thing my kids once said to us. Why did it take you so long?
Okay. All right. Anyway, let's just do the news. I'm over all of this.
Like, no guy is going to be surprised. Oh man, wow,
what happened? Tell me about it. How you doing?
It's just statistics.
Yeah.
Let's get to the first headline. Hey, all the ways Friday's PCE inflation and spending data.
They were too in love.
That's right.
So they couldn't handle it. It was too much.
No, but it's like they're like, did someone step out?
No, they were just too much in love, and they just couldn't handle it.
Was there a love child?
Well, see, but that's where you don't want to ask that question.
Exactly.
Yes,
I don't want to. You don't want to know, and you don't want to ask that question. So.
All right, well, we got PCE coming out here in like 12 minutes. The Fed's preferred inflation gauge for February may end up looking out of date. What are you guys expecting to happen in 12 minutes or so?
Well, we're long bonds here, so we're hoping the bonds go higher. But if they go lower, because we took some off this morning, but if they go lower, we are going to we're going to buy more.
You've still been leaning against that 115 level. It's a good level to buy.
Yeah. I sold some 115 puts.
Yeah, that's worked really well.
I also sold a bunch of I sold a bunch of strangles 2 days ago. I have not.
You skew them at all, or just keep them neutral?
I skewed them slightly to the upside.
Yeah.
So
that 120's been rock solid. They haven't been able to.
I didn't
spend more
skew
than
them that high.
Yeah. Well, no, you're not.
I sold the 114.5, 119.
Nice.
And I don't know. Let's just see for 1 second. 114.5, 119.
I mean, that range is just been rock solid.
I sold it at 421. I think I sold it at 421. It's 401 right now, so it's already come in.
Yeah.
But
oh wow.
But I want more.
Yeah.
Yeah.
Yeah. I just I don't see the case. But it's so funny. If Fed's favored gauge or not, these are so random and like they are so lagged. I think the most interesting piece of this is not whether it's high or low. It's just the market reaction we get and what, as a trader, you do with it. So I don't think this tells me anything. It doesn't help me know the health of the economy. It just gives me an opportunity to let the algos drive and push to levels that may be interesting.
That's very well said, Pete. Hey, let's get to currencies here. De-dollarization could speed up with U.S. isolationist policies if the Fed Reserve's, which is a bedrock of global financial stability, were to withhold dollar funding to allies during times of stress. The world could greatly reduce its reliance on the currency, creating a double-edged sword. Do you think this could come to fruition? And let's talk about currencies as we end the week.
I mean, we're probably at the greatest risk ever of this happening right now, only because of the current administration's isolationist policies. But I still think it's a long way away. I don't think it's but 10 years ago or 20 years ago, it would have been almost impossible.
Right.
In this current environment, the way all of our ex-allies who are now our enemies are lining up against us, I worry that this could happen quite quickly. And it would be a huge blow to the liquidity in our marketplace.
Yes, absolutely. And
It's
not
one of
just
it's a risk.
Yeah, just not in the currency trade, liquidity throughout all the product set.
I don't think it's going to happen, but it's a risk that I don't think the current administration understands.
Right.
Because they don't
What
trade.
are you guys doing in the euro or the yen or the pound or Canada this morning?
We're long them all.
Okay.
So I'm betting against
Gotta
the
collect them
dollar.
all.
I'm betting against the dollar, but has nothing to do with these policies. It has to do with just the fact that the dollar's been up for 15 straight years, and I think it's going to,
Right. Even with the bounce from 102 to 108, it's cheap. Yen still at 150 in spot terms, wherever we are in futures, high. So
I think you just have to lean long.
Yeah.
Hey, I am super happy that Pete is here, but I did pull this story. This is a very Julia story. But who would have thought an emerging leader in the quantum computing space, JP Morgan? Yes, that JP Morgan. They just beat big tech to a quantum breakthrough. They were able, in collaboration with Oak Ridge National Labs and Argonne Laboratory and the University of Texas at Austin, hook 'em horns, to demonstrate how a quantum computer could generate certified randomness. So I didn't know that certified randomness was actually really hard to do, but this could have implications from financial firms for trading and other things, and JP Morgan now getting in on the quantum computing.
Yeah, it sounds like JP Morgan's writing their own headlines.
Yeah, what is what is the function of certified randomness?
I don't know.
Well, right, that's what I
versus
didn't.
Uncertified randomness.
I like the term certified randomness, but I also think that JP Morgan's PR team just wrote their own headline.
Yes.
Yeah. So thank you very much.
I just don't know what that means.
I guess it's really hard for a computer to actually generate. So you pull like numbered balls out of a machine, or you convert a lava lamp motion into data, and that's the way that real world randomness is generated. But where internet encryption comes in, unpredictability equals security. And some people were saying that the way that they were doing it wasn't actually certified random, that there was some sort of pattern to it. But I don't know. It's again, this is totally Julia's area of expertise. It's above my pay grade. But the banks are going to be the first to kick off earnings. Are you doing anything in JP Morgan?
Not yet. We probably will,
All right.
but not yet.
All right. Hey, I know you guys are going to talk about this later in a market measures segment, or sorry, in an options jive segment, but let's talk about gold. Goldman Sachs increased their year-end forecast to gold, $3,300 an ounce. They did it, boys.
Okay, strike two on gold.
Yeah.
What are you guys doing in gold and silver?
Gold, we're flat to a little bit short, and silver, we have no position.
Pete, are you a gold bull?
No, it put in lifetime highs yesterday, and we did it again last night. We're off a little bit from those highs, but the market will get more elastic. So I don't know where, we've held above 3,000, which was the threshold, and we're well above it. I mean, can we run another $100, $150? Sure. I'm certainly not bullish. I don't think this is a trend to get onto that we're going to. Again, that coupled with the weekend stories about $10,000 gold that inevitably will come out makes me think that at some point there's going to be a pretty sizable correction here. But Yeah, it's so funny that now they're marketing it out. I think.
Do you
this
think
feeds into
it's
the
crazy that gold and copper hit all-time highs in the same week?
Yeah, and copper, and for different reasons. Copper is a lot of tariff talk, and again, we don't produce much domestic copper, so if we need to import copper, it'll be more expensive. They're playing that game. The copper we trade, there's copper in London that's traded.
Yeah.
There's a huge disparity between the two prices because of this tariff stuff disrupting certainty around pricing. I think gold's a different animal here because we've actually seen, it's interesting. Gold moved and then silver moved later and has kind of caught up to it a little bit with $35 silver. But no, I'm not a gold bull, but I'm mindful of stepping too aggressively in front of the train until I see a little bit more exhaustive tape action.
In other news, U.S. natty gas prices climbed 2% yesterday because the output report came out, and there is a decline in daily output, but there is record liquid natural gas flows. What are you doing in natty gas to finish the week?
We're pretty flat here. We just we're pretty flat.
Yeah, 390. I mean, 390 is the middle of the new range.
Yeah.
320 to $4.50.
Yeah.
Middle of the upper end of the range.
We just kind of neutralized our position pre-market. We'll probably make one more adjustment, but yeah, we're pretty flat.
Okay. Let's get to some earnings from last night. Tom, what did you do in Lulu, that voodoo that you do?
Yeah,
you know what? It's weird in Lulu. We sold some front month strangles pretty wide, and they came in 50% yesterday. So we sold them 2 days ago when I thought they had earnings, and they came in 50% yesterday before the number. So I took those off, but I kept my back month strangles on my hold on, I'll tell you. In Lulu. Lulu.
So Lulu off about $35 right now. $37.
Yeah, so I have some April strangles on. Lulu's down about 37. I think the expected move was 40.
Yeah.
So I think it's just inside the expected move, but it's not a good number for them. It's down around $300, closed at 340. Okay. We sold at 270, 420 in April. It's probably a scratch to a small winner to a small loser. I don't know. It's inside. It's
you
right
literally named all of the outcomes.
I know
there,
because it's right at the. It's right at the 303 is down $38, which the expected move was 40. So I don't know if it's going to come in or not. It's like a.
I thought you went out twice the expected move, though. No.
I did.
Oh, okay.
But it's in April, so if you had the March position on expiring today, it would have worked. I took that one off yesterday. That's what I was saying. And
I understand.
I kept the April position on. It's 2 times the expected move. I think we're going to be fine, but I may just have to roll down the calls. Lulu's kind of got wide markets, so we'll see what happens.
If you're interested in the numbers, their earnings and revenue did beat for their fourth quarter expectations, but their 2025 guidance came in below expectation. Revenue for fiscal quarter totaled $3.61 billion. That's a lot of stretchy pants. Real fast before the number comes out, the NVIDIA-backed CoreWeave IPO is supposed to drop today, but CoreWeave is already saying they are downsizing the IPO. They're going to now sell 23.5% less than originally planned, around 37.5 million shares priced at $40 a piece. What does this readjustment mean for IPOs? John, I'm on the next story here. Maybe.
I don't know.
Do you think it's odd, or do companies normally
companies will adjust the IPO based on?
Yeah, I think the range started at like $47. They're down to 38 to 40.
Yeah, they'll adjust based on range. They'll adjust based on interest. It's pretty normal. I think it's pretty standard.
Well, it's exciting. This is one of the biggest IPOs we've had in a while. It's in a very trendy, space, that whole AI buzzy space. So,
well, here we go with
luck.
the number. Bonds did not move. They were up 20. They're up 17 right now. They haven't moved. S&Ps, they were down 11. They're down 15. This is a non-event, Pete.
Yeah. It's nothing.
Give it a second.
No, it would have rubber banded by now, but I don't know if it was. I didn't see what it was.
Okay.
I mean, the bonds literally didn't move.
Or PCE 0.4. So exactly what against
Was exactly what they
unexpected
were-
0.3.
Was that exactly what they were calling for?
Just a skosh higher. But that's why we saw a little tiny sell-off in the bonds.
Yeah, that's kind of. This is so far. It's a non-event. S&P's down 15. They were down 11. So they moved four handles, which is nothing. And the bonds are up 18, which is really not a move at all.
No, the bonds have gave back 6 pips. Dollars slightly higher on that. Gold unmoved, 310, still up $18, $14 off the highs last night.
Yeah.
Platinum up $7. No, not a lot to move from it. So we'll see. It'll be interesting to see if with this out of the way, if the presumption. Now they're pricing this IPO to go today, right? Isn't this getting shipped?
Or we?
Yes, it's supposed to go today.
Okay.
Yes, a
We'll see
very
what happens.
strangely muted move in the bonds. Very strange.
Maybe everyone's on spring break. I don't know.
It seems when you get again, you would have expected down 15, 16 points on the inflective move. You didn't even get that. So there are buyers out there somewhere. Notes too. They're definitely buying the long end more than the short end.
I covered our bond position just now.
We got new highs in the bonds coming through right now.
Yep. I just covered it. And we're going to do the notes right now, see what's going on. Yeah, they came in a little bit. Yeah, we made a few shekels.
Well done.
Shekel.
A shekel or two.
A shekel.
Now, you'll be able to trade shekels when we have Forex on the platform.
Will we be able to trade shekels?
You will be able to trade shekels.
Do you know I've never traded a shekel?
You can trade a shekel. Now, you may not be thrilled with the bid offer spread, but it's there. We're not going to start everybody in the world of shekels. We're going to start them.
I actually didn't even know there was a currency that traded in shekels.
Yeah.
But yeah.
Israeli shekel.
Yeah, Israeli shekel.
We got it.
How many
Turkish lira?
shekels to a dollar?
I couldn't tell you. I'd have to go look.
Okay. I've never traded a shekel.
That's hilarious. That's funny.
Yeah.
Hey, something did get a little bit of a mover yesterday, and that's AppLovin. Shares sank more than 20% yesterday after short-selling firm Muddy Waters went after the company's ad technology. It's not the first time AppLovin has been in the crosshairs of one of these firms. Muddy Waters alleges that AppLovin's ad tactics systematically violate App Store's terms of service through impermissibly extracting user data. Woo.
Yeah, that
APP is the ticker.
Yeah, but it's up $25 this morning.
What a weird world we live in.
Yeah, it was down big yesterday, and it closed at 261. It's up $23. It's 284 this morning.
Do you trade it or no?
I do. I have a short strangle in there, small. It's really hard to make money.
Okay.
Really hard.
Yeah,
I'm determined to make. I am determined to make money in there, but I have not yet.
AMD got another downgrade on tough competition with NVIDIA. They are trying their best, but they're falling further behind NVIDIA in its technological capabilities, a fact that could continue to pressure the stock. That's according to Jefferies, which downgraded the chip maker to hold. Not sure what you're doing in AMD.
We have a long AMD. You know what? We don't have a position on in there.
Oh.
I thought we did.
What's the IV?
I don't know.
21.
We must have taken it off.
Oh. Okay. Yeah, that makes sense. The IV's a little bit low, maybe.
Yeah.
So.
I'm going to take a
keep
look.
it moving.
AMD, it's down $1, but we don't have a position.
Some of the auto stocks got hit hard yesterday on the whole tariff announcement. GM stock got it the worst. General Motors stock falling more than 6 or 7%. After new tariffs were announced on auto imports, GM has more exposure to Mexico in particular. 30% of GM vehicles sold in the U.S. during the first 3 quarters of 2024 were assembled in Canada and Mexico. Not sure if you're doing anything in the automotive sector.
We are. I bought some Ford yesterday on the close.
Or did you?
It's a couple pennies lower. I paid 92 and 96. It's 88 right now. And GM, we sold some puts in GM.
Yeah, you got decent IV rank at 65.
Yeah, we sold some puts in GM. It's a little bit lower, like 30 cents. So we're going to be down small in there. But I think you got to trade these stocks. I'm never long GM, but I think you have to trade them from the long side here because
Just fading the tariff noise.
you're just fading the tariff noise. You know.
Tesla stock by far had the biggest move upward yesterday of the automotive stocks because they would theoretically be the least impacted by these policies. Doesn't change the fact that their car sales are facing headwinds globally, but in a pure tariff sense, they would not be as affected.
I saw this guy getting interviewed yesterday, and he goes, I don't know who he was. It's just a funny interview that somebody posted on some social media site, and the guy goes, yeah, well, GM, he says to the host, who I don't know who the host was, but on some financial network, and he goes, yeah, but GM's not even an American stock anymore. And she looked at him, she goes, GM's not an American stock?
What? Be so for real. What?
She's like, I think GM is an American stock.
Yeah. Last time we checked.
Yeah. It was really funny.
pretty sure. That's nice. Are you doing anything in Tesla?
Sure. We're short some strangles. Tesla actually sold off hard on the close, so it closed basically unchanged. But now it's up like
$3.
$3 this morning. Yeah. It's every time I buy Tesla, every time I get a little bit long Tesla, it bites me in the butt. So I don't know.
Well, do you want to hear a wild and crazy story? I was like done with the news.
Is this the Canada story, Vanetta?
What?
Is this the Tesla Canada story?
No, this is the Nikola Motor founder, Trevor Milton, was given a full pardon by President Trump, and he says this should end the weaponization of the Department of Justice. Weaponization? Boy, you committed actual crimes. He was sentenced to 4 years in prison, found guilty by a court, multiple counts of fraud.
Those are details, Vanetta. You're getting caught up in the details. It's bigger picture than that.
Dude. And so now he's going to make a documentary about how he's being persecuted by the Department. I was like, boy, you better sit down.
Yeah, well, next time you make a video, don't make a video of a fake truck.
Right.
Anyway, keeping it moving, Rivian, whose owner is not in jail, is spinning out a startup that would be focused on small, lightweight electric vehicles. Not sure what you're doing in Rivian. Poor Rivian.
Nothing.
It's just a dead stock. Okay.
Yeah, it's really hard. I mean, Rivian, Lucid, there's
$11, $12. It doesn't get a bounce. They keep pouring money into it. I mean, they're getting good partners, but they just can't seem to. Every time they try to stage something up to 17, up to 20, just on a IV ranks 25, it's tough. And just buying it, sitting on it because it's cheap doesn't make a lot of sense.
Yeah.
I'm skipping a story here, John. This is interesting because both of you probably have some of these in your house. I'm talking luxury handbags because designer handbags are actually an investment. And would you believe an Hermes Birkin bag has an average annual increase in value of 14.2%? And that, my friends, outperforms the S&P 500. Therefore, your wives are geniuses.
Hey, you want to step on this landmine first, or shall I?
I am not going to step on this landmine, but God knows, I don't know what we have in our closets.
I'm sure you've got a very interesting assortment, as does my
She
beautiful
does not.
wife.
My wife purposely will never, she knows I don't know anything, so she will never say anything, or she won't say anything, and she will never cop to anything. She'll be She's, because she knows
She's smart. She's a diplomat.
She's like, she knows I don't know the difference.
Can I tell you a true story, an honest to God, my heart story? When I first started at Tasty, I was just a working comedian or whatever, trying to give this whole comedy thing a go. And I'd come from, a sales job or whatever. And Tom's wife cleaned out her closet and she was like, Vanetta, what size shoe are you? And I'm like, I'm a 7.5, Miss Lady. And she gave me my first ever, still to this day, luxury. She gave me some beautiful shoes. I have an Yves Saint Laurent handbag. I use it. It's gorgeous. Still have it. I have Manolo Blahniks I will be buried in, and a beautiful pair of Jimmy Choo suede boots with a nice little heel. Ooh. I still have everything wrapped in the dust bags. And I was so grateful. You sell the boxes?
Grateful. You got the boxes?
Yeah. I was so grateful. She didn't have
You're hardcore.
She didn't have to do that. She was so nice. And I'm thankful we are the same shoe size.
I've gotten down to the point where I only wear on-clouds because I don't want to have to deal with the aggravation of laces. So I'm like,
oh, what's an on-cloud?
The shoe, JJ wears them too.
It's a shoe
with no laces.
It's got no laces. It's got it's elastic. You just step into it. So
I call those the
again.
Dad
If my dad wore
ones.
these, they'd have Velcro. So I've now become what I used to make fun of. But you don't have to tie them. I bought a pair of shoes 2 weeks ago, and they looked like they didn't have laces. When they shipped them, they went right back. So the whole shoe thing, I'm fascinated by. I know there's you guys.
Well, anyway, invest in Birkins because it's better than the stock market. Hey, shifting gears to the aviation sector, this is interesting. U.S. airlines were flying high less than 2 months ago on talks of a new golden age, but now travel demand is weakening, and the industry-wide capacity is looking curious. Something that's super interesting is that Air Canada, Delta, and United have all drastically cut flights that are U.S.-Canada flights because bookings have plummeted. Again, this is a self-inflicted wound.
Right.
But how quickly, literally aviation industry was like, oh my God, we're doing great. Things are back. People are traveling. And now they're like, we have concerns.
Well, I have a bunch of friends in Canada that canceled trips to Florida and other places.
Yeah.
They're like, F you guys.
Yeah.
They seriously said, F you, I'm not spending a dime in America.
But that's hurting the small businesses that depend on. No, I get it, though. I mean, I understand why they would not want to spend their dollars here. That's 100% valid. But it has ramifications,
Absolutely. And those, tariffs stay or go, that feeling stays a lot longer. So trying to get them back feeling good about making that decision is not something that
isolationist policies never work.
No,
they're economically disastrous. But America's going to have to find out the hard way, which sucks.
Yeah, and
you get what you pay for.
Yeah, airlines are basically they lease the planes. They're strapped to the cost of fuel. It's not necessarily. I've never been somebody who traded a lot of Delta or American or United. Not that interesting.
Are you guys doing anything in the aviation stocks or even just Boeing, like a UAL,
I'm trading them.
Okay.
I have positions in United right now. Very small positions in American Airlines. I'm short some puts. But in United, we have some strangles and some other things. I guess I'm leaning a little bit long. So.
Okay. All right, we will see what happens. Hey, I'm skipping a story here, John. It's they got one shot. There's one shining moment here, and the plan to save Hooters, yes, national chain Hooters, from bankruptcy. The founders are ending bikini nights, and they're bringing out family nights.
That should do it. That was the problem.
What are we doing?
They sell crab legs at Hooters?
Oh, no. What?
They sell crab legs at Hooters?
That's where you're looking in this photo?
No, see, and honestly, that makes my Arby's roast beef sandwich look appealing versus the crab legs at Hooters.
Yeah, I didn't know you could buy crab legs at Hooters.
All kinds
Hooters
of delicacies.
Get real fancy. I don't know. But poor Hooters, they've shuttered locations. They have a $350 million debt load. They're trying to turn things around. They're calling it the re-Hooterization. No. No.
Who would buy crab legs at Hooters?
I don't.
After they declare bankruptcy.
I don't know how long those had been in the freezer. Yeah.
I can see ordering chicken wings because they fry them, or like fries or onion rings. But crab legs, I don't know about that.
No,
it's
but again,
like the casino, the Oysters Royale or whatever that George ordered at the diner, and it's like
the Hooters Seafood Tower was always really nice. That was great. I love the Seafood Tower there.
I've never been to Hooters.
This is crazy. Peyton Manning's Omaha Productions, great name, we love that here at Tasty, is selling just a 10% stake to the new Patrick Whitesell-led platform, giving his Omaha Productions a valuation of more than $750 million. That is crazy. It produces the Manning cast.
What is an Omaha production?
Well, I'm trying to tell you. They produce the Manning cast. You know, Manning cast, with his brother, and they do sports commentary. It's integrated on ESPN.
Sure.
And so they bought 10% of it, and it's worth $750 million. Good job, Peyton.
Good job, boys.
Good job, boys. One of my favorite stories, finally, in the name, image, likeness era. I love it when college athletes have, quirky names, and then a business finds a synergy there. I don't know if did Maryland win last night? Do you know?
They lost.
Well, Derek Queen signed an endorsement deal with Dairy Queen. Oh, that's awesome. Good for this kiddo. He made the game winner shot in the previous round. The Terp star lands the NIL deal. Of course, it is a natural fit. They lost to Florida. So
yeah,
good for him.
This kid is a stud.
Yeah.
I mean,
yeah.
He's a monster. If I remember, I think he's a freshman.
Oh, that I do not know.
I think he's a freshman. I think he's like 18.
He is freshman center.
Yeah. So he'll go early.
Yeah.
He'll go this year. He's going to be one of the top picks in the draft. I mean, he's skinny, but he's going to gain weight. He's going to be a monster.
Yeah.
Well, he's sponsored by Dairy Queen now, so that's good. He'll gain weight. You just eat a bunch of blizzards and you'll be fine. So finally today, Pete, I don't know if you know this, but every Friday I like to do a segment I like to call Will Tom Eat It? So I look for videos that I think fat traders would enjoy, and then I show them. And then Tom's like, yeah, that looks pretty good. Yeah, I'd eat that. So of course we were talking about yesterday was the start. It was opening day of Major League Baseball. And so with that comes all of the awesome stadium food, whether you are at just our very own Wrigley Field, or if you're at Citi Field, or if you're at Dodger Stadium, home of the winning World Series champion LA Dodgers. Look at this menu. Check this out. Female chef, too. Watch.
Executive Chef Christine Garrett, thanks so much for being here. Your crew is already starting to prep for this, right?
Yeah, we've been here since midnight, 1 a.m., so we're getting ready for the big game today, opening day.
Okay, I have to start with the big slugger because I tease this. This is crazy. This is the first year you've had this.
This is the first year we've had. This is our slugger. This is a 16-inch jalapeno cheddar sausage.
Hot dog.
It weighs a pound, and then it's covered with white cheese sauce, corn relish. You have tortilla strips, crema, and then we're serving it with fries. Definitely shareable item for our fans.
What else do we got here?
In front of us here is an upgrade to last year's home run platter. So this year we changed it up. We're offering you chicken teriyaki, steamed rice. You still have your pot stickers, the spring rolls, and then blister shishito peppers with teriyaki sauce and sweet chili glaze.
That's nice.
Wow, first class here at the stadium. And what else do we have?
The pastrami burger is new this year. It's just your classic pastrami burger, American cheese, pickles, Dijon mustard, lettuce, tomato. I think our fans are going to enjoy that one.
And out front?
Up front, we have the chicken katsu club right in front of the pastrami burger. That's an upgrade from last year. Our katsu sandwich. You're going to have the arugula, the bacon, the avocado spread on the sandwich this year on Texas toast. And then we have our shareable item, which is our barbecue platter, which is an upgrade from last year. It's al pastor marinated ribs, pulled pork, chorizo links, chipotle cornbread, and then a couple of sides as well.
Executive Chef Christine Garrett.
Wow. Okay, which one are you picking?
Oh, I'm going. That's really tough because those look good. I think I'd go chicken katsu. That looked good.
How about you, Pete?
The pot sticker one.
Oh, that looked good too.
Yeah, I like that. The first one, what was the big thing hanging out of it?
That was a sausage.
It was a hot dog.
It was a sausage.
All right, that was.
You know what's funny is that
16-inch hot dog.
So the White Sox have really good food.
Yes, they do.
They have great food at guaranteed rate. But at Wrigley, they just don't step up their game. I don't understand it. I just don't get it.
Yeah.
It's so packed all the time.
Yeah.
They don't care.
No. It's a little bit better than it was, but not much.
Pete, this was a pleasure and a delight. Enjoyed spending time with you. And I would have been there in studio if Tom could just communicate better. But anyways, we're going to take a quick break. And when we come back, Tom and Pete are going to answer viewer emails on a little segment we call Confirm and Send. You're watching Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Welcome back, Mr. Sosnoff. Great to be with you. Interesting day starting to unfold a little bit. SPOO's down 22. They continue to soften a little bit. Dow down 118. NASDAQ down 109. Bonds 116.19. Rallying up on the highs. Dollar a little bit softer. Euro, yen, all rallying a little bit. Gold still 331.15. So holding on to the bulk of the gains yesterday and kind of extending on them a little bit. What else do we have? Notes higher too. Bitcoin softer though. We're seeing a little bit of selling in Bitcoin come through, almost $2,000 off. 85.45 up front, if my quotes are right. What do you make of the Bitcoin? What are your thoughts on Bitcoin right here?
I think with all the news that's come out, it's surprisingly soft. Surprisingly soft. I don't know. I think it probably goes back into the mid 70s. I just don't know why anybody's rushing to buy it right now. That's all. Anyway, we got to rush here. So confirm and send. These are emails that came into us overnight. We got blasted with them. And I'm flying solo today, so be kind email-wise. It's March 28th. It's Friday, March 28th. The month doesn't end until Monday, so we'll see. Numbers out this morning, like Pete said. Pete's sitting in for the bat. The bat will be back on Monday. And we have Pete sitting in now. Then we have TP sitting in at 9. So thank you, guys. All right, first question. What do you guys mean by trade the market that's in front of you?
I think it's take the opportunity that's presented, the market's price efficiently. And again, I've heard something, this should be, whenever you start a sentence about a market, this should be, the markets are perfectly priced for this particular moment at this particular point in time.
What I think what I've always thought this means, trade the market that's in front of you, is something that we would say to somebody where they say, you know what, I'm really bullish, or I'm really bearish, or I really think this is going to happen. And what we always say is, listen, you have no idea what's going to happen. Just trade the market that's in front of you.
Right.
You know, it's kind of like you know, they in baseball, it's almost like, you know, don't overthink it. You got to hit what's thrown at you.
Right.
And so that's what we mean by trade the market that's in front of you. Just, you know, you see what's happening and then act on what's currently happening. That's all that means. Let's go next slide. I know your focus is on trading options, but do you hold stocks too? How about you, Pete? Do you hold stocks?
I do. I hold stocks, but I use stocks as a bias, and then I use options wrapped around both sides of them. They add alpha. Now I hold a lot more outright futures than I do options on futures. A little bit different than what you guys do. I will get more directional on my futures trading, and I think that just comes from, you know, for the first 25 years of my career, unless you picked a direction, you didn't get to play because there were no options. So yeah, I hold some stocks and usually hold an options position wrapped around them.
I absolutely hold some stocks. You know, now it's not I would say that 99% or 98% of between futures options and options, that's 98 or 99% of my trading. But I hold stocks. You know, I hold stocks like the company, our own company, other companies that I just like, and I mean, but these are things that I don't really think much about it. You know, like it's just things like I'll hold some Bitcoin, for example.
Right.
You know, I'll hold some physical metals. I'll hold a few things that I don't scalp. All my trading.
I think you just summed it up there. You're not looking to actively manage those pieces.
Yeah, I'm not a passive investor.
No.
But I do hold a few stocks, and I do buy stocks. Yeah, yesterday I bought some Ford. I was messing around. I bought some other stocks yesterday. I can't remember which ones I bought, but I'll mess around with some stocks.
Well, and you look at Ford at $9. Selling the puts doesn't get you much. You're certainly not going to go buy the calls. The stocks are where you're going to go.
I was just playing some tariff crap. You know, like who knows? We'll see what happens. But yeah, I do hold stocks, and I like buying stocks. Let's go next slide. I like buying assets. You know, I like buying stuff. How do you know when you finally figured it out? This is a tough one. I realize it might be a bit subjective, but what markers might I look for to know that I've got it?
It's curious because I think it's a great question, and you need to be honest with yourself. You never figure it out. You get mastery of it, and you get methodology, which gives you success over the long run. And that's what we talk a lot about, is how do we get edge and get mechanics to stay engaged with product. But I think it's very dangerous when you think that I've got it all figured out, because at that point, that's when mechanics tend to break down a little bit, and discipline, and that's where you tend to have a problem. So I'm always mindful of that sense of, yeah, I got this nailed now. I understand it completely.
That's pretty well said. You know, it's funny. Well, we both agree, Pete and I both agree, you're never going to figure out the market. That's not possible.
Right.
Because nobody ever has and nobody ever will. When you finally figure out trading, it's when you prove that you can be consistent, relatively consistent.
Yes.
That means, here's my marker. When you accept responsibility for when you lose or for when you make money.
That responsibility piece is great. I'm not obfuscating it to a line on the chart. I'm not, obfuscating it to, well, the market should be here.
Yeah.
That's absolutely a great point.
Yeah, like I'll sit here and I'll blame Tony for if I lose money on a trade, but I know.
I'm still referred to as Copper Pete because of the copper.
I know it's me. I'll blame Scott too, but I know it's me when I lose money. And then when I make money, I know that's me too. So I don't think you ever figure out markets, but I do think that you can prove concept and you can prove that you understand trade mechanics, optimization, consistency. I do think that you can. That there are definitely certain markers with respect to when you feel confident that you own your decisions with respect to trading. That's kind of when you got it. Let's go to the next slide. I know you're a big fan of adjusting trades, but how do you handle whipsaws?
It's a great question. And I think this goes back to the last question of what's your mechanics? Now, you guys will take a trade inverted. For me, I will go from a strangle to a straddle. I usually don't take that trade inverted. And I know that's not traditional tasty mechanics. I feel like at that point I have the underlying and I'd rather manage it. I know the math tells us that's not a good decision.
Well, sometimes we'll recenter. We recenter a lot.
Right, but that fits for me. It's inevitable if you're going to manage. You are going to get whipsawed. It's just your mechanics around doing it. Again, it's that acceptance of you're never going to do this perfectly all the time. And owning those pieces of, I rolled down and then the market came all the way back. It's just part of the mechanics of what you accept.
There's not a trader anywhere that handles whipsaws well. No. It's just part of the business. There are some times when you make some adjustments and at the end of the day, you're like, wow, those are really good adjustments. I saved my butt a lot of money. And then there's other times when you're like, I had them and I butchered it because they flipped over and went the other way. There is no way of knowing is the bottom line. And my feeling is there are less whipsaws than you think. And so you have to make adjustments. Like whipsaws are a little bit, they're more rare than a continuation intraday. So I feel like you make your adjustments, and when you get whipsawed, you have to handle it because you just deal with it. Because the choice of not adjusting trades to me is way worse than handling whipsaws. So, I don't think there's an easy way to get around this, but I think that's the answer. Let's go to the next slide. Why is today 21 DTE and not tomorrow? Does it really matter if I wait until next week to roll, adjust, or close? Today is 21 DTE to April expiration.
Part of me says that, I bend the rules sometimes and I'll let it go down to 18 or 16. But I do know over the last 8 years, the amount of math that has been done behind this, that is the optimal point to do this, reinforces the concept that you're kind of, again, you're getting out of the mechanics when you let things go.
Yeah, of course. I mean, you can wait till early next week. You can wait till late next week. You don't have to do anything at all. You can, everything's on you. All we present is an optimization research that optimizes the mechanics. The reason we roll at 21 DT is for consistency, okay? Because that way we're consistent. We don't have to deal with exercise. We don't have to deal with assignments. We usually don't have to deal with dividends. We don't have to deal with all the additional gamma risk in the last 3 weeks. And it gets us consistent that we roll always at 21 DT. Like I will roll today. I started rolling actually 2 days ago and I rolled some yesterday and I will roll more today and I'll try to get it all done at some point today. It's It's not like it's not life or death. It's not the difference between making money and not making money. It's about consistency. That's really it. It's just consistency. Let's go to the next slide. And the last one. This person writes, Pete, I have $75,000 and typically have between 40 to 60% invested in equities, options, futures, and crypto. What is a reasonable asset allocation of those underlying products? Would you skew the distribution or would you distribute evenly? So if you took, let's just say 50% of 75, let's just say you took $40,000, which is probably what this person has at use. How would you split that up between equities, options, futures, and crypto if you had $40,000 that you were actually playing with?
I think you'd want to look at it as a function of leverage. And, if you'd say, well, I'm splitting up 10, 10, 10, and 10, you're actually getting a way oversized buy of the leverage products, starting with futures, which are the most leveraged, and getting a large bite of leveraged options. I would think you would want to take that into the equation of how you look to diversify across these products. Obviously, if you have certain biases, you'll be more involved where products live. If you have biases in commodities that aren't efficiently replicated in the stock or ETF world, like USO versus CL, you'll be more futures focused. But I think it becomes a little bit of a function of leverage. An equivalent dollar amount of futures gives you a lot more exposure than equivalent amount of equities at that point. So I think that is part of the equation that I would look at. And where do I want to trade? Where do I want to be balanced and where do I want to be diversified? So I would kind of look at it from that standpoint.
Yeah, this is a question that's got, clearly there's a lot of wiggle room in this question. I can go lots of different directions. And what I mean by that is, I would not distribute evenly. And I usually base things on BPR, which is buying power reduction. Just like Pete said, in equities, you have, 50% leverage. And in futures, you could be up to 94% leverage. Yeah. So it really depends. My breakdown of this, just from the way we trade, is crypto would be the smallest. Yeah. And crypto for me would be just a couple of percent. And then with the remaining, with the remaining $40,000, which is 50% of the total amount that we have, but of that remaining 100%, less than 5% would be crypto. I think on the equity side, it would probably be about 20 or 25%, and on the future side, about 20%, and the option side, about 50%. Yeah. When I build model portfolios for our viewers and for lectures and stuff like that, I'm usually about 20% equities, 20 to 25% futures, 50% options, and the balance could be crypto or something else, or cash, whatever it is. But that's how we distribute. And this is distributing on 50%. So I think that's probably a pretty good breakdown. It's not even, that's for sure.
Right, absolutely not. Yeah, I think you have to take those things into account.
But remember, if you diversify your portfolio, and if you put it into a bunch of different buckets and all these different asset classes, you're reducing your risk significantly.
Absolutely. It talks to the core tenet when we talk about diversification. And you're certainly, crypto assets, I still can't quite figure out how they fit in the mix of what am I protecting or diversifying? But we do know it's an independent occurrence. The way you look at trading dollar is very uncorrelated to almost everything else we trade, equities, bonds, notes too. Same thing there is looking at that. How do we diversify that exposure?
We're going to take a short break. We're going to come back. We got a really fun option job. We're going to do a little pairs trading, gold and silver. S&Ps just rallied 10 points. They're down 17.5, 18 right now. Bonds up 27. They've kind of sat here all morning. The strongest index so far early has been the Russell. The weakest has been the NASDAQ, down 100. The Russell's only down 3. Gold's still up $22, and Bitcoin's down 2,000. That's the big story. The only earnings play is Lulu. It's down the expected move like 30, almost $40.
If you missed the live show, here's our cherry on top weekly recap.
What is going on over there, girl?
His hat was a late entry today. He
girl.
came in, it's all jaunty now. You gotta move more towards your left.
Oh, I hate when that happens.
Your other left.
Like when you can't get your
you
can't get your bangs right. Oh, I hate that.
I know, you know?
I hate that.
What's going on with you? I'm watching you walk. What did you do? Did the corned beef king of Chicago get taken down by his own corned beef?
Looks like it.
Is that what happened?
Looks like
You gave yourself the gout, so you use your phone to take a picture. Like if the print on like a bottle or package is too small, if you take a picture of it, you can make it bigger.
Yeah, I do that all the time.
Do that. My eyes are perfect.
We literally tweeted a photo of you out this morning.
Put that photo up.
Be so for real right now. Oh my God. You can hear them laughing. You can hear them laughing.
Studio, but that's Tom right now. That's my view of Tom. Beautiful. He came in wearing that today.
Wait, what does the back say? Does it have your name on it?
No, I would never wear a shirt. Now, I'm glad you brought that up because only the biggest loser in the world would wear a jersey with their name.
Hey!
There they are.
Hey!
JJ.
Put him up.
Only the biggest loser.
There they go. Scott, what's up, my man? How's Japan?
Scott, you better have not worn a jersey with your name on the back. Nobody wears a jersey with their name on it.
Look how good that looks.
That is so lame. I'm sorry. You can't do that. I'm so embarrassed that JJ is wearing that jersey.
What does it matter to you what someone else wears?
There's a code.
What is the code?
It's all right.
There's a code. In Chicago, if he wears a jersey with his name on it, somebody's gonna throw a beer on him.
Would you like to say hi to Mr. Tom Ricketts?
We're having an argument on air right now, and you got to put it to bed for us. JJ's wearing a jersey with his name on the back, and we're arguing whether or not, according to the guy code, you can wear a jersey to a game with your name on the back if you're not a player.
Mr. Ricketts, sir, my argument was that these beautifully crafted jerseys were a gift from your organization and that it is an honor to wear the jersey with your name on it.
And my argument is no guy in the world should wear a jersey with their name on it and not expect to have a beer.
And I'm trying
not expect to have a beer thrown on them.
I'm trying to stay out of it so I get one of those jerseys one day.
I think it's okay.
Yeah!
I've gotten jerseys. I think it's okay. If you're a big Cubs fan and you go to a lot of Cubs games, having a jersey with your name on it is 100% fine.
There you go.
Did you see Ricketts after we talked to him?
Yeah.
We asked him if he thought it was okay if you wore a jersey with your name on.
I did see that. He said yes.
He said he would never do it, but you know.
No, he did not. He said yes.
I think it's okay.
Yeah!
Okay, revisionist history. It's recorded. I saw it.
Get the full scoop by checking out the archives at tastylive.com.
It's Option Jive.
Option Jive, Pete. I'm Tom Sosnoff. I'm here with Pete Momat. Pete's sitting in for the Bat, who'll be back on Monday. He's on vacation. He's gone fishing, literally.
Yeah.
And he's out somewhere in the, I don't know what.
In the Gulf of America.
Gulf of America, yes. Yes. Actually, I don't know if he's probably in a canal somewhere. Like, you know.
He's right by. I mean, there's great fishing in the bays, but he's right by the ocean. So I know he's out there. Yeah.
Yeah, I don't do fishing.
You don't do, is it a patience thing or you just have no interest in being on the water?
I have no interest in being in a boat on the water.
Really?
I mean, I don't mind going on a boat as long as I'm really close to shore. It's not like I'm scared of boats or anything like that. I don't really care. Like, it's not my thing.
You don't enjoy the
last summer, Corinne and I went to Croatia and we took the boat up and down the coastline, you know,
right.
Like, you know, so that was fun. But we were always just stopping, you know.
Right.
Like, we weren't very far from the, you know.
And it was like a vehicle to get you to place to see.
Yeah, it was a nice vehicle to get us place to place.
Okay.
And that was kind of cool. But I don't really need to go out fishing.
See, I like that. I love being out on the water.
Yeah. I mean, Tony does too.
Yeah.
I'm a land shark. So I'm much happier.
You are a land. That you are.
I'm much happier on some kind of a beach chair or beach, you know, one of those things you lie down on, and under a tent with my computer or book or whatever, and
the ocean 30 feet away.
Exactly.
There you go.
And any kind of possible wherever I get away to this summer, hopefully we'll get away. I just want to make sure I can just order some food, and lie there and do absolutely nothing. I don't need to go.
Yeah, you never
need to go
do nothing.
sightseeing.
I cannot I honestly, I can't envision you. I know the setting. We
don't do good.
Yeah.
I don't do good on vacation.
I can't see you sitting in a lounge chair without your laptop, without your iPad, without.
No, but I'm very happy in that environment. Like my wife, on the other hand, she can't handle it. She's like, she's got to be somewhere.
Does she want to go?
Yeah, she likes to go.
Yeah.
She wants to go hiking. She wants to go shopping. She wants to go walking around, checking out stuff. I don't want to do that.
Yeah. Well, Michelle, she's, again, my wife doesn't swim, so she's not a fan of the boat at all. She loves the beach, though.
She can swim.
No, she can't swim.
She can't swim.
She can't swim. So our first date was actually on a boat, which, again, I was like, what's the big deal?
She never learned?
She never learned. She grew up, where she grew up, they just didn't swim. And she's an incredible athlete. Thank God, because
everybody swims.
My boys are good athletes, and they got them all from her, not from me. Yeah. But she doesn't swim. So the idea of getting on a boat is absolutely, unless it's 600 feet long, is of no interest to her whatsoever.
Yeah. Oh, I can see that.
Yeah, but she.
And let me tell you something. Getting on a boat with the Batistas would be less interest. It's a dangerous boat. God knows where he scarfed that boat up from.
I've actually seen his boat.
Probably fell off the back of a truck somewhere.
It's a nice boat. He's got a good boat.
Anyway,
for fishing.
Trading gold and silver pairs because we got to get going here. S&P's just rallied again, another 10 handles. S&P's only down 8 right now, 8 or 9, and NASDAQ just rallied 50 handles. So
yeah, dollar is getting softer. Euro up, yen up, sterling up. Everything is coming in.
They're going to crush premium this morning.
Right.
I just bought back all my bond puts and my bond strangles. So I think that's just a precursor of what's about to happen. S&P volatility is actually up pre-market, but I don't think it stays up. Trading gold and silver pairs. John, let's see what we got here. Gold surpassed the $3,000 an ounce. It's actually surpassed $3,100 an ounce this morning. Threshold for the first time. Silver will reaching multi-year highs. Still trades well below its all-time record. Let's go to the next slide. Gold has had a crazy move. Gold and silver prices typically move together, showing a strong 0.8 correlation. Remember that. The highest correlation you can have is 1.0. So 0.8 is very high. Those are considered significant. However, lately these metals have been moving in different directions a little more often. Let's go to the next slide. This increasing price disconnection represents great trading opportunities, or let's just say I don't like to use the word great, so let's say trading opportunities in gold and silver pairs. It could be a price extreme, but nobody knows. Traders commonly use gold-silver ratio analysis to identify discrepancies between these correlated assets. I happen to trade this ratio a lot.
Right.
Let's go to the next slide. Recently, gold-silver ratio hit 92. It spiked to 92. Near its highest level outside of the 2020 spike. This ratio has only been this high about 2.5% of the time in the last 20 years.
Yeah, you go back 30, 40 years, the average.
Where is this ratio today?
52, 88.5 right now.
Oh, so it's dropped a lot.
Just from the 92, it's dropped a little bit because silver has kind of staged. Gold, again, everybody's focusing on this $125 move above 3,000.
Okay.
Silver's put in a good $1.50. So that will, again, so what the ratio is just telling you is how many ounces of silver does it take to buy 1 ounce of gold? So we're trying to take something that's priced at $35, something that's priced at $3,100. How do I look at it in context?
How many 3,100s can you fit into 30? How many?
35.
$35 can you fit into 3,100? And the answer is 88.
That's right.
I sold it at 89.70 and I bought it back at 89.20, which is actually a pretty good trade.
Yeah.
Because it moves all over the place. But now the average is 70. It's down to, like Pete said, 88 and change right now. Okay. Let's go to the next slide. Just pointing it out. For contrarian traders who expect the gold silver gap to narrow, pairs trading is an interesting strategy. The approach involves simultaneously selling gold futures and buying silver futures based on IV-adjusted notional values as of yesterday.
Right.
These futures can be paired at a 1-to-1 ratio.
And these are big. This is a big contract, though. The full silver, full gold. The IV adjustment is so important here because silver IV is appreciated. We're not looking at 2 or 3 percentage point. We're looking at almost twice as much IV in silver. This is why the IV notionally adjustment is really important to get what you want out of this pair. There's nothing more frustrating than the pair moving in the direction you want and your weightings being off and you not getting paid on it. So it's important to keep that in context.
Exactly. And what our research team did here was these are the big contracts,
right,
and they showed you the price of the contract and the notional value, the implied volatility, and then they multiplied everything out, and you get an IV adjusted notional that's almost exactly the same. That's why this ratio is 1-to-1. Now, if you do the micros, which is /MGC and /SIL, it's 1/10 the size.
The silver is one fifth the size. So the silver is
1/5 the size.
This big silver contract is 5,000 ounces. SIL is 1,000 ounces.
Oh.
So it's the one where they broke the mold of 1/10. So what we're going to actually do is if we use SIL, we're going to use 2 MGC because we want to notionally size that up. So SIL, 1/5 the size of the big, so 1,000 ounces of silver instead of 5,000 ounces, where MGC is 10 ounces instead of 100 ounces. So to keep the ratios at a fifth the size, we're going to use 1/5 or the SIL contract, 1/5 of the 5,000 ounces with an SIL, and the equivalent would be 1/5 of the 100 ounces, which is 2 MGC.
Oh, I messed that up. That's probably why I made money or didn't make as much money. I got to think about this. Because I was short. Yeah, it's probably why I didn't make as much money because you're saying I should have been short too.
You should have been long a little bit more. You should have been. No, you actually saved yourself because if you had hedged it right, you would have been short an extra gold contract,
right,
which would have bitten you. So
right,
it actually let you make a little bit more. And this is one of the ways you can kind of.
Yeah, we got lucky. What am I saying? Yeah.
Yeah, you could tweak bias by your hedge ratio, but a true IV adjusted notional would be 2-to-1.
This is interesting. So the big contract is 1-to-1, and the small contract is 2-to-1.
Right.
Got it. Let's
2 MGC to 1 SIL.
Yep. For traders who find GC and SI futures too expensive,
right,
there are less costly alternatives, which include the smaller size MGC and SIL, and then there's highly liquid ETFs, which include GLD and SLV, which can be traded at a 1-to-5 ratio using the same calculation.
Right.
Got it. That's why that ratio's that. And there you can see the contract size. This is before they multiplied it, the 5 by 1. But you multiply 826 by 5, and you get just over 4,000, 4,100, which makes it exactly perfect. So it's 1-to-5.
Right. And what do you?
I don't use stock because it's too capital inefficient.
Right. Would you ever consider doing a cross-product strangle where you would sell gold calls and sell the equivalent notional of silver puts? You're adding another variable in there.
We've certainly done that before.
Yeah.
I find it only works if you stay in a narrow range.
Yeah.
Because once you get outside that range, you lose your deltas.
Right. Yeah. Right. And that's the challenge, is to keep the ratio intact.
Yeah. It's a challenge.
Yeah.
Let's go to the next slide. So some of the takeaways here. And I currently do not have this position on. I'm actually just short. I'm naked short gold here. That's all I have on. Because I didn't want to buy silver up here. Gold and silver prices are highly correlated with an average correlation of 0.8. Gold has been relatively overpriced, subjective, compared to silver. The gold-silver ratio reached 92, which exceeds 97.5% of the occurrences in the past 2 decades. And to trade against the elevated gold-silver ratio, traders can buy silver and sell gold futures 1-to-1, or buy silver ETF SLV and sell the gold ETF at a 5-to-1 ratio. Buy 5 shares of SLV, sell 1 share of GLD. It's just not as capital efficient, and it's easier to use the futures.
Right. No, the futures work perfectly for this one. It's, again, when you get into the smaller products, it fits into a lot of people's wheelhouse, and they're easy to manage, and you can manage them 23 hours a day, which is nice. Because we see, again, last night there was between 7 and 8 o'clock at night, we had a $12 out move in gold. Gives you some flexibility both to put stuff on and take stuff off using the futures. So consistently, silver, a semi-precious metal, half of its usage is industrial usage. It tends to, supposedly, the thinking is, follow the economy a little bit more. So silver tends to lag. If the economy's slowing down and we can see the gold-silver ratio expand, I don't put as much credence into that. I kind of like to just trade where the ratio sits.
Perfect. We're going to take a short break, only 2 minutes, and then we're going to come back for the opening bell.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do. Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. We're back. I'm Tom Sosnoff here with Pete Momat. Pete, thank you for sitting in for the bat today.
Loved it.
It's 8:29, and we are about to hit the opening. I'm going to be taking calls starting at 8:40, so if you want to queue them up, 855-238-2789, 855-238-2789. We're going to take calls as we kind of push our way through fast market. And then I got TP coming in the studio at 9 o'clock. Pete's going to stay on for the opening bell with me right here. I don't have a lot to do on the opening. I don't know if you do. I mean, I got some, maybe a little Lulu to cover. We've already covered our bonds this morning. Market's been all over the place. They've been down almost 30. They've been almost unchanged.
Seems like a little bit of a bid coming out of the weeds here as we go into the opening.
I don't know. I can't tell yet.
Yeah.
It feels, Tesla's a little higher, but I don't know if that holds. Most of the other stocks I'm looking at are a little bit lower. Apple's down about $2 pre-market. Amazon's down about $3. They kind of gave up yesterday's little uptick. Well, we don't have to wait much longer, Pete. At 8:30, the bell just went off. It's all good. Let's see.
SPY down 160.
Well, I don't know where Lulu opened, but
Hey, John, let's bring up the chart if we can.
I guess I'm kind of happy that, down 42. It's a pretty big down move.
300. Down $42.
Yeah.
It's right on the edge of the expected move.
And I'm going to tell you right now that based on where I did yesterday, these, the premium did not come in Lulu. Lulu. No premium came in there. So what we're going to do is we're going to roll down our calls in April and try to, oh man, the markets are wide.
I would imagine.
We got ourselves some wide markets. Not pretty. This is the hard part about trading, about not doing the front month when you're trading these earnings plays, that sometimes if you don't trade like right into the front month, you're just.
Yeah, you got $2-3 wide on these.
Oh my God.
Down right now.
Yeah. So what I'm gonna do is I'm gonna widen some of this. I'm gonna put some orders in like way above the market. And
seems like they settle around 300. I imagine those are going to tighten up fairly quickly.
I hope so.
Yeah. Just run through Tesla.
Didn't even accept my order. I don't even know if they're all open.
Tesla down $1.
Yeah.
72.
Yeah. Tesla this morning. Yeah, Tesla was up like $3 pre-market. Right. Looking at different stocks, Tesla down $1, Meta down $4, Apple down $2, Amazon down $4. Yeah, there's a little bit of ugliness.
Yeah. Microsoft down 327, Google.
Yeah.
Down $1.45. Nvidia unchanged.
Biggest losers.
60 cents lower.
Biggest losers for me this morning. We did a segment earlier on Whipsaw. And the biggest losers for me are the stocks that I'm getting whipsawed on.
Yeah.
Like, just as an example, it would probably be like Netflix.
Yeah.
Netflix is my whipsaw buddy.
Yeah, that's always been painful.
Netflix?
Netflix, coming out.
The markets are like $2 wide in there. So there's nothing, there's nothing you can do. You got to close your eyes. You got to grin and hope you get lucky.
Something in the middle. Yeah, absolutely.
Yeah. Taking a look this morning to see what's in here, what's not good, what's bad,
SPY's getting sold off a little bit. We're down 2 points now on the SPY. Qs.
Yeah. There's nothing.
Actually down 284. So they continue to soften up a little bit.
Yeah,
Russell was holding in.
I don't have anything crazy on this morning, but some of these stocks are, clearly
Russell's still down about 0.2 of a point, holding in a little bit better than everybody else.
The tariff plays are not working out. I will put that on the board.
No, let's take a look at Ford.
Chinese stocks down. Yeah. Actually, you know what? S&P's down 25. Everything's down.
Yeah. FXI.
Yeah.
Coming back just a little bit of ground right now.
Everything's down.
Yeah.
I'm just looking around to see if there's anything that doesn't look that bad. And nope, everything looks pretty bad.
Yeah. It's a little rough right now.
I'm going to roll down. So this is my first roll down is always in the indexes. And I do that just to kind of I do that just to, I don't know, just to.
It starts the process.
It starts the process.
Yeah. And it's usually the thing that will give you the best liquidity on
It's usually the thing that gives me the best peace of mind. Just get out of the,
move the big chunky stuff.
Move the big chunky stuff, exactly.
Absolutely. VIX up 36 points, 1935 on the future side.
Yeah, I was hoping the VIX would give us a little bit of a break today.
Right.
And come in a little bit because I just felt like it's Friday, the number's out already. That's all. I just felt like maybe they throw you a bone.
Bonds are continuing to rally 1622, so it's obviously playing a little bit off the weaker equities as we come in through the opening.
Yeah, that's also well, they've been a little bit higher, but
that's a nice bounce off the low. It's almost 1.5. So
I bought some yesterday at like 15, 19, 15, 18, 15, 19, and they're literally a point higher.
Yeah, SPOO's coming back a little bit already. They were down 25. They're down 20, 57.20.
And that's just that was just in the afternoon.
Somebody was asking about airline stocks. United down 0.5 point. I have no idea.
Airline stocks have gotten annihilated. Like I have a small position on in United, and that stock's down to 73.
Right.
It's
American Airlines down unchanged.
Where's American Airlines trading now? Is it under 11? Or I forgot. I don't remember.
No, 31.96.
No, American Airlines.
That's what I'm saying.
Where is it?
31.96 AA.
No, it's that's Alcoa. AAL.
Sorry, that was Alcoa. 1109. Excuse me.
Yeah, 1109. That makes more sense. Yeah, American is. I mean, these airline stocks have gotten crushed. Like I said, I did buy some Ford yesterday. Let's see where Ford is. It's down 3 cents.
Right.
I can live with that.
Yeah.
And I did buy
GM. You sold some puts in.
I bought some GM yesterday.
Yeah.
I feel like
I think you're playing.
I feel like this tariff thing is a little bit of a joke.
Again,
and I don't see it being sustainable.
The whole. I don't want to say the word. The L day and April 2nd with tariffs. This is continuing to have diminishing long-term impact. It could be destructive to the economy over the long run. But I think, again, when you look at pullbacks like we saw in GM and Ford, those are really interesting opportunities.
I don't understand. I don't think anybody fully understands the impact of tariffs on the economy because it's an unknown thing. I don't think I just sold some more puts in GM. I don't think anybody really understands the impact of tariffs because you can hear arguments for both sides. And some people, are capable of making intelligent arguments for both sides.
Right. Unfair playing field.
Whatever.
Right.
That's not the point. Like, I think everybody's missing the point. The point is not whether or not this is good or bad or whatever. The point everybody's missing is, and this is just my own opinion, is there's an old saying, like, why do you mess with stuff that's working? Like, if it ain't broke, don't fix it. And
you've got an economy that's outperforming the world. You've got a relatively stable
economy that's been outperforming the world for decades.
Right.
You have financial infrastructure that basically draws every dollar from everywhere all around the world.
Right.
Why would you pull a China?
Right. Why would you build barriers to get at that? Yeah.
The argument doesn't make any sense to me is, well, China has tariffs. Well, Canada has tariffs. Well, Mexico has tariffs. Well, all these other countries have tariffs. So we should have tariffs. This is like, to me, it's a child's argument.
Right.
So they have tariffs and we have the greatest economy.
Yeah.
So you want to have tariffs to get even and have a worse economy.
And put
it doesn't make
what you have in peril. Right. Absolutely.
Like the whole thing, the whole premise is, okay, so they have tariffs, but we have the best economy. Like, we have the best market, we have the best economy, we have the most, we can create the most value. So obviously what we're doing is working. So why does it have to be tit for tat? Why does it have to be like, what's the point? Because China has 25% tariffs.
Right.
Yeah, and their economy sucks.
Right.
Canada has tariffs. Yeah, look at their economy. Mexico has tariffs. Look at their economy. Like the whole point is, why do you want to be like somebody that's struggling to be like you?
Right.
When you're already that person.
Right. No, it's you're
nobody's
right.
making that argument, which drives me out of my mind, which is you don't mess with something that's where you already dominate. Now what you're doing is you're creating, not only are you uniting the entire world against you, but you're also creating a problem where there was no problem.
Right.
You know, now if we did not have the strongest economy, then the argument is we have to do something.
Right.
You know, we got to mix.
Why are they beating us consistently, and what do we need to address? Is it pricing?
If I'm China right now, I'm going, how stupid are the Americans for making the same mistake that we made for petty reasons?
Right.
Like it blows my mind.
Yeah.
But, you know, and the market senses. Now, the key here is the market is saying the exact same thing. Again, people aren't paying attention to the market because the market's basically making the exact same statement. So I think, you know, that's something people should consider. Now, why would I sell puts in GM? Because I don't think these tariffs are sustainable.
Right. And they're going to, as much as they hold them out as they're there forever, there's no reason for us to believe that that's the case.
I think Trump is getting really bad advice from the Howard Lutnicks of the world who I don't know, but
not to sound like one-sided. I don't know if he's capable of taking advice and processing it, good or bad.
I don't know either.
That's the problem. People are able to sell him concepts, and he just buys into them. So I don't know.
I just don't like when people disrupt themselves for the purpose for petty reasons, when we should be saying, hey, America has the strongest economy in the world. We dominate over everything. Everybody deals in dollars because it's the only way you can have liquidity. Right. It's the place where all the money has to shovel to.
How many people have tried how many ways to de-dollarize, whether it was the Saudis,
it doesn't matter.
When oil was $100. Nobody's been able to successfully unhook themselves from that economic engine. Why would we give them a route to do so now?
Why give anybody else an opportunity?
Right.
Doesn't make any sense to me. Anyway.
Agreed.
855-238-2789. 855-238-2789. Give me a call. We're going to do the trades coming up next. We're going to go through it really fast. Then I got TP coming on. So we're going to blow this thing up. Let's go.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Excuse me. Welcome back. I'm Tom Sosnoff, flying solo for the next 20 minutes until we bring on TP. But I like doing these fast markets and taking calls. So 855-238-2789, 855-238-2789 if you want to call in about one of the trades. John, let's fire it off. These are trade ideas that came into us from people that are trading all over. The first one's from Harold, it looks like. Iced tea is sick. Yes, that I do have a shirt that says that. SPX, talk about putting money where your mouth is. Going to try to help you collect 50% of the total. SPX guess the market prize that I'll be winning, says the dude. Weekend risk 1-to-1. Weekend risk 1-to-1. $10 wide iron condor for $331. $10 wide iron condor for $331. 5630. He wrote the same $10 wide iron condor, 5630, 5630. That's wrong. But let's do this. What he wants to do is a $10 wide iron condor for the 31st. So we'll go to SPX, we'll go to all expirations, we'll go to March 31st, which is Monday, which is 3 days away. We'll look at the expected move for Monday from where we are right now, and it says $75. So we'll take where we currently are, which is $56.75, and we'll go to the 5,600, and we'll go $10 wide, and then we'll go to the 57.50. So remember, this is a Monday expiration, and we'll go to the 57.60. Let's just take one quick look. 5,600 and 57.50. That should be perfect. $75 on each side. The mid price, $10 wide, is about $4.20 is mid price. I'm going to go down to actually, I think I'm off a little bit. I think it's about $4 and I think it's $4.10 is where it trades. Nothing done yet. Working it at $4.10. Let's go to the next slide. Bummer. Thought I was going to be filled there, Harold. $4.10, nothing done, nothing done. That's a little bit of a bummer. $4.05. I just wanted to get the fill on. So let's go to the next slide. A David C. from South Worcester, Massachusetts. And again, I have not looked at any of these, so it's the first time. All the banks have high FE now because they have earnings coming up. So he wants to sell the May 105, 130 strangle and manage it before earnings. That's Morgan Stanley. Tough stock to trade. It's had a huge rally. Well, actually, it sold off a little bit from its highs. Let's go back. Let's take a look. Since today's 21 DTE, he wants to do the May strangle, which is perfect. We'll do the 105 puts. They're about $1.55 or so. We'll do the 130 calls. They're about very similar. This is a pretty delta neutral, just around 20 on each side. The volume in here is kind of light. So we'll reduce our size a little bit just to see where we can get filled. I'm thinking there you go, 293. So thanks, David. We put the strangle on. We'll adjust for earnings, just like you said. Let's go to the next slide. Anthony from Fresno, California. He just did the trade we just talked about, bearish on gold and the silver pair. The pair is trading at its highest level now. So he wants to buy one SLV and sell one MGC. Now, like Pete said before, this trade is actually 2-to-1 in a perfect world. So let's do it. Let's do it ourselves. / what's gold doing right now? Up $23 first. MGC. /MGC. So we will sell 2 of these filled and /SIL. We will buy 1 of these. Take a fill. Anthony filled. We did it 2 by 1. Bought 1 silver, sold 2 gold. Let's see what happens. Fingers crossed on this one, dude. We used SIL and MGC, which is the micro contracts. That's from Weymouth, Massachusetts. Thanks for writing in. Again, we're taking phone calls, so if anybody wants to call in, 855-238-2789. Iron Condor in Apple. We got a bunch of Apple positions on, Fats. AAPL. Apple is down 11 cents today. It's basically unchanged. Our current position in Apple is we're short the 200 puts and the 245 calls. It's a delta neutral strangle. And let's see what he wants to do. He wants to sell the 20 delta puts, which are, let's call them probably the 2. Oops, sorry, it's in the wrong month. Let's say the 200 puts, and let's say which is the 20 delta calls. 245. It's exactly the position we have on. So I like this position, but we have it on already. We just don't have the wings. So I'm short the 200 puts and the 245 calls, but I have that trade on. It's a naked strangle. I'm not going to buy the wings. And I already have this position on in May at my position limit. So we're just going to leave it on. But great minds think alike. So we'll take it. Let's go to the next slide. Nike. Nike's trading at multi-year lows, says Chris from Salem, Oregon. Multi-year lows. Just buy a covered call or sell the at-the-money puts at the 65 in May. Yeah, Nike's having a little trouble, and it's getting a little uglier today. We do not have a Nike position on. IB ranks around 30. If I wanted to go to May and I wanted to sell the puts, I like selling the nearest out-of-the-money puts. Those would be the 62.5 puts. I would probably sell those around, take a fill, 146. So, Chris, sorry, moving fast today, but I sold the 62.5 puts at 146. You might get 147 for them, because the S&P is just down-ticked. Let's go to the next slide. Daniel from Prescott, Arizona. He's looking at CrowdStrike. We haven't traded this one in a while. He wants to sell a $20 wide iron condor in CrowdStrike. CRWD. Have not traded this. CRWD. Stock's basically unchanged today. In May, he wants to do the 330, 310. Okay. And he wants to do the 420, 440, right? Yes. So you're selling a $9 put, $5 call. Stock is mid-range, let's say, right around mid-range. Maybe I'm just debating whether we neutralize this a little bit more and go 320, 300, because the stock's down a little bit, 420, 440. I'll neutralize a little bit. So it's going to trade just slightly over $6. It's a little slightly different trade than Daniel, slightly different trade than you posted on there. But let's see where we can get filled. I just moved the put strikes over 1. Nothing done yet, working it. This CrowdStrike's not the easiest stock to trade. And mid-price can be all over the freaking place. Like mid-price right now is 630. I'm working it at 605 and nothing done. We're going to keep working it, and we'll go to the next slide in the intro. We'll go to the next slide, and Fred from Naples, Florida says, AVGO, what about the 150, 200 strangle for 550-ish? AVGO. AVGO is an IV rank of 45. The stock's down 80 cents today. That's it. We have no position in May in there. Some of the 150 puts and the 200 calls. To make it about delta neutral, you probably do with the stock down a little bit, the 145, 200, and it's going to trade, because I moved the puts away a little bit, it's going to trade around, well, it's going to trade at 496. I'm going to move prices on CrowdStrike. Still working CrowdStrike, nothing done in there. Thanks, Fred. We got it on. Let's go next slide. Moving quick, I'm neutral, slightly bullish on NVIDIA, says Jack from Philly. Decent implied volatility. What about a Jade Lizard? Sell the 105 puts and the 120.25 call spread for 588 credit. No upside risk, no earnings. Let's take a look. NVDA. NVIDIA basically unchanged today, which is pretty strong given where the market is. Yeah. Okay, let's see what he wants to do here. The stock's been on its butt. He wants to sell the 105 put, and he wants to sell the 120, 125 call spread. This is kind of a classic Jade Lizard. I like to move a little bit further because I like to move just outside the expected range. So I'm going to do the 100 puts and the 120, 125 call spread. And it's going to be just under, it's going to be let's call this about 440 something, maybe 442. I'm thinking. Done. 442. Take a fill. I did the Jade Lizard. I just moved the put strike down one, Jack, because the market's a little ugly today. CrowdStrike, still working it at $6, nothing done. Let's go to the next slide. Chris from Herndon, Virginia, DEC. The stock has touched recently a 52-week low with an IVR of 60. No upcoming earnings. May 105 put with a 95, with an 80% pop. Looks interesting. You know what? I don't trade DEC. Decker's Outdoor. I don't even know if I've ever traded this. Let's take a look. The stock has gotten annihilated. It's been cut in half from 220 to 113. Not pretty in DEC. He wants to sell the 105 put in May. Well, the expected move in May is $11. The stock's 114, so it's close. I would probably go down to the 100 put. There's no volume in here, though, Chris, just so you know. The markets aren't that bad. It's rare that I check open interest, but just to see if anything trades in here, there's a little bit of open interest. So I don't feel too horrible, but you got to be really careful. The 100 puts are 215, 235. Let's do a little price discovery and see if anything trades at 225, which is in the middle. With the stock down today, I'm thinking it might. Yeah, I knew that. I thought they were kind of like fishing for. So we just traded it really small on the 100 puts just to see what they're doing at 225. Now that's the bid, trying to attract a little bit more volume, I'm sure. I'll put another offer in at 235 in a couple of minutes. Let's just see if they take the stock a little bit lower. Let's go to the next slide. I don't hate that trade. It's just not that liquid. Airbnb, Robert K, low price, good IV, sell a skewed strangle, the 115, 150 put call in May. What is this? ABNB. Stock's down 240 today. Obviously a good time to get involved. Stock is literally on its butt after having a nice rally earlier. In May, he wants to sell a skewed strangle. So he wants to sell the 115 put and the 150 call. The 150 calls are only 99 cents. So we're going to change this up a little bit. We're going to do the 145, 110. That's a skewed strangle. The put's twice as much as the call. But I like to move things a little bit away, and the market's weak today. So we'll see. And I'm assuming they're going to buy some premium today because that's just the kind of, Nothing done yet. We're still working it, Robert, from Rockford, Illinois. I'm at 463, nothing done. Gonna try 462. I would think I'd be filled here. Let's go to the next slide. Oh, hold on. Let's see what we can do. I'll go down. Nothing done. Really strange. Oh, there I go. 461, filled to strangle. Market's weak today. They should be buying a little bit of premium up. CrowdStrike, nothing done. Well, I went through that quick. And SPX, we did an SPX Iron Condor for Monday. It's a 3-day Iron Condor, but we'll see what happens. I went $75 wide. We did a strangle in Morgan Stanley that's like a pre-earning strangle. We did the gold silver pair where we sold 2 gold micros, bought 1 silver micro. In Apple, we passed because we already had this position on. In Nike, we sold a naked put at the 62.5 strike. In CrowdStrike, we tried to do an Iron Condor, but we didn't get filled. CrowdStrike used to be pretty liquid. It's not liquid at all right now. It's very liquid for whatever reason. In AVGO, which is liquid, we sold a wide strangle. In NVIDIA, we did a bullish trade. NVIDIA is actually up 23 cents today. And in NVIDIA, we did a Jade Lizard. We sold the 105 puts and the 20-25 call spread. In DEC, which we never usually trade, which is Deckers. I'm not even sure what Deckers is. Are those shoes, shirts, something? I don't know what they are. John, what is Deckers?
Let me check.
Is that a clothing company? I don't know. And then Airbnb, John, Airbnb, we got filled. Yeah, so Airbnb, we sold a strangle. We sold the 110, 145 strangle in Airbnb. It's a slightly skewed upside strangle. So we did 8 out of 10. The Deckers trade was very small because I'm not quite used to it and there's nothing trading in there. The only 2 we didn't get filled on, and the only one we didn't get filled on was CrowdStrike, and I didn't enter Apple because we already had the trade on. That is fast. Fast market was fast today. 8 out of 10. So perfect. Thank you all so much. And we are going to come back in 2 minutes with TP.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body, yada,
face,
yada,
big
yada,
bang, blah,
yada,
blah,
yada,
blah.
yada. Body, yada, 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 yada.
Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bank, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Hello, everybody. We are back. And the nice thing is, look what the cat dragged in.
Or Slimmy the dog.
Or Slimmy the dog.
So I got to tell you, Tom. So I'm listening to your little show for a little bit. It's a little embarrassing that someone and I know you're not from New England. I get it.
What did I say? What did I say wrong?
You can't pronounce the city name Worcester. What did you call it?
Wortham. It wasn't Worcester.
It's Worcester.
It was not Worcester.
And then you had somebody else from Massachusetts from Weymouth. Okay,
Weymouth.
That's a little bit easier for you. I get it. Weymouth is like
it wasn't Worcester. I can tell the difference between Worcester, Massachusetts, and Wortham.
Was it Wortham? Because I thought I saw Worcester on the card.
No, I think you are delirious. I'm going to tell you exactly.
I might be.
Here. That's not the one. There was a different one.
South. Wait, I can't.
No, John, Wortham. There was another one.
All right. Well, this is South Worcester.
That's South Worcester. Sure.
I didn't know there was a South Worcester.
John, There's another one. Wortham. No, go the other way.
Well, there was Weymouth.
Weymouth. Yeah. There's another one. Did you just change that, John?
No, I did not. I'm going to go through every one of them.
John is working against you. Yes, John is playing 3D chess with the slides to make you look bad.
Listen, I know Wortham when I see one, except it's in Texas.
Well, it doesn't matter. My point is, you couldn't pronounce Worcester. Home.
No. I can pronounce Worcester. I don't know why I saw Wortham.
Barely.
Do you know that I've been to Worcester?
Or if you want to be really authentic, the way you pronounce it from when you're from Fitchburg is Worcester. So you're going to make the drive to Worcester, go to the Centrum? That's what you say. You're going to Worcester.
I've been to Worcester, and I've had Worcester sauce. It's really good. I've been to Worcester.
You're making me nauseous, okay? You're making me nauseous, okay? You should be embarrassed, okay? I'm just saying.
I've had Worcestershire sauce in Worcester.
It's Worcestershire sauce. It's Worcester, Massachusetts.
I know it's Worcester, Massachusetts. I've been there many times.
Oh, like that matters. Anyway.
Worcester, Massachusetts. But I could have sworn it said Wortham. I think John just changed. I think John's playing mind games with me.
Yeah, he's playing games.
I do it all the time.
He's playing games.
I think you changed that, John. I think something weird's going on here.
So all I know, we've had some storms coming through Central Texas lately, and we have one maybe coming through now. And the only dog that isn't freaked out by storms is Slim. Slim will actually go out into a thunderstorm. Slimmy don't care. But my wife bought some dog CBD treats. Mm-hmm. She gave a couple to the pit bulls yesterday, and they were out like a light. They just they slept for 3 hours. So I'm not sure if she gave them any this morning, but if she hasn't, and the dogs are going bananas, we might hear them on air. If you hear barking, those are my dogs.
So you're giving your dogs a little THC, huh?
Weed. Yeah, little weed. And no, because the pit bulls just they're so nervous. They don't like storms at all. So anyway, we give them a break.
Yeah, dogs that get freaked out over thunder and lightning, they're tough.
It's we have to sleep with them. We bring him up into one of my girls' rooms, the pit bulls, bring them to girls' rooms, and my wife sleeps with them. And because they're terrified. They're absolutely terrified. And it's sad. But Slimmy don't care.
Slimmy don't care.
Slimmy goes out into the rain, lightning, thunder. Excuse me, he doesn't care.
I like
Slimmy's
dogs.
Bigger than a storm.
I like dogs like that don't care.
Yeah.
Anyway, we got ourselves a good old fashioned.
Excuse me.
We got ourselves a good old fashioned sell off here because what they kind of looked like they wanted to rally for a second. Now a little flight to quality going on. Bonds up 110. Huge move up in the bonds. S&P's down 50. That's a big move.
They're doing it's called a spankadocious for Friday.
A spankadocious. S&P's down 50. I did not see this coming today. I thought they didn't look that bad. They might bounce them. And the NASDAQ down 250, almost 240. Russell's down 26, and the Dow is down 350. And there is nothing pretty right now.
Yeah. The rally in bonds, I shorted some put spreads in there, so that's working well for me. I sold a copper call spread in there a couple days ago when we were doing
I sold a copper call spread. It worked out. I took it off.
Yeah, I'm working to close it right now. No fill on that yet, but everything else is down.
No, everything else is ugly. It just got ugly for me because I was doing good this morning, and it just came back to bite me in the to bite me. This doesn't sound right.
To bite you in your Worcester.
To bite me in my Worcester. Yeah. It doesn't sound very good. Anyway, I'm just taking a look here to see what we got to. Yuck. Anyway, all right, TP, you ready to do a little market measure?
A little work? Yes. Fire away.
Okay, but before we do start, today is the last day. Well, I shouldn't say the last day because you can sign up till later tonight. But tomorrow's our last digital collectibles with Katie, Nick, and Mike. You can own it. You can stream it tomorrow morning. It's a really good piece. It's just over an hour long. We will play it at 10 o'clock in the morning. We'll play it again at 11 o'clock, just after 11 o'clock in the morning. So we'll loop it twice. We are going to mint it on our own blockchain tomorrow morning. And then if you own it, you can go to it anytime you like. It's Mike, his friends, and his whiteboard. It's Katie, Mike, and Nick. I think you'll really enjoy this piece. If you haven't signed up for it, it is completely free. So please go do it. All right.
No downside risk.
It is the most, it's a riskless trade. You're taking an hour of your life. All right, TP, let's do it. What to expect after a 10% decline? Do you know what the decline was from top to bottom? About 10%.
No. You mean in the S&Ps?
Yeah, the S&Ps. We had about a 10% decline from top to bottom. And
I didn't know that number exactly, but yeah, that sounds about right.
Yeah. So
a lot of individual stocks are down 15, 20%. So it makes sense that the S&Ps are down about 10.
Yep. Anyway, so let's do this. So what to expect after a 10% decline? So we've analyzed the historical context around surrounding a 10% S&P decline within any given month. Such significant moves have been relatively rare in recent decades. You can go all the way back to 2008 and finding moves over 10%. We're talking, over, what is it now, over 16, 17 years. There's only over 10%. Well, 4?
We really haven't seen. This has been over the past 20 years practically. It's been a massive rally upwards. Massive rally.
And this is when you this is in 1 month. I mean, obviously we've had sell-offs that exceed that, but in 1 month, it's very rare. Let's go to the next slide. So on average, it takes 25 calendar days to have the first 10% correction in any 30-day period. So the natural following question is, how did the market perform after these large corrections? And how fast did it take to recover to the original level? So how fast will it take to recover back to all-time highs? Because that's essentially where we were.
Yeah.
Let's go to the next slide. So we analyzed the 30-day window after the first 10% market drop, and we found that in 32% of the occurrences, the market fell even further. Only two occurrences saw the price rally all the way back to pre-drop levels. Both of those happening in 2008. And so I think that that's probably, I don't know, a little off. I mean, pretty unlikely to happen again. Let's put it that way.
Well, yeah, I agree. And what you're seeing here, and we've talked about it in some of the other pieces this week, with Jacob, you mentioned it, is the acceleration of risk to the downside. So markets crash to the downside and grind back higher. So as the last line said, all these findings indicate that the market recovers from these large drops much more slowly than it moves south. That's exactly right. That is my trading experience. That is what the data suggests. So yeah, don't expect, if you're bullish, don't expect to make it all back anytime soon.
When you look at this slide, the thing that jumps out to me is the percent of a full recovery, because this is people think we're going back to 6,100, 6,200, whatever it is, and that's only 11% of the time. So highly unlikely.
Right.
But after the first 10% correction, the percent of events with rallies, it's about 2/3 of the time they rally back a little bit. So that's not bad.
Right.
Let's go to the next slide.
And the point is, of course, this is historical data. That you can't predict what's going to happen in the future with historical data.
100%.
But it suggests the odds are against a rally.
Odds are against a rally back all the way back. Odds are for a rally. 68% of the time. I mean, they're going to rally back within a certain period of time.
Well, right.
Yeah.
All right.
Okay.
Keep going.
Let's keep going. Next slide, John. So maybe our 100% recovery target is too ambitious. So this time we also examined targets of 50 and 75% of the initial correction. We tested how fast the market can come back to these levels. So we're talking about a 50% retracement, a 75% retracement. Also, since it took 3 to 5 years to fully recover from all the large corrections in the 2008 crisis, we excluded those outlier events to get a better sense of a distribution in more recent markets. All right. I generally don't like excluding things, but it's fine because 2008 was probably rare. Let's go to the next slide.
Yeah.
So it took less than a week to rally back 50% of the original price. This is much quicker than expected. There was only one occurrence that took more than 6 months to recover, and that happened in 2022. That's really interesting that these rallies back to 50%. It's crazy.
I'm surprised at that. I wouldn't have guessed that it was 50%. And if you're talking about, a 10% decline, which is pretty steep, there's also a question of how many times did this happen? So you're working with a relatively small data set. So while there is a bias towards a bounce, to make it all the way back, like we've been saying, like Tom said, is pretty rare. The question is, making it back 50%? Well, when you see a decline like you have in the S&Ps, if you're going to make 50% back up to whatever it was, 6,100, 50% of where it is now up to that, there's about a 57% chance, or let's say just over 50% chance of that happening, according to this data.
Yeah, I mean, basically what it's saying is, listen, whatever we want to think about things, markets are pretty damn cyclical. Let's go.
But exactly.
But
next slide.
But today is a flight to quality day because we have not seen bonds up 112 and S&P's down 60 in a while. So this is a little bit different animal today. Increasing our target by 25%, it takes much longer, more than 2 months for the market to make that 75% retracement. Okay.
Yeah.
I mean,
and this just makes sense. It makes sense.
Yeah, there's nothing that's surprising about any of this. It's just putting some context around it to give you real numbers. That's all this is. Let's go to the next slide. So it took 3 months to fully recover from all the losses. These results suggest that a 50% recovery in the short term is more realistic than a full recovery. Keeping some negative delta in your portfolio and selling premium at high implied volatility is probably worthwhile before the full recovery occurs. I think this is kind of very much similar to like what Ilya was talking about yesterday afternoon, but and he articulated it quite well about keeping a little bit of negative delta in the portfolio while they recover because, you're seeing it right now take place.
Right. And so you always have to be, yes, you have this historical information in your back pocket. This is a data point. Okay. Treat it as a data point. You have to look at the current market conditions. There are a couple of things that I'm looking at right now, just in the S&Ps, that the volume in the SPY sell-off really hasn't been that high. So it doesn't seem like there's a lot of panic selling in SPY right now. Could be wrong. I could be wrong. But it doesn't seem like there's a lot of panicking in the SPY yet. The VIX, what is the VIX doing? It's up, but the VIX futures
the VIX is up,
are still under 20.
The VIX is up big today. I mean, the VIX futures are under 20, but the VIX is up $1.60, and the VIX futures today are up, they're up 4%.
Yeah, I mean, it's a big move, but I would expect a higher VIX if there were genuine panic.
Yeah.
So my opinion is it's no better than anybody else's. But I would, even despite this data, short term, I'm still a little bearish. I would bet the S&Ps to the downside, but I would also look to take those trades off relatively quickly if I have a profit in them.
I got you. Let's go to the next slide. Some of the takeaways from this. It takes about 25 days to see a 10% market correction in the past 20 years of a 10%. So what they're saying is a 10% correction takes about 25 days total. However, it takes much longer to recover to the original level. It basically took the whole month of, pretty much the whole month of March. 2008 had the longest correction period in recent history. The full recovery took 3 to 5 years. There was only one occurrence after that where it was more than 6 months for recovery period. It takes less time to recover 50% of a correction, but much longer with higher recovery targets. 2 to 3 months is realistic for a 75 to 100% recovery. I wish people, I kind of wish, TP, that I kind of wish that we had these kind of statistics that were much more public so that when people make like policy decisions, they understand
what the consequences are of recovery, because it is very difficult to have economic recovery when you don't have the stock market to support it.
Right. So I understand that the stock market isn't the economy. I get it.
Of course,
I get
it
it.
is not.
I get it. I get it. But because the economy is so dependent on public perception, do people feel good about things? Do people feel optimistic about things? That is tied to the S&Ps. Even if people aren't trading, they know the market has sold off. My wife knows the market's down. Okay. She doesn't trade. She barely, doesn't look at the market. She knows it's down. So that's like, gee, should I go buy something? Should I spend money? So the stock market is a confirmation about perceptions in the economy. If you're going to, and I'm not going to say, you're talking to Pete Molman about tariffs. I get it. There's pros and cons to them, and you're against them, so I am automatically by default going to be for them just to be a contrarian. But the point is, you can argue about individual policies, tariffs, taxes, whatever. But if you don't have an eye towards what the S&P 500, what the NASDAQ, or bonds, or gold, or crude oil might do in response, you're flying blind. You're not taking the full context into consideration. So yes, you may be thinking, I'm only affecting the economy. It's going to help American jobs with the tariffs are going to help American jobs. Okay, fine. Yeah, okay. But if you're sending the market lower with that, understand that also affects the economy negatively. It's not so much that people won't have enough money. The tariffs, okay, maybe I can afford the 25% extra on a car, or maybe not, or whatever it is. It doesn't matter. But if I'm scared that my investments are now down, that I won't have enough money in 5-10 years to retire because I've lost all my net lick is down so much, that makes me nervous. That makes me contract. That makes me not drive the economy forward.
Yeah, that's the whole consumer confidence angle, which doesn't really come into play until things turn a little bit ugly. And when things turn ugly, consumer confidence compounds the negativity and makes it difficult to recover. And it's one thing if consumer confidence drops due to cyclicality. It's another thing when it is done intentionally to create a different kind of outcome. Doesn't make any sense to me. We can debate this for hours, though. Let's bring on Scott, and it's 9:27. He's TP. I'm Tom Sosnoff, and the bat will be back on Monday. We're going to bring in Scott Sheridan. So, do it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, everybody. We are back. TP and his little tiger, out. Does that thing have feet on it?
No, it's by Flames.
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 Oh, they're flames. I thought it was a tiger. I thought it was a tiger outfit. Oh, does it? I thought it might have like feeties on it or something.
You don't even know basic animal colors. You can't pronounce the name Worcester.
Can we talk about towns
You
too?
don't know tigers, zebras. Ugh, what
Zebras, tigers, yeah, Worcester, everything.
Ocelots, opossums.
I don't know what an ocelot is.
Kangaroos.
Possum, you know.
Possums. Hey, did you know, by the way, this is something you can put in your back pocket too. Possums are immune to rattlesnake venom. Possum goes up to a rattlesnake, punches it in the nose, the rattlesnake bites it, possum don't care.
Okay.
Immune.
If I ever need to know that little tidbit of information, if I'm eating a dead possum that got bit by a rattlesnake, if that's where I'm at, something went horribly wrong in my life because I don't have that. I don't go where rattlesnakes are, and I don't even know where there's a possum. So I'm pretty good.
There are possums in Chicago.
Yeah, well, there's none in my house.
There are possums in Chicago, and I lived in Chicago. One night I came home like it was 10:30, 11 o'clock or something. The biggest possum, must have been 5 feet long, crossed Hamilton Avenue in front of the car. It didn't care that I was driving down the street.
5 foot long possum?
It looked that it was half the width of the street. Okay, it was enormous, and it was a possum.
And you think it was a possum?
No, it looked like a possum. It was gray, had the possum-shaped head. Maybe it wasn't 9 feet, but it was a big-ass possum.
All right, Scott, thank you for saving us. TP's talking about a 9-foot-long possum that...
Well, it started at 5 feet, then it got to 9 feet. By the time we're done, the size of an aircraft carrier.
It was, Scott. Okay. It might as well have been. Okay.
More importantly, before I get going, Tom, my Taiwanese sources, I couldn't listen to this morning, but my Taiwanese sources told me you butchered some names. Was Worcester one of them?
I did not butcher any names.
Yes.
It said Wortham.
Yes.
It said they changed it on me. It said Wortham, not Worcester. I can read. I know what Worcester is.
That's how you spell Worcester?
Yes.
Yes.
Tom,
you could say Worcester if you want.
Tom, I have worked
Worcester
with you.
better. I'm all on board Tom Worcester.
He is. He's barely literate. So
I was eating Worcestershire sauce. I was having Worcestershire sauce in Worcester, and
TP, you might know this one. How in the world is Goethe pronounced Goethe what is it, Gothe?
Instead of goth?
Yeah, or Gotha.
It's the OE that diphthong. So whenever you have two vowels, they're called diphthongs.
I knew you'd know this. Go ahead.
And in the German, in German, it has O with an umlaut over it, with the two dots, and that's an sound. And in English, we turn it into diphthong with the OE, and it's Goethe.
See, there you go. So we drop the two dots for an E.
Yes, because we have a real alphabet. We don't need dots. Okay.
Oh boy. No tildes either.
What's that? No what?
No tildes?
No tildes, no. Tilde.
Don't try to.
Tildes.
Oh my God. Scott, not you. Tilde.
Hey,
It's
that's why I
a
didn't
tilde.
spell Spanish. A tilde. That thing.
It's moops.
More moves. Exactly. More importantly, on a silver platter, I laid this up for you. Quite possibly the greatest finish to a basketball game, and you didn't go.
I agree.
Down by 18.
I watched the highlights. I know.
I only saw the highlights from 5 minutes when they were down by 13. LeBron looked like a beaten man sitting on the bench. With Giddey, say this kid, he's going to be a fan. If he's not already in Chicago, blown up, except for nobody can watch him in Chicago. This kid's going to have a long career with the Bulls. When he made that half-court three-pointer, it was meant to it. He just put his hand up like, yep, no problem. I knew that was going in.
I watched it.
Amazing.
I watched it like 20 times. Stacey King. Stacey King and Adam Amin were great. Great.
Had to be going nuts. When Kobe hits the three with 5 seconds to go, you think like game's over. Let's get out of here.
Did you?
And then two more baskets.
Did you listen to the end of the game?
So I was at the Cubs game.
Oh,
they
that's
won.
right.
How about Cubs White Sox? How about Cubs White Sox Bulls? So trifecta last night for Chicago. Cubs look good, but no, I saw it. Max was playing it, but I was listening to it. And I just saw literally the last, like when Giddey stole the ball, what was like the last 12 seconds, 10 seconds? That was amazing.
So Stacey King, when
he had to be going crazy.
Yeah, when Kobe White hit the shot, Stacey goes, big time play. You know, he screams out, big time players make big time plays, right? And then they came down, and Austin Reeves comes down.
Williams got beat.
Austin Reeves comes down, and he makes the layup, and then Stacey goes, damn it, I knew it. And then they throw up, then he throws up the half court shot, and those guys just go insane. It was great. I couldn't turn it off.
Great for basketball, great for the Bulls. I mean, I know you talk about you don't want to face a hot goalie in the playoffs. I mean, the Bulls have, I think they're 9-2 in the last 11 games.
They are.
Yeah, it's awesome. Anyway, TP basketball talk. We'll bring you back. Sorry, we'll get
that's
to the meat.
You're not allowed to talk.
Meats.
You're not allowed to talk Bulls basketball with TP. It does not. It does not.
I had to make a few adjustments. He gave me a little breathing room.
Okay. There we go.
It worked out. Thank you, Scott.
Yeah, you're welcome. You're welcome. Nice to have you again. And I knew that it was Flames. Okay. Tom will get this. Let's see if TP will get this. A movie with the flames on the car.
I don't know which movie it is.
Yes, you do. Where he goes in. The in-laws, the original in-laws. Where he goes in.
Oh, there's a lot of movies with flames. I wouldn't have guessed that.
Yeah. The in-laws where he gets the page. He's like, I got flames on my car. Okay.
I forgot.
Like, Shell, what are you talking about flames? What are you talking about flames on your car? I have flames on my car.
I'll have to look at. No, I didn't, Scott. I did not know that. I will have to look that up.
Yeah, well, great movie. Serpentine, Shell. Serpentine.
Shelley!
Are we doing phone calls? Are either of you trustworthy enough to handle the phone calls?
I have a phone call screen in front of me because, yeah, we can do phone calls. I'll open up the phone lines for you.
Just because the screen is in front of you does not mean that you know how to use it.
I know how to use it. 1-855-238-2789. 1-855-238-2789. It should say it on the screen in front of you.
John, James, anybody else managing control? Are we good with this, or do you guys want to drive?
John, I got a big screen in front of me.
Yes. We'll get the phones going. Don't worry.
Tom will just mash it with his hand.
Go ahead, hurt me. How good was Fry the Coop, by the way?
Oh, yeah, it was great, but it put me under. I was kind of like overloaded the entire day. What?
Wait, too heavy or too much heat?
No, too heavy. It wasn't too much heat. I did Insanity, which is their hottest, and it was fine.
You did the Insanity with the gloves?
Oh, gloves. You don't need gloves.
What did you eat? What did you eat?
That comes. The Insanity is the 3X, right? It comes with gloves.
It's not that hot. It's not.
What did you eat?
It's not like Howlin' Ray. It's a fried chicken sandwich.
Oh,
you should go to a specialist. You should go see somebody because I think you have like 3 taste buds left.
I'm telling you, I've had hot chicken. That's not as hot.
Okay, maybe it's not as hot as it used to be because I remember we had a developer that would brag about how hot he could eat, how spicy he could go.
Yeah.
He was dying after he ate that.
No.
Dying.
I had it, no problem. It didn't even faze me. And my daughter's the same way, Case the same way. But the only time I went, the only place that ever took me down was Howlin' Ray's. Their top level, I couldn't do. I couldn't breathe.
Like at some point, it doesn't serve a purpose. It's just blowing your mouth out.
No, I like it hot. I like it.
If it's heat with a purpose. Okay, what's for lunch today? I'm going with pizza.
What?
I'm going with pizza. What's for lunch today? I'm saying you're going to have pizza today. What's for lunch?
Burgers.
Burgers, small cheval.
Oh, small cheval.
Sounded quite strong. That's a good back-to-back, but not good if you were full after the chicken sandwich. You're going to be taking a nap after small cheval.
I know, and I have to start my 1 week diet for the wedding today.
Oh, to fit into your wedding clothes?
To fit into my wedding clothes. Yes.
I thought you were wearing elasticized waists now. I didn't think weight actually mattered.
TP, this is thinking. This is big brain activity.
I have to start my wedding diet today. Yes.
You're not good. You are not good on crash course diets. You're much better on the slow walking, like months and months, and it just slowly comes off.
I know.
You're going to be very hangry. You're going to be very hungry come Monday.
So I can do 2 small cheval doubles. What are you going to have from small cheval?
You can really eat 2 for sure.
Just the pickles. Just the pickles.
Oh, well, wait. You said, in fairness, you need to start your diet today. That could be after lunch.
Yeah.
No. I mean, no. I'll figure something out.
All right. Do we get a preview of whatever this outfit is you're wearing that you need to fit into?
Todd McCarthy bought it for me. Did you hear the
Todd
story?
McCarthy is very kind.
Oh,
No. Where did Todd McCarthy buy you clothes? Why and where?
So the reason why is because he couldn't stand the fact that it really bothered him that I didn't have any clothes. So he went out
Fair enough. Although you look good at Case's wedding.
We're about the same size. So he went out and bought me clothes at some fancy schmancy place. And then he took my credit card.
Wait a minute.
And I had to pay him back.
And you accepted?
I did, because he did all the work. He was like a professional shopper.
Todd McCarthy coming through.
He really did a good job. He went and bought all this stuff.
I have to say, I didn't know T-Mac had that skill set.
Yeah.
Nice.
Yeah.
Yeah.
I would not necessarily have guessed.
He went to some place, you probably know it.
Stewart?
No, Peter something.
Peter Millar?
Yeah, Peter Millar.
Oh my God.
I don't know that
golf close.
What?
It's athleisure. It's athleisure. It's golf clothes. Okay.
Golf clothes.
Like I said,
This is
elastic waist.
golf clothes.
These aren't golf clothes.
Athleisure. Okay,
What?
they have a nice side to it. Like you get your jacket and it's golf clothes. That's what Peter Millar is.
Golf?
And G4, and yes, and G4, like, no, this one, I'm not wearing a Peter Millar. A lot of my pullovers are Peter Millar. Golf shirts are Peter Millar. It's nice stuff. I'm not picking on it. But that's not what I thought you were going to say for going to a wedding. But I'm impressed. Now I know why you like it, because it's golf clothes. So it makes sense. Now, G4.
No.
G4
It's a casual wedding in the desert.
It's athleisure. It's athleisure.
Todd knew his customer. Todd knew his customer.
Please tell me no motorcycle boots.
No, I have to go buy shoes this weekend.
Can you wear sneakers? Go buy a pair of Jordans.
My son is getting married in sneakers.
Right. So that's good. Then go buy a pair of Jordans.
I got Jordans. I got a pair.
Okay, get fresh Jordans. Get clean, new. Don't pull out vintage 88 Jordans. Okay,
just scrub them down a little bit. You'll be fine.
Yeah, throw them in the washing machine.
All right, we have some very important. We have some very important callers. Hold on.
Let's get to business.
We got to quickly.
Top 15 symbols going through. No, stop. Top 15 symbols going through the system first 40 minutes.
All right, top 15
indices or futures. Time for you number 15. IBIT at a 26. For everybody else, Tesla at a 65. Nvidia at a 21. Lulu could have gone there at a 34. Meta at a 39. PLTR at a 59. Amazon at a 46. Apple at a 48. GLD at a 29. MSTR at a 22. Goog with an L at a 49. AMD at a 20. APP at an 87. Hood at a 45. TLT at a 29. And number 15 for Tom, IBIT at a 26. Rounding out the next 10, AVGO at a 44. Netflix at an 83. TQQQ at a 54. Microsoft at a 44. GDX at a 31. SoFi at a 50. And General Motors at a 62. Now you can go to calls.
All right. Well, we have a bunch of calls. Okay.
Scott is a pro.
We're gonna start off with a very important person, Joe Mama.
Oof.
Joe Mama.
How are you?
Joe, how are you? Haven't talked to you.
I'm great.
Haven't talked to you since you got back from Italy.
Yeah, I was there for a month and a day. I had an unbelievable time. But you guys can set your calendars, because anytime I go on vacation, the market tanks.
Nice.
So a year ago, I went to Australia. 2 days after I left, sell off.
Nice.
Joe, if you give us a heads up on your travel plans next time, we'd appreciate it.
Yeah, can you give us a little heads up?
Yeah, I promise I'm going to do that. And maybe I'll be smart enough to sell a couple of futures before I leave.
Hey, Joe, quick question, because according to Tom, you can't get a good Italian food in Italy. Did you have any good food?
Not true at all. You just got to know the right people. By the way, I went to a fashion show with Dylan Radigan at Dylan Radigan's place, and I ran into.
That's probably good.
We ran into Christy Ross.
Yeah, I saw the picture.
Nice.
It was great.
Nice.
Of course, I can't afford $330 sneakers. Dylan gave me the code. He goes, "Yeah, Joe, just put the code in. You get a discount." The discount was free shipping.
Oh, great. Thank you very much. Thank you very much.
All right.
Exactly right.
Well,
anyway, just wanted to call in and say hello and love you guys. And by the way, T-Mac called me to consult me on your clothing.
Goodbye. Goodbye.
All right, love you guys.
All right, thanks. We're gonna jump to Philly. We're gonna jump to Philly and go to Bank. Hey, Bank, what's up?
Hey guys, try to keep it short.
Sure.
So just a tip for the viewers. I've been busy lately, so if you want to get caught up, what you do is you go to Friday and you look at the last call. Just like take you 15 minutes to go through the week. So now Tony's not here. I was gonna ask him why he chose Starbucks as the first date. He posted a lot of stuff on X the last couple of days, but that'll have to wait another time.
Huh? Say that again.
Okay, so the last, I usually get caught up at nighttime.
Yeah.
I've been busy lately.
Yeah.
So Tony Batista posted a lot of things. He met his wife 20 years ago, and the first date was at Starbucks. I just don't picture Tony.
Wait, is that the shoe story?
Hold
The Starbucks?
No. Stop.
To Barney's?
Tony's first date, that was Dr. Jim's first date, was at Starbucks. Tony doesn't do Starbucks with women. He doesn't. He needs.
Okay, so I was on the right path. Because I was really confused.
Tony would never go on a first date with anybody that doesn't have alcohol. Not possible. Not even remote possible does Tony go on a first date without lots of alcohol. Okay, there's no other way you can handle it.
I'll have to check it out because my memory's usually good. But I might as well squeeze this question in because if I do the math, when you and Tony were in baseball, he would have been under 21. Did you have to buy beer for him after the competition?
No, Tony was 21 because you couldn't trade on the floor unless you were 21.
Okay.
Yeah, so he was
Right,
I think he came to Chicago. He was 20. I think he was 21. Yeah. Yeah, I think he was 21. All right. Thanks, Bank.
Can I just get a quick trading question?
Oh, sure. Go ahead. Quick.
Okay. So I was gonna write to Tom and complain that the percentages don't work. I was doing a lot of spreads, selling like 30 delta and buying 20. When I say percentages, I'm talking about probability of in the money. And I understand TP, like you built those. I was going to write to Tom and complain they weren't working because I was getting breached. Then we had the down move. So can you tell me more about the percentages? Like how are they tested or?
Yeah,
I've never traded options on any platform except you guys.
So just real quick, the probability numbers are just derived off of the normal distribution. That's all it is. So the idea is that stock price changes, index price changes, everything are normally distributed. So we pluck those off the normal distribution, and it's based on volatility. So the higher the volatility, the further out those, let's say, 30 delta puts or 30 delta calls are. It just affects that normal distribution. So if the numbers are wrong, the formulas are correct as they are, right? And you can disagree that, well, maybe the inputs are bad or because the bid-ask spread is wide, the mid-price going in changes the implied volatility. But Bank, if you have a number that doesn't make sense to you, send it to me if you can do a screenshot, tp@tastylive.com, and I'll see if I can do a deep dive for you on that.
Yeah, there was no issues there. I think it was just we were in a big uptrend and everybody was in that boat.
Well, yeah, if you're... Yeah.
I mean, my last comment is basic. If you know anything, my last comment is like it changes day to day. Like Tom interviewed this guy that he took a big loss.
Sure.
So like the next day, his net worth drops.
Yeah.
So it's only really good for the time you're looking at it.
100%.
I'm going to move on and give the other people a chance.
Thanks, Bank.
Thank you, Bank.
We're going to jump to Kay in Long Island. Kay, hey, Kay.
Hi there, how are you?
We're good. Thanks for waiting.
Okay, I just got finished watching part 1 and part 2, build the portfolio and manage the portfolio.
Sure.
And I really enjoyed it.
Thanks.
I belong to an investment group of like-minded women who are interested in taking control of our financial future.
Okay.
So my hope is that we can register for a Tasty Live event very soon so that we can learn more.
Where are you? Where are you located?
I'm on Long Island.
Okay.
Most of our group is on Long Island, but we have one member in New Jersey.
We are going, if you drop me an email, I will tell you when we'll be close. Tony and I will be on the road this year. We're going to be posting our schedule on Monday, but we're going to be in New York. We'll be in New York City. That's the closest we're going to get to Long Island. But
that's very close.
Yeah, so we'll be doing a live event in New York City, and I just don't have the date right in front of me, but we'll be posting it on Monday. And if you send me an email, I'll send you an email and tell you when it is, and you can bring the whole group.
Perfect. Thank you.
Thanks so much. Thanks, Kay.
Thank you, Kay.
All right, boys, we're running down to the final minutes here, and it's an ugly day. S&P's down 84, bonds up 110, Nasdaq's down almost 400, 365. It's ugly. Every single stock on my screen is down. Volatility is really exploding. Since we've been talking TP, the VIX is now up. The futures are 105, and the VIX itself is up 10%. It's an ugly day for a Friday.
It is.
And we're making new
Cancel
lows.
Crash.
And I'm not sure who's going to come.
Not quite yet.
Well, I'm not sure who's going to come in and buy this stuff, but we'll see. Scott, any last words?
No, TP, what a pleasure being with you. So,
thank you,
Tony. If you're listening, no shade. Happy to have you back on Monday, but TP was great having you 4 out of 5 days.
Scott, always love working with you.
All right, guys, get a room. We'll see everybody this afternoon at 2:30, and it'll be myself and Vecchio. The rest of the day, we have a full lineup. It is 9:57. We'll see you this afternoon. And don't forget, Sunday night at 4:55. Looks like it's going to be busy now. Sunday night at 4:55, we come back on for First Call. Myself, Victor, Pete, and Ilya. Thanks so much.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. Do you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette. To the left of me is Jenny Andrews. Happy Down Day Friday, Jenny.
Happy Red Friday, Liz, and happy vacation day. You're going to finish the show, and you're getting on a jet plane and heading out.
I'm leaving on a jet plane. You know what? And I hope the exact opposite that happened when you were gone happens when I'm gone.
That was exactly what I was thinking. When I was gone, the market went straight down all week. When you're gone, I hope it goes straight up.
Yeah. I mean, I hope so too. Can we do something real quick? So SPOOs are down 10, which is 1%. Can we look at the VIX?
Down 90, and SPOOs are down 92.
I'm sorry, I'm looking at, you're on SPY. SPOOs are down 9.
Oh, okay.
Yeah, you're on SPY. SPY is down 9, and that's down 1.9%. What is the VIX doing?
The VIX?
And the reason I'm asking this is because I know Kai, who's amazing, put together the best of the market measures, and he talked about the VIX. So the VIX is only at 20.
Yes, right. And in those down days, we saw it as high as 28. So we've got SPOOs down 93, VIX is not even 21. So, yeah. But we're slowly stair-stepping down, right? I mean, it wasn't like, boom, down 90. It was down 30, down, we slowly got here to 90.
I know, and the reason I was bringing it up is because that one of the things that we're going to go over in Kai's market measures from this week was about the VIX and the move and the percentage down in the SPY. So it's kind of topical, if you will.
Yes. So we didn't see this coming because we only had one. Our GTCs are usually to take profits. We had one GTC hit today. One profitable trade came off today. Guess what it was?
I have no idea. Oh my God.
TPs, like triple Qs, $2 wide call spread. That's
Now
it.
that is funny because I heard something get filled. I just didn't know what it was. That's pretty funny.
Yeah. The only silver lining is that yesterday our SPX Iron Condor actually hit. So we did get out of that for a win later in the day.
Oh, you know what? And that didn't get pushed out either, right? Because it was after the show. I will do that as well. So that was a grace of God because we just popped up a little bit right after our show. I think we got filled. What time? I'm gonna go yesterday too. I think we got filled at like 11:20. Yeah.
So, okay, now we're losing money today, right? We're down, the market's down, and we're losing money. And I'm losing money because my account is more bullish. But it's like you think about if you just had your money sitting in the market or in mutual funds or whatever, you'd be losing money too, right? So it's not like, oh darn, I'm losing money in my trading account. Well, if this money were in the stocks or S&P 500 or whatever, it would be losing as well.
It's funny because the Gen Pop only sees their statements quarterly, right? Which is end of quarter, end of month. So that's on Monday. So if they see their statements quarterly, and I think that is fascinating. And I know there was a bump one time that we did this about Tom in the 87 crash, where he's like the world was falling around me. And then I went to what was it? What's that hot dog place where they insult you?
Super Dog or
no, Wiener Circle. He went to the Wiener Circle and he's like, and nobody seemed to care because they don't know. You see it quarterly. And then every time the quarterly statement comes out, don't you get a phone call from like the Black Widow being like, what's happening with my account?
Well, and the funny thing is in the news, like the news just really, when we had that one up day, gosh, what was it? Oh, let me see. We had that one up day. This day, right? We had this one jump up day. And that's what the news really talked about because my parents, and I saw them last night at dinner and I talked to my mom the other day and that's all they talked about. Like, whoa, the market went up so much in one day. And I was like, and that's what they heard after like all this time. All they heard and talked about was that one day move that we had.
Yeah, I think that is pretty common, right?
And I was like, well, actually. So yeah, big red bar today. That's for sure.
Yeah.
And after the number came out, it wasn't like nothing crazy was going on. I think we were down 15, then maybe down 20.
Yeah, I mean,
we went from being down 10 to down 16. It wasn't like, oh, sky is falling.
I mean, when I was throwing things in there, and then I logged in, and you're like, "Spoos are down 80." I was like, "What?" Because I didn't see that. But I will be available, Jenny. So like this week, no matter what, I mean, I'm going to be looking at the markets. I'm doing a bunch of stuff. So call me if you need to talk about anything.
I'm not going to bother you on your cruise and go enjoy every minute of it. And honestly, this account, we talked about this, how we do not have scrolling positions. We don't have that much on. We don't have, I mean, look, we've got Spoos down 90 and our biggest loser is $140 loser today. And that's Micron. Or 157.
Oh, we have a naked put. That'll
one short naked put, and that's in May. And it's, again, this is where people might say, oh, add on a call or roll your, I'm not going to do anything with this 90 put in Micron.
Nope.
Yeah, it's in the money, but whatever. If it gets super far in the money where there's no extrinsic value left, I'll turn it into a zebra.
Turn it into a zebra with that same call. No, or keep an eye, not that this matters either way. And our positions are a lot smaller than they were when you left. But if things get out of control, you can always change it into a zebra with that same short call. So it's that exact same position.
But right,
if the buying power gets bonkers, and that's the one thing you got to keep an eye on. If it does, this is nothing. This is the at the monies, and we're not down that much. But when the VIX was 28, and we had like 5 down days in a row when you were gone, the buying power went through the roof on everything.
And so here we've got buying power. Just this is only using $1,500, and we've got about $15,000 in buying power. So yeah, I'm not worried about that. I don't know if we even have any other naked positions. Maybe an Intel put, the 24 put. Now here's something I could roll this. I'll roll this out to May.
So yeah, Jenny, I'm just glancing at our cap required right now. Micron is 2 times any other position that we have.
Because all of our other positions are small.
Yes. Micron is 2 times, and Tesla's our next, and Tesla's only $700. So Micron is $1,000 more than our next highest capital position, which is fine.
Okay,
it's fine.
It's fine.
Yeah, just keep an eye on that one.
Okay, I will. But I mean, at 90, where's it going to go? If it goes down to 80, that's $1,000. We can handle it.
Right.
Okay.
No. I just, like I said, my big thing is keep an eye on if the capital requirement.
Oh, sure.
You could, and the other thing that happened was it was assignment city. So if this goes pretty far, I was getting assigned left and right on things. So if it goes in the money, sometimes you do get assigned pretty quickly on them.
And that's that's where our capital, our buying power could, we can really lose buying power if we get assigned and then we're in stock positions.
Yes.
Okay, so Intel, I'm looking at that. We've got the 24 put in April. I'm just moving to May. If I keep the same 24 put, I'll take an additional 68 cents. I don't know.
Do it. Who cares? Just get it the heck out of the way.
Yeah, and Intel at this price, okay. So I'm trying to move it to 24. Intel at this price, I don't mind adding on like the 28 call for another 50 cents.
Sure. Go for it.
That's a price it's never been.
Yeah.
And I don't want to say never, but never recently. It's not true to say never, but I guess it almost got there.
Just about there. Just a little outside. Yes, it's almost
there. But
there.
that'll give us an extra 53 cents. So
yes, it will. Yes, it will.
And it's not using any additional buying power. So I sold that 28 call in Intel. I'm trying to roll our put.
Yeah, you'll get full at some
Isn't it funny how the week, what a difference a day makes? So earlier in the week, and I think we have an Archer position. No, we don't right now. Early in the week, I was crying to you about how I sold the 9 calls against my stock in Archer. It was
yes, you were.
Yes. Yeah, I was like, I can't believe I sold those 9 calls. What was I thinking? And now it's 7. I mean, it was through 9 at the beginning of the week.
Yeah.
Or close to it.
What a difference a day makes, right?
Yeah. Crazy. That's one of those, I don't mind getting back into Archer. Archer's really been, Archer moves around
a lot. What's the volatility in Archer? Because that does move quite a bit, don't you think?
Yeah, it goes. So the val's 200%, well, 100% implied volatility, pretty much.
Yeah, but here's what I think is funny about it. There's 100% implied volatility, which Jenny's got her thing over, but it's only 31. So sometimes it's higher than that.
But it's what?
But see, it's the 31 IVR, meaning that 100 is it's a little high for itself, but it's not that crazy. So that's why it moves all the time.
Because 100% 7 puts for 85 cents.
Because 100% implied volatility technically means that it's either going to go to 0 or it's going to double.
Are you okay with this? 7 puts, 85 cents?
Love it. I sold the 8 puts when it was down a little bit. So if you like it at 8, you love it at 7.
You love it at 7. You love it at 7. Why am I not getting filled? Okay, 85 cents. I'm curious, like what are coin and all the cryptos doing today? Ooh, down 884.
Yeah, Bitcoin was down a ton. And that's what I was going to say. Bitcoin and the market are kind of in like lockstep lately.
They've down 3,000.
Yeah.
And let's see, Ethereum. I'm getting ready because I'm having a crypto expert on Monday. So any crypto questions you have, you could send them to me, Jenny, JENNY at tastylive.com. I'm going to have Ryan Grace, our crypto expert, on Monday.
You will love the show. I mean, it was, Jenny, I know we say it's the fastest hour of the day. When it was 11 o'clock with Ryan, I was like, oh, wow. I could have talked to him for 48 hours.
I'm excited. I'm excited. I've got Ryan, the crypto expert, on Monday, which is going to be great. Tuesday,
Dr. Data
is Dr. Data working on back testing. Wednesday, I have Tony from Mexico, and her had a great question, great email, and I forwarded it to Tony from Tony from Mexico, to see his thoughts on it and what he would do. So we're going to talk about that. We're going to talk about lots of things. We're going to talk about what Tony's been up to.
Are you also going to send it to TP to get 3 different opinions? Because you gave what you would do. You should do that.
Well, I'm going to bring like what I would do. Let's see what Tony would do. And sure, I'll send it to TP. We'll see what TP would do. And they'll probably all be different. So I think then Herb, you'll have 3 different choices.
Yeah. No, I think it's good.
Okay. So that's all. I know we're at the 21 day mark. We could go through and roll if we want to, but why don't we get to Kai's study?
Yeah, let's get to Kai's study. And it's basically rolling short positions at 21 DT, and we don't seem to have a lot of those, Jenny. We've got a lot of calendars, we've got a lot of button-down risk, we've got some zebras in there, but not necessarily the naked options that are your mechanical roll at 21 days till expiration.
Oh, and then some things like, I was like, why do we have one long put? This is just, this is one of those things where we had a put spread and we took off our short put and just left along. Bonsai one share, it's $2.
Oh, I think that, yeah.
That's that stock I bought when it IPO'd at like $10 and now it's $2.
Yeah, I remember.
Citigroup, just a calendar. I'm just quick popping these open to see if we have anything. This is just a CCJ Zebra.
No, I mean, I kind of went through all of them. There's not much to do, Jenny. Snap is another naked put that we have, but that's also already out in May. The rest are
this
zebras.
50-40 put spread. Let's roll this to May. 50-40 put spread with 20 days to go. It's wide enough. We only bought that 40 put to release capital. Let's roll that to May.
And you should be able to roll that for even or a wee bit of a credit just to extend your duration.
34-cent credit.
Yeah, because, if it's trading 50% the width of the spread, they're going to, no matter what cycle you go to, it's right there.
And that's just giving us more time.
Yeah.
And I was doing that yesterday in my account. I had some wide spreads, and I was just moving them to May. Then you kind of forget about them. If this goes out to May, it's defined risk. We can kind of forget about it.
Sell in May and go away. That's what you're doing.
So you went through everything.
I glanced. I mean, we have zebras, we have stock, we have long options. We don't have a lot. Tesla's the only thing, but that's a call spread. That's the Super Bowl. We bought a call spread and sold a put spread.
Right.
That can sit. Because you don't mind those a little nearer term. Do you know what I mean?
Right. Okay. And microns are only naked put, and did we move it? What? Oh, that's just to buy it back. It's in May. It's in May.
Yeah.
Okay. So, and I'll keep an eye on everything. I know I'm not going to be in the account much with the guests, but I'll keep an eye on anything. But let's get to Kai's study here.
Yeah, and you'll push out anything that you do. That's the hard part, is I would manage by myself, but push out afterwards when you were gone.
Right, and I'll do that if anything comes up.
Yeah,
hopefully you're right, Liz, and the market goes straight up next week instead of straight down.
I know. Well, we don't have a lot on, so even if it did go straight up, there's not much help, but we'll see.
All right. Weekly summary of market measures. Shout out to Kai. I love that he does this. Everything that came out this week for the boys and Julia. Julia was on all week. So anything that came out for Tom and Julia, or Tom and his guests, here's a summary of the market measures.
Yeah, and this is great. I love that Kai gives us these.
Okay. Ready for the first one of the week?
Yeah, I think there's 3, to be honest with you. Okay, so this is what I was talking about. The 10% market pullbacks and their IVs. So a 10% market pullback and their IVs. They wrote it twice.
There we go. The S&P has had a significant pullback from the market top in the past month. It experienced a 10% drop from top to bottom based on closing prices and 10.5% based on intraday prices. So how often have we seen a 10% drop in the broad market, and what happened to its implied volatility?
Okay, so this is pretty interesting. That's why when I glanced at this morning, thinking we could look at the IV, the VIX and where it is right now with the down day that we have. So let's go to the next slide. I think this one's a little bit longer. Okay, in the past 20 years, there have been only 16 occurrences that saw the continuous downside of more over 10% within a month. The current market drop is still slightly smaller than the other moves on average, but the average daily moves are almost the same.
Okay, so let's look at this chart here. Number of occurrences since 2005, 16.
And then he's just doing that too from February 19th to March 11th of this year. He's comparing it to this drop.
Okay. Average return negative 14%, and we're 14% drop, and we're at 10%. But with today, well, I don't know. We're still, I think
we're still higher than we were at the trough.
We're still high, right? Average duration of days 23.8, and we're at 22. I mean, could this be the end of it? Could it be the end?
Well, it says, what didn't we say? The average is 22 days? I think it goes farther than there. So it concludes today. No, but the average duration is 23.8. So it might follow through Monday and Tuesday.
Right. And this market measure was earlier in the week. So you're right. We've passed the 22-day mark.
Yes, we've passed the 22-day mark. But keep in mind, the average duration days is 23.8. We're at 22. Okay, so the daily returns are about the same, negative 0.5%, negative 0.5%, if you're just kind of averaging them out.
Okay. All right. Well, does this make you feel better? Like we might be at the end of the down move?
It did.
Good. Makes me want to go buy some SPX calls.
Thanks, Kai.
All right, what do we have here? VIX rose only 10 points during the current market decline compared to the historical median of 16 points. And we talked about that we were surprised the VIX wasn't up higher than it was, right?
Today, correct.
Yeah, well, and just during this whole move, that it never got into the 30s.
Oh, yeah, take a look at that dotted line. That's where our VIX, that's where the VIX high is, and we're down 10%. That was insane.
I know.
So my UVXY that I bought to protect my bullish portfolio was a big fat bupkis.
I told you, I left and got on the cruise and bought some VIX calls, came back, my account looked like it had gone to hell in a handbasket, and my VIX calls expired worthless.
And your hedge was worthless. Yeah.
Yeah. Oh, yeah. We didn't have a big move in the VIX. It's like, does the market know that the rest of us don't know? Does it know that it's going to settle down? Are we just going to bounce around here? Are we not? And we're not like in plummet mode, I guess.
And you know, the one study that I had heard, and I wish I could, I don't want to misquote this because I don't know if it was a market measures or an options type, and it's not in here. But, and I think it might have been Victor, so it might have been on Price of Truth, where he said if the VIX is at 18, which it was yesterday, Jenny, remember we were like 17, just touching 18 yesterday. When you're at 18, it can just as easily pop as it can decline. But if you're at 16, it's probably going to keep going down. So 18 is that like magic number of like, you could go either direction.
There's still some uncertainty, like what's going on, what's going to happen next.
Yeah, I think that was Price of Truth.
So the VIX peak stayed below 28, the lowest peak ever during a 10% SPX drop. Why do you think that is? Like, what's changed?
I'm telling you, the reason is because I decided to get long volatility as the hedge. And that is why I just thought, hey, if we're gonna keep dropping, I've got this. No.
So this is my only thought. And tell me what you think. It used to be market's falling, and people start panicking, right? They start panicking, they start buying puts. So why does volatility go up? Supply and demand. So if there are a bunch of people out there buying puts, it increases the price of puts, thus increasing the VIX. Now, what's different is that we have those zero DTEs. So if people are just using the zero DTEs to hedge their portfolios day by day or short term, instead of just going out and buying the monthly or the weekly or the longer term puts, the VIX isn't rising as much as it used to.
Because it doesn't, because they're buying their protection for a day.
For a day, instead of having to go out for the month.
Correct. I think you're right.
I don't know.
I think you're right.
Okay, the sell-off.
I would just like to state for the record, do you remember how I went to trivia? While you're talking, one of the questions was, what is supply and demand? So I would just like to state, this trivia was made for us. That's the only reason I won. One of them was all airport quotes for my husband.
Yeah, every question was made for you.
There were Disney characters. There were some theater questions. No one could answer anything but Dan and I. It was great.
Oh my gosh. So yeah, this sell-off lacks the sharp volatility spike and capitulation seen in previous declines. And is this going to be what's happening? Is this going to be the wave of the future? Is it? And I'm making this up, and someone's going to hear me and say like, "Oh, that's stupid." But is it because of the zero DTEs?
I think the zero DTEs have changed the game. And I mean, I know they've been around for how long have they been? 2 years now? They're still under 2 years because Jacob's studies say just under 2 years of data.
Right.
Do you remember a time before zero DTEs? Because I don't really anymore. It's just kind of gone.
Come on. It's only been 2 years.
I do, but it's just made me such a different trader because I want such instant gratification because it's available.
Yes. Oh, totally. I mean, yesterday as I'm going through my account, it's like I put on a trade. And again, your trading has to change, right? You can't just like trade one way and stay that way your whole life. Like trading changes as the market changes and as the products change. So I might have a day before put on, I'm selling all these puts or put spreads or this or that. And then I'm looking at it like, oh my gosh, I've got to sit on this till May to make, $2. And then you're looking at the zero DTEs, which are such instant gratification. It does, I think it has changed the way people trade.
I think so too, for sure, because it is a lot more instant gratification. All right, let's keep going, because then the takeaways is the last from this one, because I think we have 3 to go through. Okay, the takeaways. It took the SPX 22 calendar days to drop exactly 10% in the current sell-off, pushing the VIX to 28% at the highest point.
Okay, there have been only 16 occurrences that were greater than 10% pullbacks within any 30 calendar days in the past 2 decades. This magnitude of downside move is rare.
Yeah, I would say it's rare, right?
And it's rare. I mean, we're in the middle of it now, but this is rare.
It is rare. The current correction is the same daily percentage move as the long-term average, close to 0.5% per day. Yes, because 10%, you got 22 days, 45% each. That sounds about right.
However, the peak VIX level as well as the VIX range during the sell-off are significantly lower than in other events. Well, you heard it here first. We're blaming the zero DTEs.
Yes, we are. I agree.
All right. The next one, when to hold, when to fold, ETF profit pivot point. When to hold, when to fold, ETF profit pivot point.
I like that we have to read it twice.
When to hold, when to fold, ETF profit pivot point. Trying to let this sink in.
Perfect. Okay, now let's go to the first slide. Understanding how different ETFs behave at a specific price drop thresholds allow traders to implement precise risk management techniques, optimizing position sizing, and make more informed decisions about when to adjust, close, or maintain positions.
The study aims to provide answers with data-driven results to the following question. How do varying degrees of price drops in SPY compared to major commodities affect strategy performance metrics like strangles, and can we identify a critical threshold for optimizing trade management?
Get your helmet on, Jenny. Let's go to the next slide.
You better read that sentence to me again, Liz.
I know. Okay, so how do varying degrees of price drops in SPY, got it, compared to other major commodities, got that, affect, so how do varying degrees of the price drop affect strategy performance in strangles? Can we identify a critical threshold for optimizing trade management? Okay, that makes sense.
Okay. All right, here we go. And here's the takeaways. We're eliminating the middle. We're just getting to the takeaways. So if you want to see or read this entire market measure, you can go to tastylive.com and go to the Arcot on demand, and you can find this week's market measures there with the slides.
Doesn't this have Jacob written all over it?
Yes, probably, maybe. Okay, let's see. Analysis of 5 major ETFs over the past 10 years reveals the 5% price drop threshold as the critical pivot point between profit and loss for strangle strategies. Yeah, Jacob or maybe Gad.
Okay, but let's just break down that sentence. So over the past 10 years, if you've got more than a 5% price drop, then that's when you're going to get between your profit loss. That makes sense. So basically, strangles will give you about a 5% buffer to the downside. Because that's the 5% price drop threshold is the critical pivot between profit and loss for strangle strategies. That makes sense.
Okay. Price drops below 5% yield consistent profits across all ETFs. Average ROI 2.5%, while larger drops typically result in losses that worsen with severity.
Okay, so
you've seen that. Like anyone who had strangles on in ETFs during that 10% down move took a lot of heat and pain and losses. For sure.
And this makes sense. So if you've got something that's dropping less than 5%, it should be consistently a winner, right? Because you do strangles. You're not selling the straddle, you're selling a strangle. So you're usually going out and you've got some room to be wrong. So they're putting some context around it. 5% seems to be if it's more than 5, you're going to be in the house of pain, as Tony from Mexico likes to call it. And if it's under 5%, it's okay.
Okay, what do we have here? UNG uniquely maintains positive returns even during the 5 to 10% drops while requiring minimal capital. Well, UNG, well, let's look at that after this. I'd like to see how far we can get. I think UNG is such a small product. Do we really get that far in strangles in UNG?
Well, only because you've got TP coming on, you're going to get far, but it's not going to be what you're going to like because it's so little, right? So it's a $20 product, and you can go to the 22 Delta is the 18. So you get $2 and $2, but it's a $20 product.
Let me look at it. I'm just going to, while we're in it, I'm just going to take a look. UNG.
Yeah, UNG May.
And if I go to May, and it's trading $20. So 5% is just $1 away. So trading 20.50. So if I go to 21.50, which they don't have.
No, I know. No, they're not telling you to go that far away. They're saying that if it drops, you're okay. So consistently, it's okay. So you would be selling the 18.25 because you'd go 20 Delta, 20 Delta.
Right here. And 10% move is going to be $2. So sure. Yeah. If it moves 5%, this strangle is going to make money. Yeah.
That's what they're saying. UNG consistently. Even at 10%, they said with UNG, you're okay. That's what that.
Yes, because the 10% move is $2, which takes it to $18.50 or $22.50. So yeah. So I guess here's you can.
Here's a real life example of what we're talking about. If it drops 5% in any ETF, I think you're fine. 10% seems to be the major correction, except in UNG.
Well, I want to see something in SPY. So if I go SPY May and 558, so 10% move would be, let's say $56. So we'll go $56 down, which is going to take me to 500.
Yep.
And you're still getting. So that gets you.
No, but they're not. That's not where they're having you start. You'd be selling the 20 Delta. So that's what they're saying. If you go 10% down, you are in the house of pain. That's what the study is saying. Yeah,
that's what I wanted to look at. So you've got that's a 10 Delta, and typically we'd be here. So we'd be in the house of pain. UNG can move 10%, and we're outside of the house of pain. But SPY can move 10%.
That's all that sentence is saying is where the house of pain is. And I'm actually glad that we went and looked at that because that makes sense. Because if you're selling the 20 Delta strangles, that makes sense. UNG can handle a 10% down move. SPY can't.
Now, since we've already dropped 10% in SPY, do you think there are people who are like, geez, we already dropped 10%. What's the chance we're going to drop another 10%? I'm just going to go in SPY and go down 10% and sell these puts here.
I do. I think there's a lot of people that are doing that.
Yeah.
I think there's a buy the dip mentality out there. I think it's pumped the brakes a little bit because I think the week you were gone scared the children, Jenny. I really, truly do. It was bizarre the week you were gone.
I hope that doesn't happen when you're gone next week.
I don't think it will. I don't think you're going to get 2 back-to-back bloodbaths. You know what I mean?
I hope not.
Yeah.
Okay, back to
it was bizarre.
Here we go. Where did we leave off?
So you did the UNG, and then we went to SPY. So SPY collects the highest premiums, but can experience huge losses during severe drops. Like we said, 5% is fine, 10% is not in SPY.
And when you talk about, even if you look, the 20 Delta put, that was at the 525. So it was about $25 above where it was, halfway to that 10% mark. And even if you're not at expiration, if it drops down that much, if it drops 5%, that put you sold is going to blow up, right? It's going to it's going to increase so much in vol, the price of it's going to blow up. So if you sold it for $5, it might be worth $15. If vol really blows up, if we drop down again.
Do you know what? I want to give I'm going to give us both a gold star. Just I'm going to give it to us both. What I really like here is actually going in, because that sentence made sense but didn't make sense until we actually went and compared UNG to SPY.
Right. No, and then you see like, okay, yeah, you're selling 20 deltas in UNG, you're outside of a 10% move. You're selling 20 deltas in SPY, you're not outside of a 20% move, of a 10% move.
You are not. Okay, and then it says for optimal performance, set mechanical adjustments at 3 to 4% moves to protect positions before crossing the crucial 5% threshold. And that's for SPY. That's for everything but UNG.
But if they're saying mechanical adjustments, so let's say sell that 20 delta put, and we drop 5% or 3%. So I'm right above. What does it want me to do with that put? Because our mechanics are roll down the call. What does it want me to do with that put? Does it want me to get it the heck out of the way and move it down? Or does it want me to pay to move it down?
Well, it says set mechanical adjustments. Maybe it is roll the call down. Whatever your mechanical adjustment is for you, it says just know what you're going to do if it hits there. Maybe it is roll it out in time. Maybe it's get it the heck out of the way and then change your call too. But a mechanical adjustment could be taking in more premium.
So following this from optimal performance, that mechanical adjustments of the 3 to 4% move, our Micron put warning Will Robinson, it's time for a mechanical adjustment.
Yeah, but we don't have a strangle. This results as strangles.
Yeah.
That's a naked put, and naked puts are different than strangles because you can add a call on, but when it's down, do you want to add the call? This is looking at strangles.
Right. Right.
A lot of extra credit from strangles.
What's getting hit hard are the naked puts of the strangles in these down moves. It's the naked puts. So if you're looking at it and you're like, geez, I don't want to roll this call down. We do know people that will just take their short options and just move them out in time.
The heck out of the way. That's what
move them out in time. And if you move it out in time, you can usually move them down and strike without paying for it.
Out and down. Yeah, the heck out of the way. And that was Karen, the super trader from a long time ago. Implementing risk controls at the 5% threshold favor gold stability while maintaining a diversified ETF approach based on each asset's proven price drop behavior pattern. So if you want to see more of this, you can go to, this was a market measure sponsored by the SIBO, and you can look up market measures on demand, when to hold, when to fold, ETF pivot point.
And is gold up today? Is gold up today with the market down?
So let me look. I don't know. Do you see?
GLD. Yes,
it is. Okay, that's my only winning position today.
And I wanted to look at Qs because Qs has a higher volatility. So Qs has a higher volatility usually than SPY. So I just wanted to look at Qs out to April, and you go 20 delta. 20 delta takes you to the 440, 50, 60, 70, 30 points. So it's more than 5% down, but not quite 10% down.
Yeah, more than 5, not 10. That's kind of what they had said.
Okay. Back into the study. Next up, we have, are you using the right option strategy?
Data decides. Do you think Dr. Data decides?
I don't know. Well, maybe he was in, but I don't know if he was on spring break. I haven't heard from Data. I'll have to catch up.
Everybody's spring breaks are kind of, everybody's are a little bit laddered or whatever they are. Yours was so early, I felt like. But so Bat's on spring break. I think Data was on spring break. Bat and Data are together fishing, is my guess.
And I thought of Bat because did you see, and I don't know if this is true or not, but did you see there were like fires in Florida?
No, I didn't see that.
Yeah, so I saw like houses on fire in Naples. Now, again, I saw it on the internet. Could it be fake? Yes. Vanetta called me a grandma today because I sent her pictures of Taylor Swift in a wedding dress. And I asked her, like, did they really get married? And she said, it's AI, grandma.
Did you see, and then we should get back into this, but did you see that Epcot was on fire, or France was on fire?
Yeah, I saw it. It was like a garbage can behind the building.
Oh, it was? Okay.
Yeah, it wasn't.
It's so funny because if I mention a Disney detail, you know all about it. We're like, I don't know where this is.
Well, I don't know why, but I think it wasn't the actual building. It was like, I think the dumpster behind the building. But again, I read it on the internet.
If your Taiwanese sources are correct. Okay. So let's see what this one has to say.
All right, here we go. Following previous market measure on performance analysis across market conditions, we received a query about which strategy, defined or undefined, yields more premium per buying power dollar around the 5% move threshold.
Okay, so let's break this down. So if you're going to take defined risk versus undefined risk for buying power, the buying power is always better in defined risk.
In defined risk. Yeah, for sure. I mean, I could pop back in SPY and we can go to that 5% threshold. So that we were looking at. So I'm going back to May and we're going to go that 5% move, right?
No, just go to the 20 delta. You're putting on a defined risk. 20 delta.
Yeah, so here we are at the 525, 530, right around the expected move. And yeah, $539 using $8,000.
Yeah, make it $10 wide. Make it $10 wide, and we'll talk about buying power.
$143 using $850.
And you got to figure it's going to be both sides. This is iron condors versus strangles.
So if I wanted,
so you're probably going to get a third of the strikes.
But if I wanted that 530, right here, I've got 576 using $3,400.
Yep. But you got to keep in mind too, like we said, it's going to be both sides. This is not just one side. It's strangles. So it's going to be strangles versus iron condors.
Yeah, but you're always going to get a bit better ROI with the defined risk.
Yeah, you're always going to get a better ROI. Okay, to answer this, we explored the potential of iron condors to generate premium per buying power dollar, and why strangles outperform on P&L despite their higher capital needs. Oh, okay.
The specific market conditions where each strategy excels, and how to combine both for an optimized trading strategy. Yeah, I mean, the strangle will outperform because it comes off much quicker, right? It comes off much quicker, and then you could redeploy that capital. The iron condor, you're stuck in it for longer, and then when you're in it for longer, I guess there's maybe more chance that the market can move against you. Whether you manage a small account or a large portfolio, this data offers valuable insights into capital deployment for options trades.
And I think the answer is a combination of both.
I've been trading a long time. I don't sell like iron condors and SPY. I just sell naked options mostly in products I can afford to sell naked options. So I prefer naked options in products that I can afford rather than having to make an iron condor in a product that really is too big for me.
Yeah, I get it, but I think they're looking at just SPY here. So that's the question.
Right.
And so if your account can handle SPY, would you rather be defined risk or not defined risk? And it's interesting because with defined risk, I mean, I just made it $10 SPY, but that is such a loose guideline, right? If you're defining your risk, you could go $50 down. And is it defined risk? Technically.
And you're going to collect close to that you're close to that money of the naked option. But you're using $5,000 instead of 8.
Instead of 8. Yeah. Do you know what I'm saying? So it's such a loose word when you say defined risk. Like, where are you putting it? Do you know what I mean?
Right. Okay. Let's take a look at the takeaways of this study. Iron condors can be capital efficient, 12 to 15% premium over buying power, but have lower win rates compared to strangles, only 4 to 5%. However, strangles offer high returns with more risk, especially in bear markets.
Interesting. Wait. The sentence that actually threw me off is in a bear market, the strangles are better because, however, strangles offer returns with more risk, especially. Oh, with more risk. Okay. I was thinking more returns in bear markets. I was
higher
like,
returns with more risk. Higher returns in a bear market too because the vol's pumped. Higher returns if you're getting in now, not if you were in at the top of the market. But if you're getting in now, yeah, you're getting more premium. You're getting more premium, and we've already had this big down move. So what's the chance of a continued big down move?
Knock on wood, Jenny Andrews. Knock on wood.
Every time we've seen these big down moves and people are throwing in strangles, it's the calls that they get blown through the calls.
And then, so then the next takeaway is conservatively, you can use iron condors as the core, 70-80%, and add strangles when the markets are range bound.
Okay.
I would like to know, can there be a trigger when they tell me it's range bound? Strangles perform well.
Somebody let us know. Someone let us know when we're going to be range bound.
Please, I'd like a ding to go off, a bell. Strangles perform well in slightly bullish markets. That's what I was going to say when I was looking at that one. I was like, what? Down markets. Iron condors excel in stable ones.
Okay.
Wait, wouldn't you say a slightly bullish market is a stable market?
Yes, and yes.
Okay. Now this is semantics, right?
Okay, strangles are more profitable but volatile, and both strategies falter in highly volatile markets. So it's right. No one's been I don't think anyone made money on those 45-day strangles when we were at all-time highs, and we've dropped 12%. So, which is why I think those zero DTEs are attractive because you're in and out, and you're in and out, and you're in and out, and you're in and out.
And so this market measures was on top of the last one with that 5% move because both strategies falter in highly volatile markets greater than 5%, right? So this was the one that springboarded from the last market measures we just did.
Yeah. Okay. That was a good one. To be consistent, apply strict sizing and manage early. Yeah, manage early, strict sizing, balanced strategy using iron condor stability and strangles potential is supported by 2021 to 2025 data. Excellent.
Excellent.
And that is the end of the recap on the market measures. And I thought it was really good.
I love having these, and I love that you took the market measures and you can actually go back and show what we're doing. I like that we do that. We do that on Wednesdays with the SPX studies as well. When we see something that he says, we go back and say, this is what he's saying. These are exactly what we're doing. And I actually thoroughly enjoy doing that.
I do too. I'm glad we have Kai sending us the recap from the week. I'm laughing at this dot on SPY, our one position. That was from unusual option activity where there were like 40,000 of these puts trading, and we threw one in just for fun. If you come back and we're at 455.
Oh my goodness. No. I mean, in the words of TP, we're worrying about other things if this happens in 14 days. But this was part of, remember somebody came in afterwards and told us this was part of a large butterfly.
Oh.
Yes.
Really?
They were, yes. Somebody came in after the fact and said that unusual options activity was part of a very large butterfly. So you can see 100,000 there. Wait, can you go back to it real quick, Jenny? I'm sorry. Because there's 100,000 there at that level. And then, so if that's the guts of the butterfly, there should be 50,000 somewhere else.
Well,
50,000 up. Yeah, if you look at the 490, there's 50,000 there.
Okay, 490.
Yeah, I think
490, 455.
See if you can get another
100,000. I mean, it's
so they were saying that 455 is the guts. Yeah, there you go. It's the 420, 455, 490. It's like a broken wing butterfly. That's what they were saying. We missed this. We just saw the 100,000, went straight to it, bought it. They think that this was a butterfly. Now, once again, could be the opposite. I have no idea, but that was what somebody came back and told us. So that is broken, isn't it? So
55, 65, 75, 85, $35.
Oh, and $35. I guess it's not.
It's not 6-cent debit. Why on earth does it say? I don't know. Because we already have that long put. Because we already have that long put. That's what we'd have an extra long if we.
We're not putting it in, but I just wanted to say somebody had followed up and said that unusual options activity, and that might have actually been while you were gone, and we were looking at that with TP, but somebody came back and told us that.
Okay, well, thanks for the update. I'm going to pop in. We only have 15 minutes to go. 15 minutes until you're on vacation, Liz. I'm going to pop into Twitter.
I'm already drinking. I'm just kidding. This is water.
We're going to see what's going on in Twitter. Make sure we got to everyone. Let's see. What do we have yet from yesterday?
Warren Buffett turns 94 today. Happy birthday to the legend.
Oh, happy birthday. Let's hope we can all learn what to swing at and what not to swing at from this analogy.
Okay, take a look at it. It's pretty funny.
That's funny. What else do we have? Where cars sold in. Oh, so here, this is talking about, thank you. We talked about this yesterday, and here's the answer. We were talking about which car dealers were up and down based on the tariffs. So here, Tesla, 100% made in the U.S. Ford, 77% made in the U.S. GM, only 50% made in the U.S., which is why it was taking a big hit yesterday. Nissan, 52%. Stellantis, 57%. Toyota, 48%. Kia, 33%. Volkswagen, 21%.
We're a German company, so we're a German car company.
Right. Do you have all Volkswagens mostly?
And one minivan.
Yeah.
Three Volkswagens, one minivan. But so what is Chrysler? Where does Chrysler fall under here?
Under GM, I think.
GM.
I think, yeah. Interesting.
I'm telling you. So my Chrysler minivan has a lifetime, and I mean lifetime, bumper-to-bumper warranty, including electronics. They just rebuilt the engine. And we got all new, stuff inside.
Nice.
Yeah.
You're going to be driving that thing. We'll be driving that thing to the retirement complex.
Yeah, we will. We can get all the grandmas in with us when we go.
So Tom yesterday got long Ford. He just went out, or 2 days ago, got long Ford, just went out and bought Ford. I sold some puts in there, even though
he and Pete talked about it today when they were talking about it. Ford's a $9 stock. What are you going to get for the puts? I mean, I'm sure I would rather sell the puts. You can get the puts, but you got to go pretty far out in time. So we just went out and bought it.
I mean, I know they're only 26 cents. I know that. I know that seems like, well, that's nothing. But
I like those strikes, $8.85.
All the strikes in forward are weird. I don't know why. I don't know when it's going to change. They're all weird.
Well, that means they declared a special dividend.
Oh, I guess in the shorter term, but these May strikes must have been around when they declared a special dividend or something.
So that's when you see something like that. That means there is no gaming of the system when they declare a special dividend. They just adjust the strikes accordingly.
Okay, so this is what I don't think is bad. It's trading 975. Here's the 985, so you're 10 cents away. There's over 50 cents extrinsic value, and you're only using 194. This is one to tell your kid about, Liz. $194 in buying power for maybe you won't get $67, but there's at least 51 cents in extrinsic value.
I mean, yeah, if it pops up above, you're going to get that much. That's because you have an in the money put, which is a synthetic covered call. So you do have 67 cents in profit potential.
So Tom might have bought the stock, but I went in and it was not as good of a price here because I did it yesterday. But as far as buying power goes, it's not bad.
No, that's pretty good.
I'm going to add this.
Especially, I was looking at this. Yeah, throw it in. But I was looking at this saying that if it's going to use 50%, you're better off just buying the stock. But you did 50 cents on that is not a bad, 67 cents is not a bad do on that.
And less than $200 in buying power. Yeah. It's pretty good, right?
Yeah. Mm-hmm.
Gonna dig myself out of a hole. $67? How many?
Thousands. You're going to need thousands in order to do this. Okay, so take a look at this.
20 of these are going to bring in $1,360, possibly if Ford goes up. Not too shabby, and only using 3,900. That would give you 2,000 shares of Ford if it continues to plummet.
That's not bad at all. Take a look at. Oh shoot, I was just going to say we were in the seven. The SPOOs were only down a 7 handle just a second ago. 79. Oh, 79. There we go.
Yeah, do you think? I kind of think we might rally a little bit. I know.
I'm talking my book, but I want a little bit of a rally.
Okay, so March 31st. We've seen it before, end of quarter and end of month.
I wouldn't go to SPY.
We had, and I don't think we have to worry. We had that 580 calendar. That's gone.
In excess. No, it was in XSP.
In XSP. Let's see it.
That's what I was going to say. I don't think you want to go to SPY. I don't think we have to worry about that, but that's in just in case. I think it's worthless.
That's an XSP. But if we went to if you just wanted to throw I'm not saying throw money away, and but me personally, I might do something long for Monday. Today, thinking we might have a rally.
Maybe, possibly. We'll take a look at it. Today isn't end of quarter, end of month. It's on a Monday.
It's Monday. No, it's Monday. It's Monday.
Yeah.
How are you leaving for the cruise? You're getting on the cruise. How are you leaving? What'd you do to your positions? How are you leaving yourself for the week?
Jenny, I know you don't want to hear this. I'm trading every single day. I will be in my account. I have exactly what I had yesterday that I have today. I love trading. I love everything about it, and I want to trade while I'm there. I will open up my computer every day. It will come with me to the beach. It will come with me on every excursion. I'm going to bring it with me.
And no doubt you'll bring, when you come home at the end of your cruise, no doubt we'll have 10 new Royal Caribbean viewers.
Probably. And I wish I could get commissions for these, but I'll have a couple people signed up for accounts as well. So we'll see.
Yeah. Why don't you get JD to sign them up?
I'm going to. I would, because I can't get any commission for it, but he can. Can you do me one favor? Because it's really great, and I love Cupcake Trader. Can you go back into Twitter and go top down?
Sure. Okay, top down. The Cupcake. When you're supposed to be working, but it's Friday afternoon.
Yes.
Another 8 hours of pretending to work. Love that.
I love it. I love it.
Cupcake Trader, thanks for watching. Frank Walsh, today's economic calendar. Well, we saw that. We saw the PCE number come in and didn't do much at first, but.
And then it took us out. We saw that thing take us out.
Okay, can we look at bonds? I'm curious to see what they're doing.
So they did not move when the number came out. I actually glanced at bonds before I did anything else. They did not move when the number came out. But what are they doing now?
Now they're up. They're up 116.30.
Yeah, so that means they were in the 15 handle this morning.
Right.
That's low.
Didn't we sell? Did we sell a put spread in ZB recently?
No. I mean, you can hop on the side and see if we tried to.
I thought we did. kind of thought we did, but I could be dreaming or mixing up accounts. No, I guess we never did. And what do we have in TLT? Anything? Nothing.
Nope.
Oh, we did put on the TLT Zebra, and we had got in and out pretty quickly.
Yes.
Pretty quickly with that. All right. Well, we don't have anything to really manage. Today we put on a couple new trades. We sold the put in Archer. These are all baby. Like when I say baby trades, this is a $7 product. I kind of like baby trades because they're not going to take me out. Like here's a $7 product.
That's what we kind of said this morning when we opened up our account. We can't get hurt too much.
I sold put in Ford, another baby trade. It's a $9 product. Sold the $9.85 put in Ford. What else did we do today?
There is one problem child, Jenny, and you can actually address it next week.
Which?
OKLO.
OKLO, don't we just have a zebra? We have a zebra.
But it's super far underneath it. That's what I'm saying. Just leave it if you like. You can decide what to do with that because that's the one I opened it up. It's $4 underneath where it is.
So 22.86, and this is a 28 and a half. Do we? OKLO has been, really taking a beating this week. You could see. They had earnings. They had earnings this week.
Now this is different than like your Fords. It's a $22 stock, but this thing's pretty much cash secured. I'm not
cash secured.
Cash secured, yes.
So if we and it's crazy because here's the problem I have. There used to be so much premium in this underlying. There's not anymore. Look at the rank.
It's got a 4 rank as well.
It's a 4 rank. And so there's not that premium. If we moved it, and I would say if we moved it, we would move it to May.
And this is something that got away from us because usually you're supposed to adjust it when it's at the monies.
So sell 50 delta, buy 270 deltas. How much do we have to put in to move this to May? But here's the problem. Another $473.
Yep.
And we paid $545 for that first one.
Yep. That's a problem.
That's expensive. That's expensive.
But in 20 days, if we sit right here, we're going to lose another 166.
166. So sometimes I think like, okay, this is going to lose 166.
No, you can always switch it to a debit spread. Take your 166 and just do a call debit spread. You've got a 4 rank. Yeah. So those are your two choices. You can just do a debit spread if you want to put less capital in there and wash extrinsic value. Whatever amount of capital you'd like to put in, you can. And then it's 1 to 1.
It won't be too much here. 265 if we keep it in the 20-day.
Yeah. You can switch it to a debit spread. Then you're going to make money.
I moved it to a zebra, but just the 20-day.
Okay, that's fine.
Then just keeping it in the 20-day because it was 265 instead of 5 something.
Yeah. And that was the only problem child that I saw when I was kind of glancing through.
It's annoying because Oklo used to be really nice. There was so much premium in the options. Now, I know for a $20 product, this seems like a lot of premium, but
it's not.
Tricky. And it's annoying. It's annoying. I'm super annoyed because here were earnings. Okay. Like here were earnings. And I bought puts against my stock for earnings. And then after earnings came out, I was like, oh, okay. And I sold my puts. Like, oh, great. Thanks. I made like $100. And in my son's account too. In my son's account, he's just long stock and OKLO, bought puts in there to protect his stock through earnings and then sold it out like this day.
Trying to think. I think JD is still at money. JD, okay, since you gave him Oklo stock, he's got 8 shares. You gifted it to him for his 18th birthday. 8 shares of OKLO. He is still up $12.86.
Is he really?
Yep. Which means he bought it at his purchase price. He must have sold some puts.
Or he bought it right around here. He couldn't have sold puts because they're cash secured. They're so expensive.
Yeah, he must have bought it.
His birthday was in December. So what day was his birthday?
It's in November.
November. So, yeah, I mean, I probably bought it, right? What day was his birthday?
November 17th. So I figure like November 20th, 21st, something like that.
Like right around here, we probably bought it. Yeah. Right around where it is.
He's still up $12.86.
Oh, man. Oh, time flies, Liz. Time flies. All right. Are you
I'm fired up. Jenny, have a wonderful week. Everybody else have a wonderful week too. Good luck with all your guests. Superstar of guests. So everybody tune in. I mean, I might tune in. Maybe I'll call you guys. We'll see. But everybody,
please do not tune in. Don't tune in from your cruise. If you call me and say, I watched the show, you're fired.
Okay, everybody have a wonderful weekend. Good luck with end of quarter, end of month. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. I will see you on Monday. Liz, have a wonderful vacation.
Thanks. See you guys in a week.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddy, Mikey Butler. How are you, sir?
Doing good. We are one day removed from the live event release. So I put a link in the YouTube chat. You can go directly there, sign up for free. You'll get our digital collectible with myself, Nick, and Katie. Everything you need to know about managing and manipulating trades with short premium. But yeah, it's a gloomy day here, but it's still kind of warm, so we'll take it.
Please sign up for that if you haven't already. Major job security. Seat is hot. Yes. We need every bit of support we can get, so please sign up, get that. It's also just really good content. So, get it yourself. Be perfect. Perfect Saturday morning activity. Yeah. I couldn't think of anything better than watching a little trading content.
Quite literally.
While you have a little bottomless mimosa or something like that.
Ooh, there you go.
Yes.
Yeah, that could work. Market's going to zero. We're back to that.
Ooh, I hope not. But yeah, a little bit of a sell-off here. E-minis down 90. At about the low of the session here, a couple points off the low, 5-6 points off the low. 56.50 on the E-minis. SPX sitting at 5,600-ish. You got the NASDAQ down 425. It's the weakest of the group, a little over 2%. The Dow down 540 and the Russell down 40. Everything just taking it on the chin today. Oil futures selling off a bit, /CL down 81 cents, 69.11. You got volatility futures upticking 6% today. 2015, we are in the 20 handle. Bonds up a full point, so bonds having a strong little day here after what has been a pretty rough week or two. Gold blasting through highs, 31.20 here on gold futures, up $28 and change, new all-time high. Silver down 13 cents, but it was stronger this morning. You've got Bitcoin down 3,100 on the future, spot down 2,200. It has been a risk-off day. One of the things that we look at a lot is just volatility, and you've got a very, very flat volatility curve. We've had a wild change in volatility. If you remember in the cherry picks last week, we talked about the curve and how steep the contango was going into expiration. It kind of flattened out, and then it was backwardated, and then we flattened out, and now we've got a little bit of a contango, and now it's kind of back to flat. So an interesting change there with all the tariff news and whatnot.
Yeah. We need the market participants to want to participate in the market again. Like you said, this is just a big, like, this is enough, and enough's enough. Let's just get out of this thing.
Oh yeah, you're saying enough's enough. That's it.
I'm saying that's what the big players are saying, with just everything down, except for gold going to new highs.
Yeah, it's definitely a rough day. I mean, when you look at like just the S&P 500, you have the Lulu down 14% after earnings, $47 to the downside. Palantir, big move there. Netflix, a big move, $38 and change. Amazon has just been super, super weak today, down $7 and change. You got Google down 5 and change. I mean, it's a bloodbath. Micron, Qualcomm, AMD, you can't hide today.
Yeah, we had I did the 100-point wide iron condor yesterday, the 300, 400 shorts with 10-point wide wings. That one is down today with Lulu below 300. But I'm just going to hold on to that. If we get a 10, 15, 20-point rally over the next week or so, it'll be a profitable trade. So I'm not going to make any adjustments. Yeah, 20 days left. So still some time to see a reversal if we can get it. But I looked at rolling out to May, but the markets were so wide in the May cycle that it just didn't make sense. So just sitting in April, see if we get a little reversal here, move out of the money, and we'll call it a day.
You're probably out like $200 there too, right?
Yeah.
Maybe a leg out of the call spread or something like that. That was really the only thing I did today. It's tough because we've talked about, managing positions when you get kind of the move, just given that the market has been so volatile in both directions. Trim long delta into the up moves, trim short delta into the down moves. That's kind of been the MO here. And so into a move like this where, I primarily lean, directionally long, short volatility, slight lean long. Obviously, you have positive theta decay, or at least mostly positive theta decay across most of my positions. But in a day like today, there's not a lot of things that I can trim. One of the only ones I was able to do today, or the only trade I was able to do today, was close out of this call spread that I sold against my SPX put spread. So I had an iron condor here in SPX. I've been trading this on and off. I think this started here. We did it together like in the middle of February. A big wide iron condor, 5,600, 5,580, 5,625, 5,645. That was my trade. I think you did one a little bit slightly more bullish. And $10 wide, so a little bit tighter of a spread. But I took that spread, into the first down move. I closed out of the call spread. I did that at $1. I sold it out again into the up move. This was on the 19th. And of course, I had no idea that would be like basically near the highs, right? So when we go to the 19th here, we were trading like, 100 points higher or so. You can even see it here on the follow page. We're trading at 56.64. You get a down move like this. I sold this out at $3. It's now marked at 95 cents. Took the $2 out of that. It's a nice hedge, but I now have an at the money put spread. It's basically a scratch right now with those adjustments. But that's an example of the kind of things that I think are really prudent in this sort of market. Is like, when you're getting the up move, I sold the call spread. I took some heat on the upside because the market, rallied another 100 or so points. But that was a good piece or a good adjustment to make on that position because you have to sell volatility into that move. You have to get a little bit of short delta because things are moving around. And so I think that's a good example of just kind of managing positions and not being dogmatic with your positions. A nice little vocab word for y'all of like, being a little bit flexible with your trades. And, you don't have to look for a specific exact profit target or exact loss target or whatever. Just take what the market's giving you at times, especially on days like today where it's mostly pain and it feels good to take something off that, is a profitable piece of the trade.
Yeah. Being more flexible when markets are volatile. Because really, when we have a calm market, that's when we're holding trades for 20 days, getting 50% profit, theta decay is kicking in. But in these markets where the market's up or down 100 points every day, we're getting delta moves that are going to completely offset any kind of theta implication. So that's really where like, okay, market's down 80. Maybe you want to place a neutral bullish trade. If we're up 100 next week on Monday, you're probably closing that for 25, 30%. You're not waiting for 50%. You got a huge delta move and you're well ahead of your profit expectation in that situation. So being more nimble and flexible in high volatility is always how we're going to approach it.
Yes.
I didn't do anything this morning just yet. But I've got definitely some cash on the side for some new trades if we have some trade ideas.
Beautiful. I'm in for it. I wanted to bring up, because I know Tom hasn't really mentioned it yet, but Monday is SPX, our Guess the Market contest, first quarter guesses. I think I asked you this earlier or sometime last week, maybe earlier this week, of a guess of how many people you thought would be around this number. It's kind of a shocking stat that around 20% of all the guesses were around this mark, which was well below the standard deviation expected through quarter end. I mean, just looking at the distribution here in terms of the guesses, it's obviously skewed to the upside, but still a little bit of a shock to see, a lot of people thinking there was a 6, 7, 8% down move baked into the market in the first 3 months. Just shows how smart our peeps are.
Yeah. Strong Q1 showing, basically flat or down from where we started. So love to see it.
Yes. It's an interesting one. And then just for the names that are around here, so like SPX, we're at 5,600 ish. If we go to slide 10 here, these are the name. You know what? Yeah, 9 and 10, slides 9 and 10. There's like 8 slides of names because the expected move into Monday is like 100 points or close to it. It was close to that when I was looking at it earlier this morning. It's sitting at 76 right now. If you go to like a one standard deviation, 5,700-ish, and then on the downside, 5,500-ish, so about 100 in either direction. But we got some people that are on the dance floor here. It's nice to see a lot of people taking my advice of, differentiating a little bit and don't do those round numbers. I actually put in, because everybody's around like the 50s and the 100 marks. So for those names, I just batched them all together because, if they win, it's, you're diluting.
Yeah.
You gotta differentiate. You gotta game theory it. So hopefully for next year, everybody remembers that, to put a little game theory into it. But it's cool to see that we got some people there. I will say, and I will give him his shout out, Tom is relatively close. He has 57-27. He is definitely the closest of the group. You got Jenny at 5,800. That's a pretty nice little guess there, but the rest of us were definitely bulled up into the quarter. Not super bullish. We were, conservatively bullish, except for you.
Yeah.
Being very bullish.
I was bullish. I was just flat across the board. What did I do? 63, 37. Oh, no, I did a bunch of big numbers. Great.
Yeah.
Yeah, I'm dead wrong.
It's okay. You got time.
Look at you with your game theory. 61, 57, 57.
I mean, why not?
Yeah.
You just put weird numbers in there because you got to.
That's the beauty of this. That's the beauty of this, though. Someone is going to win.
Yes.
Someone is going to win.
Yes. And it's $1,000 per for the first 3 quarters, and then the fourth quarter is an extra 2. So somebody be getting cash. It's beautiful.
Love to see it. Yeah, well, we are streaming live on YouTube. If you want to join us, just pop over to Tasty Live. We've got the live event digital collectible link pinned to the top of the YouTube chat. I've also got the cherry picks in there. I'll throw in the Tasty Crypto newsletter. That's coming out tomorrow. So yeah, we got a lot of just free stuff for y'all.
Yes.
Thanks for tuning in. Let's get to some questions here. How about it?
Cool. Let's do it. E-mini's down 100.
Yeah, well.
99.
Big red.
I should know. Oh, there we go. We got 100. The big red.
Big red.
Spooky. Scary red. Not sexy red.
Anyone else getting long Lulu here into the sell-off? I'm technically already long with my Iron Condor that's in the money, so I don't need to get longer. It's trading for $500, so half the width of the spread as expected. But yeah, 20 days left. If we get a rally to 310, let's say 315, 310 in the near term, we'll be just fine. But yeah, I don't mind getting long here into this big sell-off if you're willing to do it.
Stock's gotten killed here. I mean, selling just a put spread into this move might be interesting, like the 270, 260.
Even a calendar spread. Like
May, April, or like June, May?
Yeah, May, April, the 320 calendar for $4. If you get a 10, 20 point rally, that'll be a $100 winner probably. But yeah, lots of ways to play it.
Mm-hmm.
Definitely defined risk though.
Yeah. This is a huge. Yeah, it's a big move.
It's funny.
I've been looking at a lot of these stocks. Sorry to cut you off, but I've been looking at a lot of these stocks and just seeing how big the moves are relative to like the last couple of years. Like one of them that stuck out to me was Target, which I saw was trading at like 100 earlier today. I mean, some of these moves are reversals of 3, 4, 5 years. It's pretty wild to see this.
Yeah, it is
Put some
definitely.
context into the size of this move in individual names versus the market as a whole.
Yeah, but it could be a nice opportunity if you've been looking for a time to get long. Like if you're looking to buy shares, as a very basic example, like every stock you can think of is down. Every household name is down 30% on average, I would say.
Yes.
On a long straddle, is the P&L on the trade if the underlying moves more in either direction than the theta decay while being held? Yeah, you regardless of theta decay means nothing on a straddle. I shouldn't say it's nothing, but that's not what you're focused on. When you buy a straddle, you want the stock to move aggressively in a very short time frame. So like in SPX yesterday.
I just pulled up the in Target. You can kind of see it here.
Yeah, there you go.
Just to make it a little.
Sure. So yeah, you have a $10 straddle here. It's probably more expensive than it was yesterday, but yeah, you're looking for a 10-point move in short order, and you'll make money on one side, you'll lose money on the other, but the long straddle is a explosion in any direction type of trade.
Yeah, you're playing for realized volatility. So you need your long vol. I know that you would benefit from a big up move, but it price volatility is what you're long here. The decay aspect of it is obviously going to go against you, but your long price volatility, if you are long a straddle, you want a big move in either direction. And it's important to understand with this is that, you need it to be like a $3 or $4 move in either direction is not what you need. You need a 15-point move in either direction. And so, assuming it's over some period of time. If it's, $15 move in one day, or $10 move in one day, that's probably a good thing. But if it's a $10 move over 3 or 4 weeks here, you're not going to be profitable on this trade.
Mm-hmm. Deep in the money SMCI put spread in April, 45.40 put spread. How would you suggest managing it? There's nothing to do here. It is trading for near max loss. The only thing you can do with put spreads is roll it out in time before it goes in the money. So that was before it dropped below 45 for you. But you probably placed it into that sell-off up there. So there's nothing to do here. You just need a big rally that's outside of the expected move. If you're willing to risk 65 cents to try and get it, go for it. But you could also consider just closing for less than max loss, since this is a 90 delta short option, which means it's a 10% probability of expiring out of the money. You could save yourself 65 cents and just set up a new trade if you're bullish now, if you're more bullish now. But yeah, it's a tough one.
Yeah, I mean, you can't, once the spread goes fully in the money, especially that deep in the money, there's not much you can do there. We talked about this yesterday, I think, with a UAL position where, the trade is done. You define the risk and it's basically at a max loss. It's just a shot to the upside. Your risk reward moving forward is obviously skewed in your favor. You can only lose 60 cents. You can make up to $4 or $5 back. If you wanted to be long SMCI, I would honestly probably just leave the put spread on, just because you have an asymmetry there of, if there's a $3 or $4 or $5 up move, you probably make back a lot more than you're going to lose over that period of time. But really just taking that position and kind of forgetting about it and putting on a new position that fits your current assumption. If you're bullish, at 45, you're probably bullish now, and I would just roll into, a new at the money put spread or out of the money put spread, depending on if you want to be, as directionally bullish.
Yep. Now that we're at 21 days with the SPX Iron Condor, should we do anything further? So I have the 5,700, 5,690 short put spread. So I'm just holding. It's right there. I'm not going to roll down the calls. I'm just going to let it go because I want to be bullish here anyways. But do you have a similar one?
Yeah, and just to point out, your spread, although it's 100 points in the money, is trading at half the width. And so it tells you that it's still a 50-50 shot on that trade.
Yeah.
Regardless of what your feeling is of whether, we're going to get there or not, based on the market we're looking at right now, it's priced as a 50-50 shot. So, you're only out what, $200 on that trade?
Yeah.
Something like that on what is a 400-point move to the downside, I think, around when we place that.
Yeah.
300 points, something like that. So it just gives you an idea of volatility and how high volatility is currently. Obviously, you could leg out of your call spread if you wanted to. I have the at the money put spread. And again, this is one where it's going to trade for half the width. It's still a 50-50 shot on this trade as well. And it's trading at $8 and change. I put the original trade on in SPX. We sold it at $6.60. I legged out of the puts or the call spread for $1.50. So that's a debit. So it drops you down to $5.50. I then scalped out of, I did another one on the 17th or on the 19th. I sold it at $3. I just bought it back at 95 cents. So my overall trade right now on this position is basically a scratch. I mean, I have this on for like $7.70. I mean, if we take this together, I made 205 on the verdict. Oh, you can't see it on there. Let me do this. So on the scalped call spread, I made $200. I'm out $280 on the spread that, I started from the beginning with the adjustment. So we're right there. I mean, we're on the dance floor.
Yep. And yeah, Leonardo rolled down today into the sell-off. So you're definitely getting the least amount of credit for that roll down, rolling into a 100-point sell-off. But you now, I would not do anything further if you're trying to actually make money on this trade, because you're still at, even though you have 100 points between your strikes, your pop is only 15% because your 100 points only covers a fraction of the expected move. And you need the SPX to be within your short strikes with a couple days left for you to be profitable on this. So that's kind of your last ditch effort. You reduce basis by rolling down, but this is kind of where I'd leave it.
Yes.
5 days ago, I sold a strangle in DraftKings, 35.47 in May. Current delta is 30, thinking to roll down the 47 call to 41 for 88 cents. Does it make sense?
I have a directional lean of long here, so I'm biased. And I have the 40 strike in the money put. I think I'm out about $200, almost $300 on this trade net. Through all my rolls. And this started in February. So I have a long delta bias. So that's, my opinion here. I think I would go to like the 40 strike just to flatten out your position, basically, to 10 deltas, but the 41 is basically the same thing too. And I want to collect $1. So if you roll down from the 47 to the 40, you'll pick up $1. That would be my delta adjustment.
Yeah. But yeah, it's totally fine.
Do you
totally
have a DraftKings position?
I do. I have the April 42.5 straddle.
So you gotta take that and do something. Pop and vol.
Yeah, I had the 42.5 50 strangle, rolled down to the straddle. And now here we sit.
Go to the 40 straddle in May?
Yeah, I was trying to avoid rolling so deep in the money, but now I'm stuck.
Yeah. I mean, it's down $5 to $7 in the last, week. Rolled with a 40 strike in May, gives you a tiny little 16-cent credit, but puts you right at the expected move on the upside.
Yeah, I'm actually going to go to a 39.42 inversion.
Same.
And pick up $1.50. My net credit would be $5 against a $3 wide inversion. So we'll do that.
42.39.
42.39, $5 net credit overall.
I'm showing a $2 credit on the roll. You might have the wrong expiration.
I had the 42.5 April.
Oh, 42.5. I thought you said 42. Okay, gotcha.
Yeah.
All right.
Just rolled into that for $1.50. So net credit, 518 on a 3-point wide inversion brings my break even to the stock price, pretty much.
Beautiful. Great job.
Thank you. But yeah, DraftKings has such high IV, you can do whatever you want, Goran.
Yeah, it's great.
I know it's recommended to take profit at 50% of max credit on short premium trades, but what happens after you roll? Are we still looking for some sort of profit percentage from the credit rolled, or just get out with a scratch? I like to say just keep your monetary target the same. Don't change the percentage.
Yeah.
Because keeping the monetary target the same makes it easier to get out, because you're going to collect more premium. And if you just keep that monetary target of, let's say, 50 cents, let's say you sold a strangle for $1, your 50% profit's 50 cents. If you roll and you roll and you roll, and all of a sudden you have $4 of premium, buying that back for $3.50 will net you your 50-cent profit, but it's only a 10% total credit, if that makes sense. So you went from a 50% target to a 10% target just because you've collected more while defending the trade. And closing for a 10% target will allow you to close for much sooner than expiration. So when you're defending trades, you don't want to keep increasing the profit target, because you'll never get out. You'll just be in it forever.
Yeah, and when you're managing a trade, it's usually not in your favor. So, trying to get more profit out of a position that's already a bad position, it makes it even harder. So, keep your same sort of exit target as opposed to trying to move the goalposts.
Yeah. Let's see. Brad, after today, I'm going to need some help for the SPX contest. Where are you at? JC is at 55.73. That's pretty close.
Oh, there you go. That's right on the table. It's pretty wild to see. We've been 100 points is probably the biggest, or 75 to 80 points is probably the bigger expected moves we've seen in quite some time. All futures above 27%. What are you giggling about?
Just Michael Saylor. Mind Over Matter said ripped Saylor, so I thought something happened. But then I just tweeted. I looked up Michael Saylor on Twitter, and it's just, you do not sell your Bitcoin. Diversification is selling the winner to buy the losers, blah, blah, blah. Whenever the Bitcoin markets are really red, he comes onto the scene and just posts the most ridiculous things.
Of course.
Which you got to love him for.
Yeah, you got to respect the, the
blinders.
Fervor. Yeah, blindness to the world.
Let's see. Downside call credit spread in Lulu. 310, 320 in May. Ooh, so you're looking for a little compression to the downside here.
Yeah.
I don't know. I think it's fine if you want to do it. I just don't really like selling into the hole with a product that you got to imagine people want to buy at these levels.
I don't know. I agree. I think it's hard to do into a 15% down move in Lulu. If you're still bearish, even adding a put spread, might be a nice little addition here. I mean, you could sell this at $3. You sell a $1 or $2 put spread against it, and you have risk to the downside, but you're still playing for price action to move lower.
Yeah. We got a E-mini futures. Oh, a micro E-mini futures. MES. 5,400, 6,000 April end of month strangle.
5,400. What was the upside? 6,000.
So yeah, you're fine. Would you recommend recentering or holding? I would say it's really not going to matter too much, just because these strikes are still outside of the expected move. So I mean, if you wanted to recenter, you could move the 6,000 to the 5,900 and move the 5,400 down to the 5,300 for a scratch, something like that. But it's not going to really change the dynamic of the trade too much.
Yeah, I agree. I mean, they're just like the 6,000 strike is a 30 or 40 cent option. It's just it's so small. I might even just close it and be short the puts.
Mm-hmm. So David, going back to the straddle, he's looking at a 4-day straddle. If you give us an exact example, we can look at it. But yeah, short-term straddles are going to be cheap. And yes, you need the market to move to a strong degree to offset your implied decay on that position. So the theory is still the same. You just don't need as much of a move.
On a 4-day?
A 4-day.
Well, I mean, you need the move now.
Yeah.
Like
if you did a 4-day in SPX or SPY, you're profitable today for sure.
If you put it on yesterday.
Correct.
Yeah. But if you put this on today and Monday we open flat, you're going to be out $2,000 minimum
on SPX.
If you're doing anything short term, you need that move, now.
Mr. Pillows wants to get a little bearish on oil, but IV is low.
Yeah.
Oil
vol is in the dumps here. OVX CGI is how you pull it up in the platform. That's a CBOE thing, not a us thing. It's a tough one. /CL. I mean, IV rank at 12. It is certainly a tough trade. I think you got to do both sides just because volatility is so low. If you're going to do anything here, I would just do the Iron Condor because volatility is just so low.
Yeah.
It's hard to be short with that, with no vol.
Yeah, you can skew it to be short.
Yeah, yes, of course. But you still want to get the downside premium too, because otherwise it can be, you get no vol exposure.
How do you guys feel about using a front ratio spread to time a put? We need more info on timing a put. Going to try it on Intel. Sell 2 to buy 4 for a 2-cent debit. Then if it drops lower, I'll leg out of the long legs, I assume.
It's a lot of ifs.
Yeah, that's the problem. It's a lot of ifs.
Sounds great, man. I wish if I knew that the market would be down 100 today and up 100 on Monday, this whole thing would be pretty easy. But that's a tough one. But yeah, I mean, I would say the things that you have in your favor today is that the stock is down, volatility is getting juiced up, the market volatility and the market itself is juiced up right now. So selling, puts into this move is certainly, is priced advantageously relative to what we were looking at yesterday. I mean, this put that I sold yesterday, I think it was like a 10 or 20 cent winner at one point. It's now up 30. And by up, I mean the price is $30 more expensive today. So, you're getting paid another 20% on what I was getting paid on it yesterday. So that's great. But yeah, it's hard to time that sort of stuff.
Yeah. And you're doing it looks like they're doing it backwards, where you're selling 2 of the 21s in April and buying 4 of the 20s.
May?
In April, I believe. But either way, it's a put credit spread where you have more long options. So I don't hate it. It's just that, like, what is your intention with this? If Intel drops, you're going to sell out of your 4 longs and then just leave the 2 shorts on. Like, either, I don't know what your intention is, but you have to be comfortable with undefined risk or converting this to undefined risk, and you have to have the capital to do it, because your buying power is going to explode when you get rid of the 4 longs.
Yeah, and just because the stock drops doesn't mean that these puts are going to be profitable, long puts. I mean, just today they're up 8 cents. If you get a contraction in volatility, or if this move doesn't materialize until 2 weeks from now, those puts probably don't move all that much. It's not the stock isn't the stock price, and the stock change isn't the only thing that you're trading here.
Correct, Mundo. Ding, 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 ding. Yeah, I think for Intel, like, I would rather just do, like, buy the 22 and sell 2 of the 21s for a credit, small credit. And then if Intel drops and your intention is to take shares or plant your flag at 21, you now have that small little embedded spread there, and then you can just roll the extra short put. It's a much easier trade with a lot less ifs.
Yeah, and you don't miss out to the upside.
Yeah.
You can leg out of the 22 put. You get a move to 21. That the 22 strike probably goes from 70 cents to $2, and you close out of the put, and then you're long via the at the money short put.
Yeah. So. Look at that chart on Netflix. VIX is still rising. Get out of that iron condor. Do you have an iron condor in here?
I do have an iron condor. I don't think it's moved all that much. It's down about 30 cents here. I have the April, so maybe I leg out of the upside here. So I did this for $3.06. It's marked at 337. I might just hold it one more day and see if I can get another like 20 cents out of this. Close it for like 50 cents, or maybe even roll it down. What's the high in Netflix? So the high is 1050. Let's roll to somewhere around the 1050. Let's do like the 1025, 1035. Markets are junk. Not junk, but it's $1,000 product. So, you should expect this sort of wider markets. Let's see if we can get filled at like $1.20. And then we'll adjust it there. Vol's exploding. You might as well just take advantage of that piece.
With the increase in vol, would you suggest selling premium now in May? Sure.
No. Yeah, if you've somehow held off until now.
Yeah.
Definitely looks interesting. I mean, I was looking at like Nvidia this morning at 109.
Yeah.
I mean, this is an interesting point. You could sell the 100 strike puts for $3 and change. I mean, we haven't traded 100 since, middle 2024. Certainly an interesting point to start.
Yeah.
dabbling.
Yeah, a lot of these stocks are beaten up. But even in SPX, you're getting a little increase in vol. And if you're trying to set up a new trade in May, like think about how we did it last time. What did we do last time? When we placed that original Iron Condor, it was a
it was 50. We were at 59.50.
Yeah. So we did
400 points, 350 points.
Yeah, mine was 550 points wide between the shorts.
Yeah.
So what does that mean
300
today?
on either side, yeah.
Yeah. So like today, if I set up a new Iron Condor in May, which I'm actually going to do right now.
There you go. Do it.
I'm going to do the 5,300, 5,290.
Okay, leaning a little bit bullish. 5,300, 5,290, yep.
And then I'm going to do the 5,900, 5,910.
Oh, okay. So you go a little bit more aggressive. This is like right at the expected move. This is more of it's still a relatively tight spread. It's a chicken Iron Condor, but it's a vol play. You're playing for volatility to contract. The distribution to come in and for the stock to stay somewhat range bound, but really for volatility to come in rather than the directional need.
Yeah. So yeah, slightly inside the put side and then right at the call side. But yeah, a 600 point range. So this is a good example of volatility. When I placed the initial trade, I had a 550 point range between my shorts and I collected $3.40. This trade, I have a 600 point range and I'm collecting $4. So 50 more points and 60 more cents because volatility is much higher.
Yeah.
I'm just letting it sit there at $4 exactly.
There you go.
What is going on in NVIDIA? I'm with you on the NVIDIA 125, 135 diagonal. That's what I have.
What do I have here? I did that in my Johnny Trader account. So we're out about $190, the 125, 135. The 135 is trading at like 97 cents. So you could take that and roll it. I think I'm going to sit with it for a minute. But this account probably needs something.
Yeah, I have the 115, 125. Long June, short April. So I'm going to roll down. I'm going to roll down the 125 to the 120 for 75 cents. I'll be within my range. So my credit here will be like $8 on a 5-point wide spread. But my intention will be if we get NVIDIA back up to 120, I'll buy back April and roll it up and out to May to re-diagonalize it for 10 points. Just a little micro hedge here.
I'm going to do a little upside crab trade. Buying the 115, selling 2 of the 125s in May, and then buying 1 of the 135s. So it's a 10-point crab trade. I just got filled at 482.
There you go. So yeah, I was filled on DraftKings, $1.50 to roll to a 39.42 inversion. Filled on NVIDIA, rolling the 125 short, called down to the 120. And that's about it. Sitting on SPX puts, credit spreads, and Iron Condors. Short puts are the 55.70, 55.90. So yeah, right there. Too close for comfort.
Dude,
but
Shopify is my kryptonite, I think.
Yeah, Shopify is tough. I mean, look at this thing.
It just, we've done so many anatomy of a trades on Shopify that I should probably learn my lesson at some point.
You should just open a Shopify account, you should open a Shopify account, e-commerce site, and just sell your own merch.
There we go.
To offset.
Rolling down the call there. So I had a 10-point wide call spread and a 20-point wide put spread. So rolling down doesn't use any additional buying power here. I have $5 more of a roll down I can do if need be, but just playing the game here.
That's all you can do is play the game.
What else do I have here that I could probably do something in? Coinbase. See, it's a tough call when you want to manage some delta and you see these big moves. You know, at the money spread in Coinbase with 50 days to go till expiration. I don't want to do anything right this moment.
Yeah.
Same thing like SMH too. I don't know. Let's see what Coinbase vol is.
Lulu Strangle didn't go so well. I mean, actually, I don't know. Even if you had a 300 short put at your short strike in April, like you're probably still profitable.
If you did the 300, 400?
Not if you did the 300, 400, but if you did like the 300, 350, if you did the 300, 350 strangle, you're probably making money.
Yeah, that was $50 on either side. So the put has increased by $11, and then the call has lost, $14, $15. So you'd be up a couple $100.
Yeah, but if you're in May, then yeah, you're probably taking heat because the May IV crush was not nearly as much as the April one.
Yeah.
It's getting chopified. Shopify is.
Shopify chops around. That is no doubt.
No doubt. All right, that is the end of the YouTube chat. Give us some more trades here. 10 minutes left.
What else can I put you in?
I'm liking the Japanese yen move.
Yeah, we're getting some money back there. That's nice to see.
Mm-hmm.
Did you do my FCX trade?
No.
Should look at that one. It's pretty high implied volatility. Or actually, I'm looking at FedEx, FCX. 80% implied volatility. It's a play on copper, HG, which has had some violent swings here. It's a big product too. But so when I placed the trade, we were about $1 or so higher, maybe even more than that. Let's see. So I did this at 40.35, so like $1.20 higher. 38, I did the call ratio, buying the 41, selling 2 of the 44s. This position hasn't moved all that much. I'm out about $40, but if you want to do this at like an even 150, which is right around what I did it at 155, you can move the put out one strike, or you can move the call ratio in a tiny bit. It's an interesting little setup for you. Yeah. $400 in buying power, $500. 600. Not convincing.
I like it. I'm just looking around. I'm looking around. I like the financing the ratio idea.
Yeah, you do the ratio basically at a 10 or 15 cent credit.
Let's see. Wow, you're not the only one. You're not the only one trading FCX. That's interesting.
Yeah, it's in play, dude. I mean, copper has been moving around. The metals have been nuts. You have gold, new highs. Silver had a huge move yesterday. Oh my god, I typed in silver, SI.
I'm just gonna I'm just going to
Yep.
replicate your trade because your trade is trading for almost $2 now.
Yeah. No, I still like it. I'm holding.
191 I was filled at.
I mean, it's one of those like, it's got a high potential return on capital. Volatility is relatively low. It's a position that if it goes significantly against you in either direction, you can roll and manage and deal with this position over time.
Yeah. Coinbase bullish trades down here.
Yeah. I'm in it.
I'm already in. I have a 210 calendar that's out $100. Long May, short April.
On the dance floor.
Mm-hmm.
Yeah, I have an at the money put spread. So I closed out of what was a deep in the money spread, but it was up around 200. This is another example of just like managing positions when things go your way. I closed out of this put spread. I had the 210, 220 short put spread in April. Stock had a rally up to almost 200. I closed out of that, and then I went, and the next minute I sold an out of the money put spread, the 175, 160. It's a little bit wider, so there's more risk on the downside, but it saved me a pretty penny. I mean, this trade is out, let's call it $250. It's marked at $650 right now. The put spread, in the money put spread that I closed at $7 is now basically a max loss. So I'm out the same $250, but I have a May position that's right at the money as opposed to an April position that's 30 points in the money. So, it was not good because I'm still losing money, but it was a good adjustment to make into that sort of move.
Love it.
I did it, there. What can you do? If we go a little bit lower, I'll have to sell the call spread against it. It stinks.
Yeah. Steve, looking forward to the whiteboard special collectible thingy. Yeah, it's gonna be great. We're watching the whole thing through after this show. Final rundown.
Yes.
It's gonna be great. But yeah, click the link at the top of the YouTube chat. You can get it for free.
Yeah.
Let's see. I just
One
lost
more?
something here. Aaron was asking about NVIDIA. 130 short put in May. Is it too early to roll? I mean, technically you can if you want, but if you rolled a June, for example, you're only picking up another $1.
Yeah.
Ish. So it's just like you don't have assignment risk here, even in May at 130. So I would be holding it.
I would sell a call against it. I mean, you're 20 points in the money. If you sell the 120 strike or the 125 strike and you get a 20-point rally, you're going to make back, $1,500 on your in the money put, and you're going to lose 200 or 300 on the call. You're not even going to think about the money that you're losing on the call because you're going to be happy with the adjustment. So I think you sell the call.
Yeah.
Got to take the medicine sometimes.
Mm-hmm. Agreed. That's it. Thanks for tuning in. If you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Click the link at the top of the YouTube chat. Get that digital collectible live event. Comes out tomorrow at 10 a.m. Central. If you're not able to watch it live, it'll just be delivered to your portfolio on Live Bash, and you'll have it forever. So yeah, hopefully you enjoy it. We certainly enjoyed doing the live event and meeting everyone that came out and doing this whole thing. It's always fun. This one I think is really good.
Yes.
So hopefully you guys like it. But yeah, sign up for that. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central on Monday, and we'll see you then. Peace.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I'm serious though. No, this is all seriousness. Go on you have Amazon, right?
Oh my God.
Stop. Well, it's a legitimate question from Tom, because Tom doesn't have Amazon. Tom doesn't have Amazon. It's a legitimate question. I don't have Amazon.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that, because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory. Lord, I never
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
We are back. It is Friday, March 28th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's a very ugly end to this week if you are an equity trader.
Yes, it is. This is not what I had on my bingo card for today, but this is some serious damage getting done, and it's interestingly stuck in one place, but for your favorite assets in the gold space. It's not what you'd think you'd see today.
Well, we're finally seeing bonds respond positively to some equity market weakness, which is
yes. I'm not mad about that.
We'll have to do some, we're holding on to a short ES put spread here on Futures Power Hour that we're going to have to cut for I think it was trading at an $80 loss, which whatever, $80 is whatnot. And not in the face of a gold rally, Ilya. Oh, I tried using ChatGPT today to put together an image of me as Gollum holding a gold ring.
Did it work? They shut down the image generation yesterday.
No, thankfully it didn't work. I was doing it with Nick Batista here, and when it was coming together, it was making me look like Krampus. And so, but we're going to turn to the charts here, and we're going to talk about why the charts don't lie, or in the words of the great Rasheed Wallace, why ball don't lie. For those that don't get the reference, Rasheed Wallace was a basketball player in the 2000s, played for the Pistons, the Knicks, Portland Trail Blazers. Whenever he was called for a foul that he didn't agree with, and then the guy missed a free throw shot, he would yell, "Ball don't lie," because the ball knew the truth. It wasn't an actual foul. In the same sense, the charts aren't lying here. A few days ago in the S&P 500, as we turn to the slides, we see here that the market has that evening star candlestick cluster against that 1 month moving average. You have the loss of momentum. There's absolutely no follow through whatsoever to the upside. Now you see this big break lower, and you have to think that that was a bear market rally through and through. This was a week without much significant economic data, although the data that we received today, of course, consumer confidence continues to look ugly. Inflation expectations are going up. The savings rate from the personal income and spending data now at its highest level since June 2024. So anticipation of let's start to put some money aside to get ready for the coming storm. Anticipation of a recession, or at least a rise in the cost of goods around the corner. Will the calendar provide us anything to disrupt this over the next week, this idea that's coursing through markets once again? Ilya, this is a big week for markets, right? We've cut the calendar in two here for the sake of this conversation. It does end with non-firm payrolls, but well before then, you're going to have a good deal of events, particularly out of China, to start the week. So first half of the week, we'll talk about this in two segments, Sunday, Monday, Tuesday, and then Wednesday, Thursday, Friday. What are you paying attention to in this first half of the week?
First half of the week, I think the story seems to be China, but China hasn't really been very market moving outside of China, because China has really been an island unto itself with their ongoing economic turmoil. And you can sort of paint a lot around here with China and the RBA together and look at that as a kind of Australian dollar idea. And that's really what I'm interested in here, because the Australian dollar has really been stuck in a range here. It's not necessarily falling out of bed. You might think it could with this risk-off momentum, but that's not going on here because the dollar itself is a little bit weaker also. So I'm looking for some real capitulation in this China knows how to do stimulus hopium narrative, because the data suggests none of it is working and continues not to work, and Beijing continues not to get the hint about what isn't the thing to do. So I think there could be something here that's tradable, and I'm going to be watching in particular the Australian dollar. I'm also going to be looking at the yen for this. If there's a risk-off push here, yen should go higher. So I'm going to be looking at that closely, and the euro as well, because we do have this inflation data coming, and the euro might be one of the more interesting stories in the whole market at this point, because we might be looking at the start of a long multi-quarter, if not multi-year advance. And so there's maybe something really, really compelling occurring in the euro. I'm back long, and I think we could get something really interesting developing here. So I'm watching that as well.
I mean, the interesting setup right now is if you're going to have all of this spending occurring across Europe, it's probably going to push real yields higher as inflation ticks up. And to that end, the inflation data that shows, or at least would provide the ECB the framework to continue its rate cut cycle, is probably irrelevant moving forward, right?
Yes.
You know, it's almost the same way here in the U.S. You have a seminal event like a change in administration and all these new fiscal policies coming through. Do you really care about the December data and the January data? Not necessarily. You want to see what the February and the March data begins to say. And there's clearly a turn. And the same thing for the Eurozone right now. Now that all these spending bills have been announced, like, who cares what happened last month? We're going into a new world, right? And what happened last month or the month before doesn't necessarily inform us about which way asset prices will be flowing, because this influence wasn't known back then. I myself, I'm looking for the PMIs. We've seen the expectation that PMIs would be pulled forward. Perhaps people would try to build more in advance of a recession or the tariffs. Of course, auto tariffs expected to go into play on April 3rd, so they're signed this week. Maybe there's some wiggle room to get out. Of course, it's a big loss today for stocks, and we're reacting quite negatively there, so we'll see what happens next. The administration is showing some signs of sensitivity to this. I mean, we were talking about this yesterday on Overtime. The Stefanik nomination being pulled shows that they are concerned about holding the House right now. And another poll that just came out, the guy who's running to replace, or rather the woman who's running to replace Mike Waltz down in Florida, this woman that goes by the name of, her last name's Fine, she's running against a Democrat, and that was a plus 12 seat a few weeks ago, and now the Democrats ahead by 3. So there is some real politic happening where maybe the administration is showing a little bit more sensitivity to how its policies are impacting polls and ultimately then markets. Now, that's not to say that we're going to see a rally here on the other side of the weekend. It's a 2.5% decline. You don't shake a stick at that. And as ball don't lie, the charts don't lie, and we're going to explain why shortly here. But if there is a saving grace in the second half of the week, Ilya, you really have to pay attention to that non-farm payrolls report. This is now the jobs report for the month of March. We've gone through the hard weather events that defined the winter. And I heard an interesting, piece of analysis yesterday on Bloomberg that the rate of inclement weather this winter was actually higher nationwide than it was the prior 3 winters. So there could be a bit of a negative weather effect here within the data itself. But that was really December, January, February. We're making our way away from that now. So weakness within the data really can't be explained away by some of those exogenous circumstances. And it would speak to more of a slowdown that's perhaps beginning to gather some stride here now as we finish out this first quarter.
Yeah, and the ISM services number is one I wouldn't ignore, because in fairness, the S&P Global PMIs have been a little bit cleaner, and ISM has been a little bit back and forth. But there has been an interesting relationship between them. The last set of ISM numbers were a little bit better than the S&P Global PMIs, and so it would be notable if they rolled over, because S&P Global PMIs, they've bounced a little. So there's the sense that maybe the difference between the way these two are constructed, as you kind of look at them month to month, is when the bogey on growth really starts to move around. Maybe what ISM is a little bit more stable in the way that they construct their samples. Maybe S&P Global is a little bit more volatile. Not that they're showing you different things. They're just showing them to you with a little bit more frequency for S&P Global and a little bit less of an amplitude of swings in ISM. And so if ISM rolls over here, that could be really interesting, because this would be another one of those somewhat independent, not just you're looking at the same thing, 1 PMI, 2 PMI kind of a thing. This is a different survey. It's a different construction. If this were to tell you that the service sector is melting because business confidence is on the defensive, that would be meaningful. And then if you follow that with non-farm payrolls, and then there's a Powell speech the same day, this is shaping up to be an explosive week next week. I'm sort of not surprised that we have the kind of stock sell-off that we have here. We were talking, you and I, with Tom about when's the end of the quarter. Technically, it's Monday, but because today's Friday and this is the last one of the quarter, maybe it's today.
Yeah, Powell again for the second month in a row. He's
got to explain the thing.
I think that is, in and of itself, just a sign of the times.
Very
that
telling.
The Fed chair feels the need to quickly clarify what the data means to us before we go into the weekend.
After every jobs report.
Yeah, right. That's a sign that Fed officials think the markets are jumpy and prone to overreaction.
It's like another policy announcement. It's basically another policy announcement. It's adding about double frequency.
Ilya, we look at the stocks meltdown here today. It is a very weak day. There's really no good way to slice it, although it's been difficult to slice in a positive manner anyhow. We've been talking about this garbage rotation that we've seen play out even during the rebound, where it's been, sectors like utilities and, consumer staples bumping us higher, while tech and retail and semiconductors are lagging. Even yesterday, semiconductors were the worst performing sector. Tech wasn't far behind. Today, the bill comes due. The ball don't lie. We see here that the evening star candlestick cluster up against the 1 month moving average, which comes in against the October and November swing lows. That was the defining line in the sand. It marks a near-term top. The market has now sold off aggressively here. This increasingly looks like a bear flag. Ilya, I mentioned to you the other day, if we're going to be intellectually consistent about this, if we flip this chart over, and this was 2023 or 2024, and after trading sideways for several months, the market broke out to a new high and pulled back. And at the former swing highs, it gave us a Morningstar candlestick cluster against the 1 month moving average. I would say this is it. Green light, let's go. That's beautiful. Game back on. Yep. We're going to all-time highs. So the mirror image of that then is, as I said yesterday, then we should be going back down to the yearly lows. Yeah. Now, I have still a short put spread on here in ES that, again, given the positioning, like $120 loss right now, whatever. That's why I'm so much more heavily weighted in bonds and metals, because if we're heading into recession, the long end of the curve is exactly where you want to be. Gold, silver, it's where you want to be. There's nothing to like about this right now. This not only looks like a significant top, but I want to go over to the NASDAQ. And that extension here that we were playing with the other day, in the event that this thing is really breaking down, it looks like it's really breaking down. 17,317 becomes your longer-term NASDAQ wipeout target. If this is, we'll call it A, B, C. Dare I invoke Elliott waves again?
Oh my God!
Doesn't look good.
I got a little shiver down my spine there for a second.
I've only invoked it
early
twice
in the morning here in San Francisco.
I've only ever invoked
Elliott
it twice.
Waves. Jesus.
But the other day that I invoked it was Tuesday. Right. I've only mentioned Elliott waves since I've started working here twice in my professional career at Tasty. Both have been this week, if only to say, if you believe in that kind of stuff, A, B.
This is
your extension carries you down. This is the corrective. This is a correction, but it's part of a larger corrective wave.
Yes.
This is the ugliest I've seen stocks look since the start of 2022.
It also is phenomenally interesting why they did this today and when. Now, obviously, why, who knows? But when? It wasn't the PCE, it was revised consumer confidence data. Nobody cares about revised consumer confidence data, but not today and not in this world. I've been beating the drum on pay attention to the University of Michigan survey for feels like a year and a half, longer maybe. because that was my indicator for finding out that inflation wasn't transitory in 2021. You could see it there, and you could say, hey, Fed, you're behind the ball. And you could say it months ahead of when the Fed actually embraced it. And ever since then, I've been watching this survey very closely. Even through that period, the revision isn't usually what's important. It's the initial announcement. You get a sense. Then there's a little revising, tinkering with the sample, but it's never really a big deal. Not this. And what's really fascinating about it is the current conditions index was actually revised slightly better. That wasn't the issue. It was the very sharp downward revision in expectations, an upshift in inflation expectations, downshift in overall sentiment by almost a full index point, which is big. These are big revisions, big changes. Besides the fact that obviously in sort of general trend terms, these consumer confidence numbers are terrible, that the revision was so dramatic tells you that from the point that the survey was initially conducted to when they finished filling out the sample, sentiment got worse by enough that there was a meaningful revision to make.
Yes.
And that's very telling in and of itself. This the market clearly looked at this and said, consumers are going to leave this whole thing hanging high and dry, because if spending stops, it really doesn't matter what your longer term policy objective is, the economy will stop.
The economy will stop. I think that's one of the surprise things about today's data. I thought inflation was warmer than expected on PCE. How come bonds are doing better? Yes, the PCE was a little bit warmer, but you also see in the personal income and spending data that incomes are outpacing spending by a great deal. The savings rate has jumped up to almost a 8-month high right now. So yes, people have been buying things. They're doing their big purchases now, and then they're basically stockpiling. They're getting everything in the door now before the tariff rates go up, and then they're planning on saving their money to weather the storm. So there is
PMIs have been showing us on the manufacturing side, and this sort of rotates from manufacturers now to consumers.
So we're going to get lower rates, but for what reason? Is it for a maintenance reason, or is it for a recession reason? It's leaning probabilistically in the direction of recession. The chart for the S&P 500 is awful looking at this point in time. A return to the lows should be eyed up almost immediately. This becomes the first target, 59.75. Double top target brings you closer to 54.05. And then if we think about a Fibonacci extension from the mid-February highs down to the mid-March lows, swing back up to the high that we had this week, that gives you a target of 51.73. The charts are ugly. They're ugly. They say that we could have another 10% or so from here in an extreme case. We know, historically speaking, that only 11 of the past 36 declines of 10% or more have produced losses 20% or more. So odds are that once you get to a 10% loss, and your average corrective loss is about 14.3%, okay, going back to 1950, you start to think that this is a turning point. Like, you're going to get a little bounce in your 10%, that 10 to 14% pullback range. And then if the market settles out, you're good. That was the move. But if you're not within a month trading higher, and now we're about 2.5 weeks removed and we're barely off the lows, history favors this being a much bigger correction.
Yes.
And so, yeah, the lower rates may be coming. Stocks aren't liking it because lower rates are a harbinger of weak economic data, growth in inflation premiums, net going down, not for good reasons.
That's right. I mean, put simply, yes. This is not a market that is happy at all, and that it's not happy on a revised consumer confidence report to this extent,
right,
seems to suggest that the level of resilience that the markets have here is non-existent. I mean, they're getting spooked at a rustling branch in the night here. This is not anything that should typically get anybody out of bed. I mean, this is not a horrible CPI report or GDP report or a Fed announcement or a jobs number. No. This is a revised consumer sentiment survey. It, by the way, tells you Powell was all talking up hard data versus soft data, saying, we know, it sucks. Yes, we are also worried. We've also sat up in our seat. Yes. But it's survey data. Don't worry. It's business confidence. It's consumer confidence. New administration coming on, doing lots of things quickly. People are a little jarred. Let's wait to overreact until it shows up in the hard data. Markets are looking at this and going, yeah, we're going to go ahead and overreact because we care and it is significant. And you may not care about the soft data, but we obviously do.
We do.
And so this is it. I mean, to what extent do you think this is end of quarter, like last trading day, last Friday of a quarter with only one day left kind of a thing here? Because it does look exceedingly violent and my fingers itch to sell, but it's a Friday and initiating new positions on a Friday at the end of a quarter feels like asking for trouble. I might have to do it anyway, but what do you think? Do you think this bounces Monday?
I told you on Friday, February 21st, that I thought the selling was exaggerated because of OPEX. And you were like, granted, it may be, but the selling is there regardless because of this very good reason.
Yes.
Isn't that the same?
Yes. I think it is.
Like, yeah, it is. It may be end of quarter may be exacerbating today's move, but today's move is true. It's based on the contours of the data and the Atlanta Fed. Right, we talk about the Atlanta Fed being problematic with its GDP updates. They've been stripping out the gold imports here. They had another revision today. They dropped it from minus 1.8% back down to minus 2.8%. Even accounting for the gold, it's now dropped into recession territory, off by negative 0.5%. So the gold imports, you can't say, well, you take that away, the economy's fine. No, the economy is now in recession if you want to be generous and distort the import-export figures. That's what today's data shows us, regardless of the end of the month, end of the quarter.
Yeah.
Fair?
Yeah. Fair. At the end of the day, sort of that's how I'm ending up landing on it, which is, you can make up 1,001 explanations for why what you're seeing isn't what you're seeing, but the price action is telling you what it's doing, so you can fight it or not. And I don't know anybody who's liquid enough to fight the market and win. So
this is obviously I haven't updated this in some time, but this is the data that we shared last September before the Fed started cutting rates. And my argument at the time was if we're cutting rates for maintenance reasons, then you look 3 months, 6 months out, you're feeling pretty good about things. But if the market's thinking that we're cutting for recession reasons, it doesn't really matter what you're talking about. I say if you're thinking about recession concerns, the 3-month return is about negative 14.3% in that corrective move. And then you kind of bottom out around there. But that still puts us into a place where we still could have some legs to go if it's a recession concern. Emergency, not a big deal. Pain is up front, but it's an emergency. So the Fed acts to stabilize and end the emergency. And so then things get better 3, 6, 12 months out, right? Not recession, generally speaking. But if we're no longer in the maintenance mode, it's just we're in the tough spot right now. 1 to 3 months out is where things are sticky. Maybe there's recovery later on. History doesn't favor us right now. If we're talking about, and that's generally the point, history does not favor equity markets if you're thinking about recession. It favors bonds and it favors gold. So this short put spread that I have on here, it's eating dirt still. Obviously, we're down 2%. It's, again, like $120 loss, like $1.20 in credit. Totally cool with that, considering what's happening elsewhere in bonds and in gold. But this now looks like that was the move. Nick nailed it earlier this week. When he was here on Tuesday, he was saying this is the place that people should lighten up if they've been long deltas. And that was the line in the sand. And ultimately, we see our huge failure here this week come together technically. We talked about it on last call on Wednesday, I was feeling a little bit more bearish. Feels like we're in bizarro world right now where you a little bit more hopeful and I'm a little bit less hopeful.
Yeah.
But
I just wanted to sell at a higher level.
Yeah, and I thought we'd rally up too, so then I could be like, okay, I'm done, flip position, like we got a little bit more. And, the technicals, they're not – the NASDAQ here, the low close that we have for the year is March 13th at 19,453. We are at 19,445 right now. As bad as things are.
And I was just filled on a ES put vertical.
So we have a technical top coming together in stocks, and the bond market finally gets a wake-up call. It's not these PCE numbers themselves, the inflation figures, but the spending data that tells you that consumers are preparing for recession. So yeah, maybe it's a one-time price hike, but as the Fed tells us, tariffs ultimately bring about a real decline in economic output. That's bad for growth and inflation premiums long-term. And the data since 1980, as repeatedly bandied on about here, if you think we're going into recession, the asset classes that have performed best throughout these cycles have been the long end of the curve and metals, which is why for the bulk of this year, the short put spread I have on ES is just my third equity index futures trade I've made in 2024. It's now at the end of the quarter. And the reason why I'm fine with that is because I've been spending most of my time here in, bonds and gold to start the year. And I know that you've been looking at long bond exposure as well. So having not had it. And you were putting on the TLT calls in recent days.
I have them on.
So having minimal equity exposure and having now some bond positions in both the ZN calls and the short ZB put spread that's working, forget gold for a second. Like this is, BEA beautiful in a sense.
Yeah. No, this is coming together. This is coming together. I'm a little bit annoyed that the euro isn't higher because I did a little stop and reverse situation this week. The euro looked like it was breaking down, so I got a little bit short. The very next day, it fully reversed, and you got to be nimble in these markets, so I just flipped it over. And I'm a little bit annoyed that it's not up more. It's up a little, but I look at what's going on in U.S. yields, and I go, you know what? You got to sell this dollar some more. And I suppose on a risk-off day like this, that makes sense. The fact that the euro is up at all is pretty good because this kind of risk-off dynamics, you would expect the dollar to be more of a haven, and that some currencies are up against the dollar at all is testament to what's right in front of us here in the bonds, which is the dollar's yield advantage is coming undone. We're going to more rate cuts getting baked in. This is a recession scare. Asset after asset. You look and it's there. I mean, one of your favorites recently, copper. Ugly chart.
Today's ugly, yeah.
Ugly chart. I mean, if you want to look up the textbook definition of an evening star candlestick pattern, what you're seeing in copper is about as textbook as it gets. I mean, the shooting star on the weekly, yes, but take a look at the daily. I mean, this is a screenshot for somebody's technical analysis textbook.
Copper's actually been really good this year. We'll get there in a little bit, but copper has been one of the few instruments when you see like key reversal or Morningstar candlestick cluster or key reversal or right. Yeah. It's been actually a really technically clean from a candlestick perspective to trade this year.
Yeah.
But copper not having a big recovery with metals today, silver being off the way that it is, it was up higher.
All coming together.
But oil down. So the growthy stuff, right?
It's all coming together.
It's all.
If you look at the bonds, you see it. If you look at the bonds, it all kind of boils down to look at what the markets think is the outlet here. If you look at all this pain and you go, okay, well, people are going to the bonds for safety. Not safety per se. What is safety in this environment? If we were getting liquidation, the dollar would be surging. The yen would be surging. This isn't liquidation. These are rate cuts. So there's the market going, the Fed is going to come and bail us out.
So here's the thing about the liquidation. I'm only going to push back on that a little bit because when we were talking about the CFTC COT data earlier this week, with respect to futures market positioning for stocks, one of the things that is a hallmark of non-hedgers, non-commercial, or speculators, as we refer to them, is that they are trend followers. So they're getting more long as the market's going up, and they're getting less long as the market goes down, or even more short as the market goes down. What happened from mid-February onwards was that the position of speculators in the market actually grew more net long. So instead of closing out long positions, right, which is feeding the decline, you actually see speculators stepping in and saying, no, I'm going to lever up here.
Yes.
So one of the theories that we've been talking about this week is, there's actually fuel to burn if this moves to the downside. That you have this almost stubborn characteristic right now within the equity market where people are looking at this 10% decline and going, yeah, I'll give me more. I will buy all the way down. And they're not doing it in like, oh, I'm going to DCA into my long-term retirement account. They're leveraging into futures trades. And so if this market starts to turn and you are levered long that's already underwater, you're now covering. The rebound that we saw in stocks from mid-March onwards wasn't a short covering rally, which is the remarkable thing about it. It was people taking action to get more long. But so I would suggest actually in equities in particular, right, this move today, maybe it's end of quarter driven, the data's bad, but there have been longs that refused to get out a few weeks ago and were adding on the way down, may finally be throwing in their towel today. And I ultimately think that if
that's very reasonable.
If they're reallocating capital, then bonds and notes are the place to be.
That's very reasonable. And when I say liquidation, I am certainly not saying that that's not happening. What I'm talking about is the kind of a thing where you get an ugly day where all the correlations go to 1.
Oh yeah, sure.
You get a massive up day in the bonds, down day in the stocks. The dollar is surging. The only currency that isn't getting absolutely shellacked by the dollar is the yen, which itself is up by astronomical amounts.
And then even gold gets hit because people are just trying to raise capital.
They're just like, can it be sold? Is it liquid enough to sell? Okay, sell it.
Right.
So I mean, sort of, give me cash. I'm crawling under the house. I'll see you in a week kind of liquidation. That's not this. And I think the currencies tell you. But no, absolutely. I mean, to your point, the impetus to buy the dip is so ingrained in this market. There are going to have to be a lot of jaws tapped on the way down. And that actually probably suggests that this is going to be a long decline. This is going to be months and months and months of chewing through investor confidence for people that maybe don't even know what stuff like this looks like.
No, I would agree with you. So we look at the ZN chart here. We have this beautiful little pennant coming together. We've held that 110.5 area very cleanly. It's actually a little bit more of a cleaner chart than ZB here, which did start to poke below its 116.5 range. If we do get a close up here in ZB, we are back in the uptrend from the January and February swing lows. We've also fully reestablished ourselves back above our EMA cloud. But with respect to ZN in particular, I look at our continuous contract, which for many months here, going back to the lows in 2023, we had a pretty stable channel that we were working until, up until this past December when we had a small breakdown. But that breakdown in January carried us to the swing lows at the end of last April. End of last April, the market was of the mindset that the Fed may hike. You get to May 1st, the market had a 0.3% chance of a 25 basis point rate hike priced in. So that is a very significant, crossing of the Rubicon. Are you entering a world in which the Fed is going to be hiking by the end of this year, effectively, is the argument you're making? And clearly the answer is no. So bonds lift, but left shoulder, head, right shoulder, neckline. Maybe this is a left shoulder, head, right shoulder, and a bigger neckline. Either way, the movement that we've seen here in February and March has carried us back into that channel from the lows that we had in November 23. We are now putting ourselves testing the decline that's been in place off the highs in September 24. And you could argue then that's probably held us here on the way down to a certain degree. Not the perfect, most clean, but that would then stipulate if we start to see a move up into the, upper half of the 111s here in the notes, you have a very formidable inverse head and shoulders pattern that's breaking out of a potential triangle thereafter. And the measured move is going to give you something in the neighborhood of a pop into the 115s, back where we were in September. And I don't see that occurring in any other scenario unless we have real legitimate recession concerns brewing, which we do. So I'm going to pop out here. I currently have exposure on to 28 days. I really like going out to 84. While that's the ZBU5 contract at this point in time, keeping in mind, let's just do a quick sanity check in the ZNU5 contract here. Not liking that. Let's see here. Let's go back to ZN. Let's call it 115. 115. So we'll pop into, now we'll go into ZM. No, I guess it's U5, 84 days. Okay. Well, the 115, 117 call spread. Risk 171 to make 1828. Probability of profit 20% on a 10 to 1er, Ilya. Yeah. I will put that in my pocket as one of our recession trades here to keep the bond exposure going on a longer term basis. So if there is a pullback and we're entering the top side of this chop zone, we're not getting eaten up, but it's a 20.4 IVR right now. Volatility, all things considered, seems to be relatively cheap. And if we're going into the teeth of a more recession fear mindset, forget whatever today is end of month, end of quarter. Bonds historically have been the place to be to hide out. So no reason to try to pick a bottom in stocks as vol's expanding.
No, not at all. If you're doing anything in stocks today, and I'm very modest. I've only put on one thing, and I'm going to keep it to one thing because it is a Friday and we are approaching the lows now on S&P. And so maybe you get a bounce off those. Maybe this is end of quarter. Maybe things even out a little bit when you come in next week, and there'll be lower vol and there'll be other opportunities to sell. But if you look at the place where there is everything to do today, where the risk reward is infinitely better, it's in the bonds. I mean, this is about as clean of a bounce as you might imagine.
Looks pretty good. No adjustments need to be made otherwise in bond exposure today. There's 28 days to expiration. This I have no problem holding still.
Oh yeah, I termed out this week, so the spread I had on expires in about 20 odd days, but the next one that I've put on terms me out to 49. So I'm sitting.
Amidst all this noise and hubbub, metals did trade to new highs today. Silver's off a little bit here, as it looks like, again, you talk about correlations one and people trying to raise capital. Metals have been dinged a little bit here, but gold did hit a new all-time high today, 3124.40 per ounce. Volatility is now bouncing back as we're moving to the upside. That's great. IVR lows the last few days came in 13.6. We're now back up to 34.4 as we push higher. That is what we want to see. Gold vol should go up with gold prices if it's going to be a sustainable rally. So Ilya,
north of 31 now. That's the bogey.
Long-term Fibonacci extension. I have it drawn from the December 17th swing low, the February 25th high, the low that we have on February 28th. That gives us a 32.25 target in the GCM5 contract. If you're going out a little bit further, you're going to see something a little bit higher. Silver, there is a bit of a negative growth concern going through today here. It's an 11.1 IVR. Volatility is only just starting to bounce back. We hit a low of 1.73 yesterday. What can I say here? Yeah. The metals have treated us very well this week, this quarter, right? This is going to be the second highest close of the year for silver prices. There's nothing to do but I think to look for ways to get long. And so on a pullback, will I roll? Yes, I rolled yesterday. So this pullback is absolutely okay because we got into the teeth of 28 days to expiration, right up at the October highs. There's no reason to play footsie with 7 days to go before we roll. Just buy the sells some more time in case you get a 1 or 2% pullback in the interim period before 21 DTE arrives and you don't see some, profits go by the wayside. So that's what I did yesterday. I'm feeling good about that today, but my goodness, my precious metals here. Westwater told me today this is the best quarterly performance for gold since 1983.
Yeah. Yeah.
Feels good, man.
It's good. It's good. I mean, you cannot hate this, whether you're participating or not, because whatever you're participating in, if any trade you have on is making money right now, you look at gold and you feel validated. And it's because it's all thematically lining up. You have a weaker dollar. You have lower yields. You have stronger gold. Stocks are selling off. I mean, this is basically the world I've been painting for a year and a half. It's just taken a while to get here because, as ever, macro is forever early and wrong on the timing. And so last year was a painful grind, just trying to nail down some downswings in these stocks. And ultimately, it was the bonds that bailed me out, much as what you're seeing with gold here. Last year, it was bonds that rescued me out of my attempts to sell the stock market, and it wouldn't go down. But for those 2 times that thankfully were there. So this is, even if you're not long gold and you look at this and you go, well, if I'm long bonds and I see this in gold, feeling pretty good. If I'm short dollars and I see this in gold, feeling pretty good. There's a lot of validation here in this move. It's possible that what you and I were talking about yesterday, this kind of fading in momentum readings, is already played out. It's possible that it isn't. And so it's worthwhile to keep an eye on this, especially if you think that this is some sort of an end of quarter type of washout. Then maybe Monday you get reframing. So you get stocks a little bit higher, you get gold a little bit lower, and that gives you a bite at the apple. This is not a trade I would put on today, but it looks very constructive.
So in the February 2020, the speculative net long position of the gold market was about 385,000 contracts net long. Before we get the update in about an hour and 45 minutes, and that data covers the market through this Tuesday, which also sets up a very interesting dynamic for the equity reading because stocks rallied through the close on Tuesday, right? And so all of the decline is after the CFTC week's window closes with the Tuesday close. In any event, we see here for gold right now, the net long position is 285,000 contracts. So this isn't even the most saturated the market has ever been, right? You know, people have really, this has not been a gold move that has had a ton of participation. People have been paying attention elsewhere. And, you know, it's obviously off the highs a little bit here, 31.10 right now. As a momentum guy, stocks or any asset that moves up to a new high is something that I want to be long. And if it's moving to a new low, I don't want to be long. But this is moving up. But it actually is reaffirming. You say it's very, you know, it confirms action elsewhere. Right now, that feels like the market is in the recession spot where we're worried about legitimate erosion of corporate earnings, a legitimate erosion in spending. But we also know that if those things occur, the Fed's going to be here with easy money. They're going to expand the money supply again, as they are wont to do.
Yes.
And in a world of balkanization geopolitically, do we think that hard assets, going on with our theme about what happens when the sanctions get lifted against Russia, do we think that hard assets like this have a elevated or reduced role versus fiat currencies moving forward?
I mean, I think that's probably not to gold's advantage.
That was 10% ago I was talking about that, Ilya, so it feels like it's working to gold's advantage.
It's probably, well, I don't think that's the dynamic that we're seeing. I don't think what we're seeing here is an abandoning of the US dollar, or it would be much, much weaker. I don't think what we're seeing, I mean, I think that's pretty clear. Although, one interesting thing that I've been noodling on the past several days, just as a brief aside, you and I have talked about how the dollar's share of global transactions has been remarkably stable between sort of 85 to 90%. If you look at the range of numbers for the report that comes out from the Bank of International Settlements, there's going to be a new one that's updated this year. They're on a 3-year cycle, and this is the year. The last time they updated was 2022. And we'll probably see, the dollar's share significantly stronger. But going forward, if the euro has the kind of rebound and the kind of tectonic shift that we're thinking about, the dollar's share might actually erode a little, but all the other currencies' share might erode a lot, because it might suddenly go to the euro for the first time in a while. The euro had been losing market share, and there's maybe room for that to change. For gold, the problem with sort of the inherent de-dollarization narrative is it's completely one-sided. And it sort of comes down to sitting in the middle of a desert with a dirty glass of water and going, this water is dirty. There's probably a lot of germs in it. It's probably going to give me indigestion. It's like, well, yeah, but if you don't drink the water, you're going to die because there's no alternative. So you can list all the many problems with the dollar, but there is no alternative, and there won't be probably in our lifetime, because nobody has the kind of depth of market and liquidity that exists in the US and won't have it. Because if the kind of posturing that we see, the kind of trends, all the things that people cite, de-dollarization will follow deglobalization and the reduction of the US role in the system, that only entrenches the U.S. advantage and prevents upstarts from competing.
Mm-hmm.
So, of course, we're going to get gold higher in this kind of environment. We're about to get a whole bunch of easing from the Fed. Gold loves that. That makes sense. But this idea that what we're watching is a loss of confidence in the medium that is the U.S. dollar, the transactional medium, I can't sign up to
that. Copper barely squeaking out a gain here today, but what happened yesterday, it is the first close below the 1-week moving average since March 10th. Today's a bit of a doji here, but as you noted with this 3-star candlestick pattern, that's an evening star candlestick pattern. Have we seen that on our charts anywhere recently? Yeah. Here with the NASDAQ, here with the S&P.
Oh, and before we go on, take a look at oil.
Well, we're going over to oil next
because it's the same thing there too.
But talking about the technical, superiority of copper, it has actually been a very, very, I would say, technically inclined chart to follow many times. Right here, I've highlighted a few of these. You have the bearish outside engulfing bar marking a top, and that does indeed mark a top. You have the Morningstar candlestick pattern, which we used as substantiation for looking long near the swing lows in August last year to get long, right? That produced a bottom. This was a near-term top. You have another engulfing bar here at a top. Here's a bullish one on the March 11th low. Here's now another topping pattern. So for whatever rhyme or reason, copper really respects the candlestick charting right now. I don't look at this lightly. I would love to see a pullback down to like 485, 490 to perhaps get long again. But right now it looks like we're due for a deeper setback. We only have 7 minutes left, though, and you wanted to talk about oil, which is where we're heading next. Oil down, nat gas up here. A little peeved at natural gas, which is back above $4 now that I cut my short put spread in this.
Yeah.
However, oil prices are down here, and that's certainly beneficial for what's going on with the bonds. Oil has perhaps been an albatross around bonds' necks recently. What do you make of action here in energy? Is this due for a deeper setback now with the other risk-on names?
It looks like it because, you want to talk about evening stars. There you go. it's a little bit messy in the CLK contract, but take a look at the continuous, and you can see it a little bit smoother. This is a retest of the underside of a congestive range. We've kissed former support become resistance, and we've produced an evening star. I mean, that's very cleanly bearish.
Setting this out, sorry. And we're going back down to the daily. Okay. Yeah, you think this is an evening star candlestick cluster here?
Sure.
Fall below. I mean, it looks like that, right? And it's certainly in an area where the market has topped out in recent, we can call this, we'll pull you over here, put you right near the highs like this. I mean, this is an area where the market, we couldn't really even reach up into that zone where the market's found support or resistance prior. But the volatility is just not here right now. CLK5, 12.5 IVR. I mean, one of the considerations that traders have, of course, is that there is a finite amount of resources. If you're trading with a 25 or 50K account or even something less than that, you're probably not able to swing a trade in every single product because you have margin to worry about.
That's right.
Right now, one of the reasons why Nick earlier this week was on here saying that it's a good time to get out of some of your long delta exposure is because that's just the typical Tasty methodology. You keep powder dry until vol spikes. When vol spikes, you look to fade it. When vol comes in, you take those trades off and you keep your powder dry until the next vol spike. That day we were making the point that with a VIX futures curve, the term structure back in contango, is this an environment that's defined by tape bombs? And if it's defined by tape bombs, do you trust a term structure in contango? No, because a tape bomb type of environment should be that of a flat or maybe even an inverted and backwardation term structure for the VIX. So that means you sell rips and not buy dips. I bring that up because if I'm going to place a trade in oil or keep powder dry to do something in stocks, I would rather use that finite amount of capital to do something in stocks than look at a 12.2 IVR here. Now, if you already have stock exposure on and you're looking to do something, energy seems to be very uncorrelated. At least natural gas is uncorrelated. Stocks taking a step back today with oil. I don't think that's something we should ignore. But if oil is going to go down, then it's probably going to be for recession reasons, and stocks are going down for perhaps recession reasons.
Yeah.
It's difficult to operate long deltas right now on this if I'm looking at this with fresh eyes today. But we only have 5 minutes left, Ilya, and I know you want to talk about currency because that's our bread and butter here. Mm-hmm. You say it's not a correlation one environment, but the yen is doing quite well today here. It's up by 0.78%. It looked like we were breaking down a little bit this week. Is this the saving grace for the yen now?
I am certainly looking at this as perhaps the beginnings of a turn back higher. Obviously, I'd been long yen basically since the beginning of the year, and even a little bit earlier, somewhere in sort of late December is when I started to layer it on. I've kept putting it on, and it was a gift in the first quarter. It did very well. I'm looking at it now and saying, okay, well, we've had an interesting sort of correction, and maybe this is the place to start getting back. I'm not sure we've confirmed that yet here. I think maybe we need to get back sort of to, let's call it 67.50, something like that. And just that line that you have defining the immediate sort of counter trend resistance, that's also the underside of the preceding range that you have there in the gray box. That's kind of what I'm looking at in a nutshell. So I want to see this really roll over, and I want to see it confirm, and then I'm in. I have a little bit of short dollar exposure that I've started putting on with the euro. This is very close to confirmation. It's probably going to be at the top of my shopping list next week.
Yeah, I mean, the euro today is resiliency in the face of what would typically be an environment that would harm it. I think it says a lot. The yen is behaving as one might expect it to in a more significant risk-off environment. The Canadian dollar is holding up here after Carney's phone call with Trump today, Mark Carney, the new prime minister there. Though he did say yesterday that the special relationship between the U.S. and Canada is over, direct quote. So we'll see how
he's negotiating. I mean, this is really, I think what we're about to see is how a real crisis manager handles the current situation. And for that, we're going to start to see sort of people taking cues. There have been people that have really figured out how to work with the Trump administration. I think when you look at Japan, the current the current prime minister of Japan is doing a very good job of kind of figuring out what's going on. He is himself, this is Shigeru Ishiba, he is himself kind of an outsider and kind of a muckraker. Mm-hmm. And it's working. It's working. Mark Carney knows how to handle a crisis. Mark Carney handled a friendly bureaucracy at the Bank of Canada during the 2008 crisis very successfully. But then he was the central banker that had to steer the Bank of England through Brexit. And among other things, withstand withering attacks from the right in the UK, who constantly kept yelling at him that he's trying to tip the scales against Brexit. Very conspiratorial, exceedingly dumb. All of that sort of political morass that you don't want to see in a well-functioning policy response to a crisis. This is stuff Carney knows intimately.
We get it. You love him. He's a central banker.
That's right. So to see him, that's right. So to see him come out and get sharp elbowed and go, okay, you want to negotiate? Let's negotiate. This is going to be very interesting now. And maybe a model.
Maybe. We're wrapping up on the calendar, though. MBS manufacturing for China at night on Sunday after the futures market opens. Keep an eye if you're holding any commodity exposure. Australian dollar, if you're trading FXI, A shares, BABA, Baidu, right? Some positioning may need to be adjusted today. Otherwise, we go to the actual day of Monday, and during the day, it's really quiet. Most of the stuff is actually technically the Tuesday trading session, but it's all out of Asia. So the start of the week, really a heavy Asia focus. The yen, yuan, what have you, depending upon your exposure. We typically would do some education here at the end of the show, but we are running out of time, and Dr. Jim is waiting patiently in studio to come up next. So with this, we'll just cut it here. I'll be back later today with Tom for Let Me Explain, 3:30 Eastern. Please be sure to tune back in for that. Otherwise, Ilya and I will be back on Monday together for Futures Power Hour and Overtime. See you then. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Brief break, and then Dr. J up next with From Theory to Practice.
Happy trading, folks.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract.
Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Understand I got a plan, but I bet you didn't know that I was dangerous.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Apocalypse Has Arrived edition of what it is that we are trying to do. Man, it is not good out here, but you are safe. You are safe here with me. This is a safe place, even if all of your positions are positive delta. I promise we're going to make it to the other side. Now, the other side might be a lot of darkness, and it might be a pretty deep abyss, but we are going to go together. So thank you guys for being here and being a part of what it is that we are doing, because we couldn't do any of this without you all and all y'all from my Memphis, Tennessee crowd. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can commiserate with your fellow bulls or celebrate with your fellow bears. It is indeed a good time had by most. Now, a little bit of housekeeping. We do have an extra long show today, so we're going all the way to 3:15 Eastern, 2:15 Central, and so we're going to go through some market commentary. You might see where the wind blows us with a couple of positions, but then I want to focus on you all today, because oftentimes I get done with the show and there are so many questions and so many comments that I wasn't able to get to. So I want to kind of amp up my abilities today and maybe answer a few more questions than usual. Maybe instead of doing one or two, maybe we can do 2.5 or 3. So if you have a question about the market, about what you've got going on, your positions, whatever, drop it in the chat box and I will try to get to as many as we can. So Paul, bring us into the market. Man, is there still a market? You know, like sometimes you just don't know. You just got to wait and see. Let me bring out my drawing tools here. You've got E-mini S&P's down 111 on the day. Yikes. NASDAQ index, risk-free instrument, extremely high-risk product, down 513 on the day. Got the boomers down 716, so down the most from an absolute value standpoint, from like a pure sheer magnitude standpoint. But on a relative basis, it looks like the NASDAQ is down the most, down almost 3% on the day. You've got E-mini S&P's down about 2%. You've got the boomers are down less than 2%. Then you've got the Russells down about 2.5%. But then you've got the NASDAQ. It looks like it's close to 3%, maybe 2 3/4. Yeah, so a little over 2.5. So the NASDAQ and the Russell are basically neck and neck for the championship today in terms of the race to the bottom. Who can lose the most, the fastest? And so, man, yikes, man. We've got volatility is obviously on its horse today. You've got volatility futures up $1.66. You've got the spot volatility, the old VIX is up $3 all the way up to 21.69. Now again, don't get too excited. I don't know if this print counts. Like, we've got to wait for the official tweet out of VIX HQ to know if we're allowed to count this print, because the one in early August, can't count that one. Like, yeah, I know your account got eviscerated, but you can't count that one. I'm sorry. I don't make the rules, man. The VIX intern's messed up. They may have messed up again. So we have to wait and see if VIX HQ gives us the green light on that guy. So VIX up, VIX futures up. Everything obviously getting smashed to smithereens here today. Tesla down 9. Look at Tesla down 9. You've got, Microsoft down 11. You've got Netflix down 43, right? Even our beloved Starbucks down $1.47. Like, it's bad when Starbucks is down. Like, it's bad. Like, it's real bad when Snapchat is right. Look at Snapchat still in business. I mean, they're on the brink of insolvency. Just another day at the office for them. But down 24 cents today for Snapchat. I'm shocked they're still in business, honestly. And let's see. We got Google down 6.89. We've got Meta down 22. So just taking it out to the woodshed. And again, as we established on the show recently, I'm not even sure we can say that anymore. Like, does anybody under the age of, 75 even know what that means? I mean, I don't know what that means. Like, you've got that. You've got throw the baby out with the bathwater. Like, I think we need to get rid of all this stuff, and we need to bring in some new sayings and some new phrases. And so, we'll do our part here. But there's only so much I can do. I'm only one man with an intern. And so we'll see how far that can take us. Got Apple down $5. Got Amazon down $9. Yeah, Amazon getting absolutely bamboozled today. And so obviously, look at the Bitcoin bros, man. Poor one out for the Bitcoin bros. Down 2,000 today. Man, that is not good. That is not good. But of course, your flight to quality, as it has always been, basically every day for the last 3.5 weeks, is gold. So gold up another 20 points, up to 31.11. And silver, of course, shout out to my Hunt brothers. Silver is also up today, I believe, right? No, silver's down today. Interesting. All right, well, once again, it's a good thing they've got that little pizza side hustle because not doing too well in the old silver pits today. But gold looking good. Gold looking real good. Gold got up to what, 31.20, I want to say? And silver was up to maybe 35.50 this morning. Something like that. Let's take a look at this. Let's investigate. We got nothing but time, right? Once again, this is the Wide Lanes Elaine Bennis edition of the program. So I don't know where this is going to go. Plus, it's a Friday. Plus, I have a date night with my wife tonight. Like, this is crazy, guys. This is my best day ever. My best day ever. Sure, all of my long portfolios, we're long here, we're long in the stealth portfolio. They're all getting blown to smithereens. But it's totally fine. Don't even worry about it, man. Got a night out with the wife tonight. We're staying at a hotel. We've got the babysitter staying over with the kids for one night. And so it's going to be amazing. We're going to be able to have a 30-minute conversation uninterrupted. Hasn't happened in 10 years. Right? Penelope just turned 10 a couple years ago. Hasn't happened in 10 years. So I'm so excited to be able to talk to my wife for 30 minutes tonight. But anyway, I digress. If we go into gold and let's take a look. Yeah, if we look at this, is this my daily chart? Yeah, it is my daily chart. So let's take a look here. Market's catching a little bit of a bid. E-mini S&P is only down 107 now. And so basically the next tick is unched. And so just hang in there if you're long in this market. And by hang in there, I mean, you probably got another couple hundred points on the downside. You're going to have to absorb. But if you look at GC, they hit a high of 31.24. So it was up to 31.20, 31.24. That's pretty crazy, obviously. It doesn't, if you look at like the last few days, or if you really think about the last few weeks, right, where gold was, if I bring up, let's see here, this was on February 28th. So, man, that is 1 month ago today. 1 month ago today, gold hit a low of 28.72. It has rallied 230 points off of the bottom. It actually feels like it's more than that. It feels like, A, it's been more than that, and also, B, I don't remember these red days. Do you guys remember these red days? I mean, there have been a couple. Like, there have been 7 or 8. I'm like, there's no way. Every day has felt like the same story. Gold up 15, gold up 37, gold up 48, gold up, 11 and a half. Like every day has just been kind of Groundhog Day in the metals market, at least from a gold standpoint. Silver doing something similar here, where silver, again, the high did it get to 35.50? Oh, almost. Look at that. Oh, man. Savage. 30 to 35, 49 and a half is your high tick on silver. And similar type of deal. I mean, silver ran up basically from February 28th, same day, a low of 31.36, and now it has gone up over 35. A couple of times. It did it yesterday. I think it did it one day. Oh, it actually hit 35 even about a week ago, and then this morning. And let me tell you all something. The impending doom for the metals, it's gonna be biblical, man. Like, you're gonna have to just round them up 2 by 2. This thing is gonna be straight out of Genesis. There is going to be a day, I'm going to say in the next 2 weeks, I'm even going to put a fairly short-term timestamp on it. There is going to be a day in the next 2 weeks. Gold's going to be down 80, 90, maybe even more than that. There's going to be a day in the next couple weeks. Silver's going to be down like $1.25, $1.50. It's coming. You can't stop it. And again, I don't make the rules, man. I do not make the rules. I also have no idea what I'm talking about. So I would not put any actual tradable capital behind that. But that is my hunch. That is my thinking. And I think silver might be kind of leading the way today to the downside. And so it would not surprise me at all if we see gold back under 3,000 at some point in the next, let's say, 10 trading days. So give it till, that would be what, April 11th, I guess. So that is my prediction for the day. So you guys know what to do with that information. You should be buying out of the money calls. And so, all right, so there's the metals. There is the market. The market's still there, which is pretty amazing, to be honest with you guys. But, man, look at you guys, man. I see you guys in the chat. I'm going to get to so many of you guys here in just a few minutes. I see Alan V's in the house. Man, I see DW3's in the house. I see Adam Armfield's in the house. Paul Heyman's in the house. Emmett's in the house. Trouble Troy's in the house. Man, so many people in the house. Harold, Daniel, RV, Junior Mac.
Mateus is in the house, man. Look at you guys. David Gallimore, Sparky Dog, Sam L, Don 721. Man, you guys are amazing. I know I missed a bunch of you guys, but I just kind of glanced at who I could collect there easily. So let's take a look at what's going on in the portfolio. I'm not going to cover too many things because I do want to spend a lot of time. And you guys are already blowing me up in the chat. I mean, Cynthia's in the house, Brad Glazer. Look at you guys. I'm never going to be able to get to all this. There's no way. There's no way. But I want to try. I'm going to try to get to as many as I can. Looking at the portfolio, believe it or not, you can choose to believe this. You can choose not to believe this. There isn't really that much that we need to do. A lot of things are actually in an okay spot, if you can even believe that. So the MES strangle that we just put on a couple of minutes ago, or not a couple minutes ago, feels like a couple minutes ago, but this was yesterday, during yesterday's program. You know, we still have a ton of room on both sides. 5,400, 5,975. It's like we're going to sit tight, but let's just let it cook, and let's just kind of, you know, let's just see what happens. I mean, Monday is March 31st. So Monday is the end of the first quarter. And guys, let me tell you something. This is serious. This is the most important end of a first quarter in the history of the financial markets. I've never known one that is more critical, that is more fundamental to our way of life than Monday's end of Q1 print. Like, it all comes down to this. Everything you've been working for, it's coming to a head on Monday, March 31st, in 3 days. So that's going to happen on Monday. Then on Tuesday, we've obviously got April 1st. Happy month anniversary to you guys. On Wednesday, I believe that's Trump tariff day. You know, come hell or high water. I'm pretty sure that's what it is. Then we get a little bit of a Thursday off day. Like, again, you know, Thursday, you could go in and do shoulders. You could even go in and sneak in an arm session. Or the more logical play is just take the off day and then hit it Friday, Saturday. But then Friday, man, you've got NFP. Friday, we've got NFP. And if you think that the end of the first quarter is a big deal, man, this NFP is going to blow you away. It is going to blow you away. And so that's coming on down the chutes next week. And so, man, I don't know that this stuff is over. Like, I don't know that we're going to make it to the close today, to be frank with you all. To be Frankie Walsh, with everyone that's watching today, I'm not so sure we're going to get to the close. But provided that we do, man, next week we are not out of the woods at all. But MES, we've got our strangle. We sit tight. We do nothing. Apple down $5 is actually good for our straddle. You know, you can see that Apple is now much closer to the strikes that we want it to be. You can see we're actually up a few bucks on Apple today, which makes sense because it's recentering itself right around the short strikes. I'm going to sit tight and I'm going to do nothing just because, again, I don't want to roll into earnings. We've talked about this ad nauseum, so I'm not going to kind of, you know, beat this horse any longer. It's been dead for quite some time. And so for Apple, we sit tight, we do nothing. Anything at Bank of America, I mean, it's Bank of America, man, you know. It doesn't get too much more craptacular than a Bank of America long stock position, but that's what we've got, right? Again, you can't trade the market that you want. You got to trade the market that you have, right? Like, you can't trade the stock that you want. You got to trade the stock that you have, right? It's basically the same thing. And so Bank of America, we sit tight, we do nothing. Best Buy, man, it's seen better days. Obviously, this is also kind of a long stock synthetic position. So we're going to sit tight. We're going to do nothing. There isn't even any extrinsic value left in this. So it is now just purely long stock, which is fine. It's okay. I mean, we are getting some capital savings on holding the short put over holding long stock. And so some of you might be thinking, well, Jim, why would you continue to hold this? And that's a fair point because I don't even have any extrinsic left. But it's much cheaper from a capital standpoint to hold an in-the-money short put than it is to hold long stock. Like long stock, you have a margin account, you have to put up like 50% of the notional value of the position. You know, you can see right now, here, I'll even go into, what is this? This is an 85 short put. If I go into April, and if I were to go sell an 85, you know, short put, it's not going to be like, if I want to buy 100 shares of Best Buy, here, I'll even show you really quick. If I go to buy 100 shares of Best Buy, look at the buying power. There you go. It's going to be 50% of the notional value of 100 shares, right? 73 times 100. Again, this is some pretty complicated stuff, but I don't even know that we need Julius Spina for this. This is going to be 7,300. If I'm in a margin account, which I am in this account, I've got to put up 50% of that. So that's where all these numbers come from. That's why the buying power effect is 3,650. But the in-the-money short put, it's going to be less than that. I'm pretty sure it's going to be less than that. And if for some reason it isn't less than that, we'll just go in and doctor the tapes and we'll edit all this out. But if I go ahead and I go to sell this 85 put, let me clear that away. I'm thinking it's going to be, because it's in the money, right? So there's more risk than out of the money. I'm going to say maybe $2,400, $2,500. $1,400. Look at this thing, man. You won't even know it's gone. Like you won't even know the capital's gone. So again, it's super cheap relative to buying the stock. So that would be a reason to hold an in the money short put over the long stock, even when there is no extrinsic value. And so that's part of the reason why we're going to keep doing what we're doing. So all right, let's go ahead and all right, that's Best Buy, and then I don't know, you got Chipotle, you got your Nikes, you got Reddit's, Starbucks, the short call, and there's still 57 cents left. I'm going to sit tight. I'm not going to close this just yet. Let's try to squeeze a little bit more juice out of that orange. And hey, if Starbucks rips back, it's not the end of the world. I mean, that's what we want from the position, anyway. If this thing gets down to like 30 cents, 25 cents, then it's probably time to go ahead and take it off. But Starbucks and then Shopify, Walmart, yeah, whatever. Nothing really to do there. But let's go to you guys, man. Look at you guys. I see you guys at the end. Man, I see Phil T's in the house. Juan Pablo's at the house. Man, hold on a second. Let me go ahead and, I'm going to surprise and delete somebody because I always go to the top of the chat and then I work my way down. And I'm going to do that here in a second. But I'm going to grab somebody just from kind of the end, kind of middle to the end. And let's just grab one at random. And I'm going to grab Phil T. So Phil T, what's going on, my friend? Thank you so much for being here. I really hope that you get value from my show and all the other shows we have on the network. I don't recall your being in the chat before. That could be because I've been a little spotty with my blueberry intake. So you may have been in the chat and I don't remember. So if that's the case, then I apologize. But thank you so much for being here, my friend. Phil T says, in the shop trade, rolled out and up for a credit to 91.20 earlier this week. Today, I tightened my strikes, rolling the untested side from 120 to 110 for an additional credit. How risky is this? How can you assess this risk? Okay, great question. Okay, so you said you had a 91.20. I don't know how much credit you've collected there, Phil T, which is an important piece to all of this. But let's look at, the 91.20. So if you have, actually, let's look at what you have right now. You have a 110. Yeah, so you have a 91.10 in Shopify right now. Oh, yeah, so there you go. So you've got lots of room on both sides, right? So you've got, here, I'll even show you. If I were going to go, are you still in April? Let's see. Oh, Phil said 850 total. Okay, that's helpful. Let's see. And it's kind of nice being at the end of the chat because we can interact in real time. We may start doing this in reverse chronological order. And so that'll boost up the comments significantly because it'll kind of be a race to the end. But no, I don't want to change what we're doing. But I'm going to do Phil T, obviously, and finish this one question. So the 90, let's see, the 91.10, you are in, you rolled out and up. So I'm going to assume you're in May now. I'm going to assume that you're in May with 49 days to go. Now, I could be wrong about that. But let's see here. If I've got a 91.10, I have an 81.10 myself. But if you have a 91.10, right? This is selling for $10. You said you've collected $8.50. So right away, you have to recognize that you're only down $1.50 on the trade. You're only down just over $1 on the trade. Right now, it's hanging right around a scratch. So this is a really, really nice trade for you there, Phil Trade. Or Phil Trade. It could be trade, but Phil T. So you don't really need to worry about anything just yet for a couple of reasons. Number one, it's marking right around your total credits collected. But also number two, the stock is exactly where you want it to be. The stock is exactly where you want it to be from the standpoint of, it's centered between the two short strikes almost perfectly, by the way. You have 90 on the downside and 110 on the upside. You've got a stock at 97. That's exactly what you want. Right? Sure, it could be a little bit higher, I guess, but this is pretty good. This is a pretty good spot to be in. Well, the thing that I want to point out to you is, and again, this is not my opinion. So these are based on the objective metrics in the marketplace. The probability of profit on this strangle right now is 59%. And the probability that you collect 50% of the total credits collected, which in this case would be the $10 on entry. So this doesn't completely apply to your situation, but it's good for a reference point. It's good for kind of a barometer of where am I in this trade, especially given the fact that the stock is between your short strikes. 68% P50. So when I start looking at these probability metrics, I'm like, all right, this is a pretty solid trade. Now how do you start to, so, we haven't really assessed the risk yet because that's what you specifically talked about. But we need to talk about, credits collected, which we've kind of addressed. We need to talk about probabilities, which we've addressed just a second ago. So now let's shift over to the risk side of things. So number one, as I'm sure you're well aware of, you are exposed to unlimited potential risk. I mean, it even shows you right here in the max loss category. Your maximum loss is negative infinity. Now, again, what would need to happen for you to lose an infinite amount of money? Now, that literally means you never stop losing money. You are in a state of always losing money. That would mean you would have to wake up one day and Shopify is, infinity bid and, infinity +2 offer. Right? So that is the quote that you would need to see for Shopify. Is that going to happen? I'm going to say it's unlikely. Right? Now, technically, legally, I can't say it's impossible, but I'm going to say it's pretty unlikely. Okay. So the max loss, theoretically, is kind of off the table, let's say. At least it's extremely unlikely. All right. So what is more practical application of the actual maximum loss in the position? Well, that's actually where, and let's grab our diet strawberry for this. This is actually where the buying power effect comes into play, right? Because the brokerage firm is that number that is, that they spit out for the buying power effect, that is determined by the inherent risk in that position. And the risk is essentially, driven by the strikes you select, driven by the implied volatility in the underlying stock, driven by the price of the underlying stock, driven by, how out of the money or in the money are the strikes that you select. There's a few different factors that go into, how do you determine the buying power effect for a given position? The three main drivers are going to be, the stock price, the moneyness of the strikes you select, and then the implied volatility. So those are going to be the three main drivers of the buying power effect. They essentially determine, the practical risk that you're exposed to in this position. So generally speaking, your worst case scenario on a strangle like this, 90-110, which is what you have. And I know that you rolled into it and all those things, but in terms of giving ourselves some kind of baseline around what you're up against now, we can just look at it right now as if it's a brand new trade. $1,200 is is a good approximation of your worst case scenario. Now, again, just to be clear, can it be worse than that? Yes. Could it be significantly worse than that? Yes. Is it going to hit negative infinity? Probably not. But could it be somewhere between losing $1,200 and losing an infinite amount of money? Yes. And so you need to be aware of that. You need to know what you've signed up for. But most of the time when you take a loser on this specific strategy, it's going to come in at losing $1,200 or less. And so the buying power effect, it's a really helpful metric because not only does it determine, the size for the position, how much capital you have to set aside to hold the position and things of that nature, it also gives us a very, very real-time approximation of, all right, how risky is this position from a dollar standpoint? Again, it's not the theoretical max. It can get worse than this, but this is a really, really nice reference point. So hopefully that helps a little bit there, Phil. And you were able to get a little something from that. Even S&P is down 114 now. Yeah, I don't know, man. We are maybe not going to make it to the close today. NASDAQ down 523, 525. Crazy stuff. So, all right, let's go to the top, though. And man, let's see where you guys are at. Wow, I see you guys. I got to scroll way up. Let's do it. So Brad Glazier's in the house. What is going on there, Brad Glazier? Good afternoon, Professor. Lots on sale today. Let's go shopping. Yes, indeed. It always makes me laugh. I agree with you, Brad. I mean, if you're a long-term investor or if you have any type of longer-term holdings, I mean, days like today are kind of what you want, right? Days like today are kind of what you kind of look out for to add to your positions at better prices and things like that. What always makes me laugh, though, is, and I didn't come up with this. This is a very common phenomenon, and people kind of, poke fun at this all the time. What is the goal of the market? Right? What is just like a novice person would know this, right? What am I trying to do? I'm trying to buy low and sell high. Now, as premium sellers, we're actually doing the opposite, right? I mean, we're not the opposite, but we're doing it in reverse. Like we're selling high and we're buying low. Now, I understand there's some people out there, they're buying breakouts, they're buying high and selling higher. They're selling low and buying lower. They're selling breakdowns. Like I got it, right? But just generally speaking, it's buy low and sell high. What's really funny about that, though, is that it's incredibly hard to do because you don't want to do it on either side. Like, you don't want to do it like right now. You want to buy this? Are you crazy? Like, are you crazy? Right? Like, I just caught word on the wire. North Carolina, tariffed. South Carolina, tariffed. Tennessee, Alabama, Georgia, gone. All tariffed. Across the board. Right? Dakotas are next. Right? Omaha, Nebraska next. Like, it's all coming on down the chutes. And so do you really want to buy this market with the Trump tariff day just kind of right around the corner? I don't know, man. That's crazy stuff. But then when the market's at, 6,100, 6,150, everybody's happy. You got your Jeremy Siegels out there. You got your Tom Lees out there. Like everybody's celebrating, taking victory lap after victory lap. You don't want to sell, Like, man, I don't want to sell. I don't want to get out of this. This is great. This is a gravy train. This is what I've been waiting for. And the funny thing is, now is the time to actually add to longer term positions. And when it is, just, strawberries, sunshine, not a cloud in the sky, man, that's when you got to think about trimming. That's when you got to think about getting out entirely or trimming positions or whatever. And so it's always funny to me that our human nature, and I mean, I do the same thing. I'm not exempt from this. Like, I do the same thing. Like, emotionally, like just behaviorally, we're like, when it's getting crushed, I really don't want to buy. So it takes a tremendous amount of discipline. It takes a tremendous amount of repetition, honestly, where you kind of get used to this. And it still, in my opinion, never quite feels right. And so, but I agree with you there, Brad Glazier. A lot of things are on sale. And so Sam L's in the house. What's going on there, Sam L? The Savant Predictor. That's correct. Always a day early and a couple hundred off. That's right. That's right. But hey, who's counting? I'm not counting. I'm just counting these victory laps, bro. Because day early, week early, doesn't make a difference, right? 100 points off, 300 points off, doesn't make a difference, right? If we get anywhere close, right, we will be taking a victory lap. We will be taking a Wilyer Abreu victory lap. Just like my man took 2 yesterday, and our Red Sox are now undefeated to start the season. And so, Sam L., I appreciate you, my friend, so much. And yes, we did, we can be a little bit off. I mean, who told you that March was going to rip? Was it me? No, there's no way. I mean, it might have been me. But man, March was going to rip back in, the end of February, early March. I was like, March is going to be super strong. March is going to be no problem. Man, we are just going to rippity-rip to the upside. And it appears I may have been just a wee little bit off. And so, but it happens. It happens. So Daniel RV's in the house. What's going on there, Daniel? Cynthia's in the house. What's going on there, Cynthia? Happy red hemorrhagic. I'll just say hemorrhage day. And so, yes, today is it's a bad day, man. It's a bad day. If you're a bear, it's a good day. Wow, look at silver. Man, the metals are hanging in there, but silver is super weak today, which is really interesting. That's really, really crazy. And so, yeah, it's a pretty, it's nasty out there, man. It is nasty out there. Like, if you go to the NASDAQ, let me go back to this really quick. Like this day right here, I remember this day where, the market was up like 350, and then the day after the market was up, a couple hundred or whatever. So you end up like a plus 350, plus 200. And it looked like, man, this is it. Like, we're out of the woods. Like, here you go. I really felt like at some point in the last couple of weeks, we were going to have a plus 7, plus 8, plus 900 a day. And it never happened. Now, of course, I feel like we're setting up for that even more so once, and I don't know what it's going to take to get to that point. Does it take tariff resolution? Does it take, the fifth wave of the L8 wave sequence? I don't know what it's going to take. But I do think that at some point, the face ripper is going to come. It's coming for us all. Like, you're not going to be able to hide from it. There's going to be nowhere to go. Again, it's straight out like just like Genesis 22 stuff, man. Like, it's gonna wipe everything away, and we just start anew. And so it's gonna be some good stuff if you are long and you're still around to enjoy it. Sergio's in the house. Sergio says, "Greetings, Dr. Jim." What's going on there, Sergio? I appreciate you, my friend. Thank you so much for being here. And then Sam L says, "By the way, it appears that President DJT has introduced." Oh, this is good. Oh, you got me, dude. This is good. DJT has introduced a 25% tariff on our brokerage accounts. That's what I'm saying, right? See, this is that's pretty good, man. That's pretty good. He's definitely hit mine, right? There's no doubt about that. And so and again, that's the thing about these tariffs. You can't hide from them, man. It's wide sweeping. It's a blanket over everybody, right? And so we're all getting hit with the same thing. But I'll just tell you right now, and I think Sam L., you might be in the same camp. If he wants to tariff automotives, I'm like, okay, whatever. If he wants to tariff my brokerage account, I'm like, okay, whatever. It's not really going to hurt me personally. Once he starts tariffing pre-workout, now I'm going to have a big problem with what's going on. Like, once he starts slapping some tariffs on my gorilla mind, man, that's going to be a real, real big problem. So, Sam L., I think we're still going to be okay for a wee bit longer. But we just got to stick together, my friend. Don't let them tear us apart. So, Sparky Dog says, "Greetings, Dr. J. Best Buy wants to give up most of its extrinsic value. Should we roll this stink bomb out to next year?" Great question. And we're just going to sit tight for now. We're not going to roll. All the extrinsic value is gone. And so, Sparky, you're absolutely onto something. But again, the buying power savings alone are enough to just hold it for now and not really worry about it. And remember, if we get assigned, it's like that's basically the same position that we had on, right? Like right now, we're synthetically long stock. If we get assigned, then we are no longer synthetically long stock. We are actually long stock. And so the only thing that's going to change is we have to put up more cash capital to hold the position. But the risk of the position is no different. And so there's not really any quote unquote risk of assignment. Like, yes, it'll be a little bit of a nuisance and kind of an annoyance, if anything. And so I'm not too worried about it. Don721 says, happy Friday, Dr. J. Closing lunch today. Yeah, not today. That's pretty funny. If we do, that's going to really surprise me. No, I mean, I think, if I had to guess, if you guys forced me to guess, I would say we're going to close right around here, somewhere right around here. I see us now there could be some volatility going in and close or whatever, but I say E-mini S&P's close between minus 95 and 120. They're going to close somewhere in that range. NASDAQ will close somewhere between minus 400 and minus 600. I don't really see us going like ES minus 150, NASDAQ minus 800. Like, I don't think that's going to happen. But again, I don't know. I know neither does anyone else. I mean, obviously, Wifey Alpha knows, but he's the only one. Right? He's the only one. And so let's see. Scramble Everything says, Dr. J, make the call on OINTs for the day. Man, you guys are trying to push me to do it. I can't do it. I can't do it because my super secret system will not allow me to do it. Right? Like my super secret system, which is basically just me standing outside on my front lawn and just feeling the sun and the wind on my face and just letting it come to me. And it's telling me we're going to stay right here. So I don't really, you can't force it. Like you can't force these things. Again, I don't make the rules, man. David Gallimore is in the house. Dr. Jim says it's getting real bad. My account is down about 1%. If you're only down 1% today, that's pretty good. As of 2 p.m. Eastern today, my hedges are not fully protecting my 223 short SPX puts. Yes, I know David Gallimore loves to pick up those Canadian nickels in front of the the bulldozers. But if you're only down 1% today, man, that's pretty good. On a day that you have S&P's down, S&P's down 2%, NASDAQ down more than 2%, Russell down more than 2%, Boomer is down almost 2%. And those are your brethren. We've talked about this before. If you're only down 1%, that's pretty good. Like I would absolutely. I mean, that's worthy of a victory lap. Now you may not be in the mood to take a victory lap, and I can appreciate that. But I would definitely be. I'd be pretty happy with that performance. Let's see. Mateus is in the house. Dr. J, given the recent VIX spike we had in February, it got me thinking of strategies to always protect myself from these VIX spikes. Yes. Any strategies that you can share with us? Yes, definitely. So this is a very common question that we get a lot. And let me bring up, just to make it really kind of relevant, let's bring up a chart of the VIX. Now, again, can we count today? I don't know. They'll probably send out like their weekly Sunday tweet. So I would look for VIX HQ, at VIX HQ. They will tweet it out probably around Sunday to let you know if this counts or not. But let's just assume that it does. It's a very common question. How do I hedge? Like, how do I hedge my portfolio? And how do I protect myself against, big down moves, black swans, things like that? There's essentially 4 things that you can do. And I've done segments on this before. Like if you actually like Google like Tasty, skinny on options, abstract applications, hedging, you're going to get, I've done this segment with Tom and Tony recently, like within the last 12 to 15 months. It's a bit of a blur, like when I do specific things. And so I may be off a little bit on that, but it's within the last 4 years for sure. So 4 ways to hedge. So there's 1, 2, 3, 4. So I'm going to go from my least favorite. So I guess I should have gone, hold on, let's start again. Let's go 4, 3, 2, and 1. So there's essentially four ways that you can hedge your portfolio from big down days like today, kind of using potentially volatility products. So number 4, this is my least favorite way to hedge against the long delta that's in your portfolio against black swans. It's going to be with VIX products. So like you were asking about how can I play the VIX? How can I do this? How can I do that? I don't really like using VIX products. I like them even less now because honestly of all the shenanigans that happened in August. Like that's crazy to me. That's crazy to me that, the calculation has not caught up to being able to follow markets where there's no bids and everything gets thrown off whack and then the VIX is not even open and you're like sitting on all these calls that are not printing, that should be printing, that you've been, banking on, that you've been using as a hedging vehicle and you're just, for lack of a better phrase, SOL. Like, man, that's crazy to me. That's totally crazy to me. And so I don't like using VIX products because there's all kinds of issues with the instrument itself. I like looking at it obviously as a market barometer, but trading it like directly with the options, because you can't buy shares in the VIX, but trading it directly, I really, really, really don't like it. And so number one, I don't like it because of kind of the mechanical aspect of it. But then also, I mean, VIX calls and even the VIX futures in some ways, they're expensive. Like you're going to have to pay for these, not so much with the VIX futures because that's just an outright future. But like with the VIX calls, they're not going to be cheap. They're going to be super expensive. And most of the time, the market is in a state of volatility contraction. And so you're just going to, you're going to be getting crushed on these VIX calls when it comes to waiting for days like today. And so I don't love them. I don't love them. If you're going to use them, though, you can't buy them on a day like today, obviously. You got to have them when the sea is calm. You got to have them when everything is quiet. You got to have them when they're relatively cheap and it looks like the market can do no wrong. Like that's the time to have them. Okay. Number 3, which is actually very close to number 4. It's going to be SPY puts. So SPY puts is also a very popular way to hedge against days like today. Right? Because obviously, if you had a bunch of SPY puts coming into today, then you would have made a whole bunch of money. That's absolutely the case. If you nail the directional move at the right time with SPX or SPY puts, you're going to get paid. That's true. It's 100% true. The problem is, number one, because of the volatility skew that exists in the equity indexes, you're going to pay through the nose for these too. Like puts always sell at a premium. Like the extrinsic value in the puts always gets pumped up because the implied volatility of the out of the money strikes for those puts goes higher and higher and higher oftentimes as you go further and further and further out of the money. So in essence, the more protection you want, the more you have to pay for it on a kind of a volatility basis. And it's like, man, that's really expensive. And most of the time, the puts are just going to dry up. They're not going to be worth anything. And you're just going to be kind of throwing money out the window. Now, you might be thinking to yourself, yeah, but Jim, I'm okay with that. Like, I'm okay with that because it's just a hedge. I'm viewing it like an insurance policy. Like, I'm actually okay with that. Okay, but I still potentially have better ways to do this with number 1 and number 2, so hang tight. But SPY puts, really don't love it. Really don't love it. And, the second thing is this. You're never quite going to know, when should I get out? Like, you're never really going to know, like, all right, when do I ring the register? Like today, for example, is a great example. We've got the VIX up $3, right? Volatility has spiked by $3. It's up, 16%. The SPY puts are just printing all kinds of money. But now you're thinking, man, I got the end of the quarter on Monday. Man, I got Trump tariffs on Wednesday. Man, I've got NFP on Friday. Like, we are not out of the woods at all. Maybe I should hold these puts. And then the next thing you know, that's when they send the face ripper. The next thing you know, like that's when they just rocket this thing higher. And then the puts just completely get blown to smithereens. And then you're kicking yourself because you're like, ah, man, I had a huge profit. I had a nice offset and all those things. It's just really, really difficult to do. So I don't really like these. And I don't really like these. Number 1 and number 2, I actually do like. And you could kind of go with either one. You're going to see that number 1 should already kind of be an automatic. But I also like number 2. So number 2, this is when, considering some short delta is something to strongly consider, right? And specifically some static short delta. So what do I mean by static short delta? So first and foremost, short delta obviously playing the market to the downside. Static short delta means you're not playing the market to the downside with short calls or short call spreads. Like you can do that too, of course. But I'm saying having some component of your portfolio makeup being static short delta to the downside. So that would be short stock or short futures. Because that way, if the market does drop, you don't have to worry about the delta, shriveling up and not paying you on the direction of move. You don't have to worry about the volatility expansion kind of hurting the short vega of a short call position. You don't have to worry about any of that. You get paid dollar for dollar with the down move, obviously based on the multiplier and the size of the future and whatever, right? But it's really nice to have a static short position, short future or whatever on a day like today. Now, it's been said before, and I don't know who said this, but man, it is a nice, catchy little jingle. For every gimme, there's a gotcha. If you want that dollar for dollar move, if you want the static nature of those deltas, you're going to have to pay for that. You're going to have to pay for that by the very nature of the market and its natural tendency to move higher over time, right? The market wants to grind higher. The market wants to move higher. Now, you may think, Jim, that's crazy. We got the Trump stuff. We're under the 200-day moving average. We're in the 7th wave of a 5-wave Elliott wave pattern. Like, this thing is over, man. Like, it is done. It is dusted. Okay, well, then go for it. Right? But generally speaking, over the longer term, you're looking at positive drift that you're going to have to fight against. And so short delta, specifically static short delta, it doesn't have to be a lot, but it can just be a little bit, is something to consider. But number one, so I would put a circle around this one because I do like that one. But then the number one thing that you should do to hedge against your portfolio, Mateus, hopefully this helps. And this is obviously a super long answer to your question, but I know for certain, man, there's 800 people watching right now. This is crazy. This is crazy, man. I appreciate you guys so much. I know that there are a number of people that will benefit from this discussion, that will take some of the things that we've talked about the last 8-10 minutes, and they'll kind of use that to start blazing their own trail through the forest on how to add, hedging components to their portfolio and rethinking how they're doing things with like a VIX or an SPY put or even short delta or whatever. But number one, you have to stay small with your position size. This is number one. And if you've been following the market, or not the market, but the network for any length of time, and if you've been following me for any length of time, like you knew that's what I was going to say. Like you knew that was coming on down the chutes. It is so important. And here's what's amazing. When you're small with your position size, is it going to be the panacea? Like, is it going to be the magic elixir that just fixes a day like today? No, it's not. Right? Or, huge down days? No, it's not. To some degree, like nothing can fix those things. Like you have to take risks somewhere. Like you're never going to find something that's completely risk-free. I mean, obviously the NASDAQ is, but you're never going to find something that's really risk-free because we all know that's a little inside joke. That's very much on the outside now. Like it was more fun when it was on the inside. Now I get people emailing me. I get people pulling me over to on the streets. But like, is the NASDAQ risk-free? Are you the NASDAQ risk-free guy? I'm like, I guess I am. I guess I now have the label of that. But anyway, when you're small, there's only so much it can do. It's not going to completely immunize you from a day like today, but it frees you up. It frees you up to where now you can actually, trade your positions objectively. You can trade your positions the way that they're intended to be traded, even on crazy days like today. Like, if you're not small enough, you get exposed on a day like today. If you are small enough, today hurts. If you're on the wrong side of a day like today, it hurts. And if you're short and on the wrong side of the face ripper that's coming, it could be tomorrow, could be Monday, could be next week. It might be 3.5 years from now, but we all know it's coming. When it comes, if you're on the wrong side of that, it's going to hurt. It's going to sting, right? Obviously, there's nothing you can do about that to some degree. But man, if you are oversized too, you get exposed really quick. You get exposed really, really quick. And that usually is what it takes to kind of, teach people. That's what it took to teach me. I'm still learning, right? I'm still trying to figure out, sizing parameters and, things like that. And so hopefully this helps though, Mateus. A few things to think about. I would kind of steer clear of the VIX calls, which isn't to say you can't do it, but it would not be my go-to when it comes to the different hedging mechanisms. So, all right. So, market's still there. Barely. ES down 117, NASDAQ down 530. It might lose its risk-free status. I may lose my label as the NASDAQ risk-free guy here pretty soon. Even gold selling off a little bit. Wow. Okay. It's not good, man. The correlation equals 1, except for bonds. I guess bonds are also your flight to quality today. Up a 0.13. And so strategy and opportunity, what's going on? Dr. Jim, how do you like this extremely short Friday? Man, it's a long day for me. I mean, this is a super long. We are entering the overtime period of the show now. Not to take anything away from the overtime guys. Your Chris's, your Ilias, your Dylans, and then, the guests that they may have on the show. Your Thomas Westwaters, I know that he'll pop in from time to time. And so, but this is the overtime portion of From Theory to Practice. And so this is not a short Friday at all. Now, if you mean from a market standpoint, man, it's felt pretty long. Like, you wanted to be short going into today, but man, it has felt long indeed. And so, but I hope that you're doing well there, strategy and opportunity. Daniel RV's in the house. Double down on a naked put if I'm still bullish. My initial credit got smashed. That's a great question. And the answer is maybe. So, should you lay out another tranche, as they say, and they, of course, Sosnoffs, Batistas, Sheridans, etc. Should you double down? should you lay out another tranche of a short put, or even, you could, the same principle applies to, like, maybe you have a long, maybe you have a long futures position. You're trying to figure out, should I scale into this? Like, should I add another tranche? It all comes down to, what are your position sizing limits that you've set for yourself for your positions? That's all that matters. That's the only thing that matters right now, because everything is there. The volatility's there. Like, it's all there. I mean, SPY, I mean, you can see, did you say it was SPY? You didn't even say, but if I just pull up SPY, go into SPY, I mean, IV rank is 40 now, right? You got SPY down 11, right? So the IV rank is 40. And so, I mean, the volatility is there. The volatility is there. The opportunity is there. It all comes down to sizing. It all comes down to sizing. So case in point, maybe you have determined that, based on your account size, experience level, whatever, you like to keep your undefined risk positions to, let's say, 7% of your account, right? Which is a good level. We typically like to be between 3% and 7%. Maybe you already have one short put in SPY that's gotten blown to smithereens, as you said. Should you add a second one? Well, only if, when you have two, it's still at 7% or less. Now, if it's 7.5 or 8, I mean, we don't have to be militant about this. Like, I think that that's probably acceptable. I think that that's probably reasonable. Now, let me give you some more numbers to kind of help you through this. If I'm at, if I'm looking at SPY, for example here, let's go into May, 49 days to go. I'm going to sell, like, if I sell a 40 put, the buying power is going to be what? It's 10 grand. Right, so the buying power is $10,000 on the 40 delta put right now at the 547. Now, keep in mind, the buying power on the SPY or whatever stock you had, whatever it was when you put the trade on, it's almost certainly higher now. That's buying power expansion. That's what happens on big moves in the market, especially to the downside. When volatility expands, IVs expand, the buying power that the brokerage firm is going to make you set aside to, essentially protect themselves from, things getting really, really bad, it's going to expand. So you have to be aware of that. If you put up $4 grand on this position at entry when the VIX was 17, now the VIX is 21 or 22 or whatever, it's not going to be 4,000 anymore. It might be 5,000, it might be 4,500 or something like that. But $10,000 for a 547 short put at the 40 delta strike, I mean, if you're doing 7% of your account total, that means you've got to be, you've got to have, well, here, let me delete that. Let me delete this too. Let's go back here because I've got some more black space to work with. We now know the SPY. Again, the different strikes are going to be different buying power, so hopefully that doesn't, totally kind of throw off what we're doing here. But if an SPY short put is about $10,000, again, it's going to vary based on the strike that you actually choose, and you can test that for yourself. Just playing around with some strikes, and you'll see that the buying power is going to be different. It's going to go down as you go further out of the money. It's going to go up as you go further closer to the money or in the money. If it's about $10,000, though, you're going to need $150,000 in your account for this to be, I mean, that would make it right at about 7%, a little less than 7%, about 6.5%, right? So if you've got 150K, you can do one of these and you're already at your position limit. Now, if you've got 300,000, then you could do two of these, or I could do 2x of these, and I would be at 7%. So this is the type of thinking that I would encourage you to apply to whatever position you have. It may not be SPY. It could be something completely different. But you can use the same general principles that we laid out here to help you determine if it makes sense for you to consider another short put or not. I mean, this is a good time to do it. Volatility's expanded, the market's way down. So you've got, obviously, if there is a VIX contraction in the next couple of days or whatever, which again, a lot of people are thinking, no, this is only the beginning because of the Trump stuff next week and because of NFP and, end of the quarter flows and whatever. And that may be right. That may absolutely be right. But the market has a way of not exactly doing what you think it should do. So just keep that in the old, back of the old noggin there. But yeah, you can use this to help you figure out if you want to layer in, another position. But yeah, I mean, you've got volatility up. The market's probably ripe for a snapback, I would think. And so, yeah. Let's see. Hopefully that helps, though. Strategy and opportunity. Or actually, no, that was Daniel RV. Junior Mac, good morning from Australia. It could be worse. Yes, it could be. Not too much worse, might I add. But yes, I suppose it could be worse. You could have ES down like 200 or something like that. And so, but there's still, over an hour to go. And so, man, wow, what a day, man! I didn't see this coming. I really didn't. And so, man, that's quite a move in the old stock market, man. It's crazy stuff. And so Harold Montero is in the house. Best way to start a Friday. Yankees already division leaders. Well, that's not possible. Obviously, we're tied for the lead, my friend. But I appreciate you very much. Best of luck today. And you're almost certainly going to lose. Don't you? Are you playing the Brewers? The Brewers aren't. I mean, we got to go to Texas, bro. Like you're celebrating a win against the Brew Crew. Nah, man, you need to slow your roll because that is not something that I would be too proud of. But Strategy and Opportunity says, sheesh, naked puts. Shooter McGavin play, eh? Well, I mean, maybe so. I mean, it depends. I mean, you could sell a put in Bank of America, and that's not really a big position at all. So it's all based on, essentially stock price. It's all based on the basis, right? Like, we sold a put in SPY, or we just showed a short put in SPY. That was $10,000. I mean, you could go into here, even IWM, where this index is only $200. I do the same thing. I go to May. I go to the 40 delta put, which is going to be basically the 196 strike. And you can see right here, this is a significantly different trade. Right now, the buying power is only $3,600. And so again, it's largely going to be contingent upon the basis of the stock. How large is the actual notional value of the contract? And the notional value of the contract is going to be determined by the stock price itself, of course. And so that's a big determining factor in what the buying power is going to be. And so RC says, it's not safe, Dr. Jim. Hide the children. Yes. My children are all at their little school today. Oh, you know what's really cool? If you guys could afford me a bit of a tangent here. So we homeschool our kids, but every Friday they do this little co-op deal. Like, it's amazing. The community's great. Like, it's awesome. And so I've gone. I even went a few weeks ago when I was gone that one Friday. Like, I went. It was really, really fun and really cool to get to see what they do. Well, today they had a little enterprise day. So they wanted to have this little like entrepreneurial like enterprise day. And so, I mean, Penelope's 10, Eli is 7. He'll be 8 in like a week and a half. And then Amelia's 5. And so Amelia didn't want to do it because she didn't quite understand it. But Penelope wanted to do it. So she's really gotten into like crocheting. So she crocheted like all these little like baby chicks that are like super cute and like little stuffies. And like, I mean, kids love that stuff, man. Like, if you've ever had kids or you have small kids now, like, you know exactly what I'm talking about. Like, they've never seen a stuffy that they don't have to have in that moment. So I'm like, this is really, really smart. Like, you're thinking about your audience. You're thinking about your customer. Like, this is good stuff. So she crocheted 10 of these little baby chicks. She's selling them for $2 a piece. And Eli is going to be her little assistant at their little stand that they're creating. And so my wife's going to take a bunch of pictures and videos and whatever. And I can't wait to hear how it went at her little enterprise day. But yeah, it's good stuff. But yes, hide the children indeed. But my children are tucked away safely at co-op right now. And so Scramble Everything says, did we not survive the most important PC print of our lifetimes? Apparently not. And I completely missed the mark on preparing you guys for this on the internet and on Twitter. I totally missed the opportunity, and I totally missed the importance of this morning's number, because we've never had a more important PC print than what came out this morning. Now, I still don't know what the number was, but I think we can all conclude that it's over, man. Like, the 4 horsemen are coming. Like, I can see the Reaper in the distance. Like, it's all right there. Another 34 points in the S, and it is indeed all she wrote. But thank you, Scramble Everything. Sam L's in the house. Doc, since it's a long show, should we track our macros? Just go full bro mode and eat intuitively? Nah, you can't eat intuitively. Nah, I think it's a scam. It's not as much of a scam as like the Tesla leverage funds, like your TSLYs, but it's pretty close, right? You got to know what's going in. You got to know what's going in, and you got to keep track of the inputs there. And so Paul Heyman's in the house from your audio only listener. Man, look at you. Appreciate you there, Paul. I was wondering whether you are still long position limits of gold futures contracts in your private trading account. No. Not only am I not that, I might be megapint short in some stealth accounts. And so, but you never know, right? Hypothetically, unofficially, there might be a little something behind these short metals calls. But I'll let you guys know. Like, if you see that gold 80-point drop in the next 2 weeks and I'm just gone, then you'll know it was for real. But if I'm still here, you'll know it's all just made up. And so Adam Armfield says, hey, Jim, I went investment style. Oh, here we go. On those 17 GME calls, I rolled them out to the 995 DTE and up to 23, and I got 1455 from a market maker. I've let myself down and let my school down. I don't know why you're saying that, man. I mean, this is an interesting. So you went So hang on, because we just had this conversation yesterday, right? And it was an interesting situation because at first glance, I was like, I don't love it. I don't like the ruling of the naked calls. But then as I thought about it some more, and I kind of alluded to this in my answer, I'm like, well, using in the money calls to be a synthetic stock proxy, like I don't hate it, and I think it's something to consider. Okay. But now you're saying that you rolled out to the 995 DTE. Man. So let's go ahead and hold on a second. So GME. So you're December 17th, 2027. And you said you had the 17 call, right? Yeah, so I think you were you in like the May cycle maybe? I'm just going to say that you were in the May cycle. Right? So let's see here. So you rolled them out to 995 and up to 23 and got 1455 from a market maker. Okay, I'm not sure how that happened because you sold the 17 because you own the call, right? And then you're buying a 2030. So it looks to me like that's a significant debit. So I'm not following the basis change. But I'll tell you what. So, leaving that aside, man, this is a power move. So this is a market call like I've not seen before. This is not, forget about my gold call, forget about my metals call, forget about all that stuff. That is nothing compared to what you just told the whole world that you believe. You believe that GameStop is going to be in business not only longer than next week, but all the way to December 2027. That's a crazy call, man. That is a crazy call. And so, man, my hat's off to you. You're in the arena. You're doing it. And it's not something that I personally would do. But man, I like it. I like it a lot. And that's what makes a market, as they say. And so there you go. DW3's in the house. He says, Trump's going to say something about easing up on the tariffs over the weekend to try to spike the market Monday. It wouldn't surprise me. It wouldn't surprise me at all. Just because, he's so back and forth that he really is quite a bit of a loose cannon. So, I don't know. I don't know what's going to happen. And, maybe the market's waking up to the idea that, okay, this is really going to happen and it's going to be pretty bad from a pricing standpoint, in terms of consumers having to bear a bigger brunt of this. And then, you kind of play that out, right? It's like, well, if the tariffs do get passed down to the consumers, U.S. consumers or whoever else, then what do you have? You have less money going into that economy. So, for example, if the U.S. consumer ends up absorbing, let's say, the full weight of these tariffs, then that's 25% less in my pocket on all the goods that I'm buying that are tariffed by 25%. And again, I'm not a macro guy, right? I'm not a tariff guy, and it may not be that simple. It may be way more complicated than that. I'm sure that it is. But if I just think about it, just with like very simple X's and O's, which may be a mistake, I don't know. But it's like, there's less money floating around in the economy. There's less money circulating around to buy goods and buy services and kind of keep things kind of, moving forward, rather than going to, the government in the form of a tariff. And so, that would make sense to me from a narrative to help explain the move in the market. Now, again, as we all know well and good, the narrative to explain the move in the market, they never help you in the moment. It's all just color and commentary after the fact because you never quite know what the market is going to latch onto. But Scramble Everything, I missed this one. Scramble Everything said the over-under is 5.25 questions answered. I would have actually probably made my market right around that same level. And I think we actually got over the 5.25, but the only way we were able to do this is because we started early. If I actually ran this to the halfway mark of the show, then it would not be good. It would not be good at all. But iPod Touch Vol P says, Dr. Jim, what is the probability that we retest the 666 level from 2009 on ES? Man, I don't know. Let's go to the market itself. You didn't give me a time parameter. So let's give you till, I don't know, man. Let's say, let's go same time as Adam's GME calls. Right? So let's go 993 DTE. Here you go. So apparently, the delta, they won't even take you down to 600 or 650. They'll take you to 900 though. The delta on that is 0. It's not exactly 0. All these deltas are some positive number. there's some number above 0 in terms of their absolute value, because the probability of getting there has to be some number theoretically above 0. But rounding to the nearest, hundredth or the nearest whole percentage number, it's 0 apparently. But here's what's interesting. So I can't get you at 900 today, but what I can do is I can get you into a fresh new 1500 right now today for the one-time low cost of 1 delta. Look, you can drive off the lot today in a brand new, pre-owned 1500 strike for 1 delta. Man, that's pretty wild if you think about that. That means that that's 2027, so in the next 2.5 years, there is actually a 1% chance that we fall to 1500 and stay there. There's a 2% chance that we touch it and then, obviously come right back to 6200. That's crazy. Like, if you think about that, that's only 1 out of 100, which that may not seem like a high number. That may not seem like a high number, and it's not a high number, but it's not 0. It's like, man, you're telling me 1 out of 100, 1 out of 50? We actually touch that? I don't know, man. I may have to employ the David Gallimore strategy and just start selling these 1500 puts for about $10 a piece, because I don't think that's going to happen. And so, but yeah, there's your probabilities there, iPod Touch. And so, good stuff. Emmett Morrison's in the house. Says Dr. Jim's in the house. Spitting out some facts. I don't know about facts. A lot of misinformation probably, but we're doing something. We're trying to move it forward a little bit. But thank you, Emmett, for being here, my friend. Bill Buchanan's in the house. Says it sounds like a slam dunk. Go all in. I don't know, man. We just looked at the probabilities. I'm a bit shocked. Trouble T-Roy's in the house. Says Dr. Jim. Oh, here we go. I've rebooted my PC, my TV, my fridge, and my washer and dryer. Nothing is working. Do you have any more ideas? Man, I think you've done all you can do, my friend. I think you've done all you can do. I think now is the time when, if you haven't already done it, you got to fill up the bathtub of filth and you just got to get in, man. Like, you've avoided it. You've done all the other things you can do, right? I think now you just got to fill it up. You just got to step in and you got to get comfy. You got to get cozy. You're going to be there for a while, right? You're going to be there for at least, a day or 2 or 3 or 10 or 15, right? And so now's the time. You got to stew in it, man. There's just nothing else. Nothing else you can do. Alan V's in the house. Dr. Jim, much love from Jacksonville. What's going on there, Alan V? You're on the East Coast there. I'm on the West Coast over here, so it's a little bit of a Tupac and a Biggie thing. But I appreciate you there, Alan V, very, very much. Thank you for being here. Paul Heyman says, did you ever have a show? Paul Heyman says, did you ever have a show that the Tasty Trade Compliance Office did not call you? Well, what's great about being, because I'm obviously on the Tasty Live side. And so what's great about being on the Tasty Live side is, we essentially have, free reign. That's why I'm allowed to make jokes like NASDAQ being risk-free, which, of course, for the record, if you're brand new, is totally a joke. It's not risk-free. It's extremely high risk. But most of the time, it feels pretty risk-free. But when you get on the Tasty Trade side, it's totally different. So, like, when I do these events, like, oh, by the way, am I allowed to say this? I don't even know. I'll say it. And this is just amongst friends, right? I am going to be in 3 cities this year. I won't announce the cities yet because I don't know. We don't know for sure yet. I know what they should be, but I'm going to wait till we get confirmation. But the show that I did a few weeks ago when you guys came to see me in Chicago, like, I know Scott S. was there, Emmett was there, a bunch of other people were there. It was amazing, right? It was great. Well, it went so well, and then Mike, Nick, and Katie, what they did, and then Ryan's Crip Up stuff, like, it was all amazing. So Tom is sending us all on the road. Not together. We're all going in at different times in different cities and stuff. And so I'm going to 3 cities in the second half of this year. And so when I'm allowed to announce it to you all, I will announce it to you. And it's going to be amazing. I can't wait to get to see so many of you guys, live and in person at the various cities. But the reason why I brought that up is because, doing the Tasty Live deal, like what I do every day from theory to practice, I'm not too concerned about what I say or what I don't say or whatever. But man, once you step into the Tasty Trade world, which those events are kind of both, man, you got to be, I got compliance. They're calling me, they're texting me, like they're driving shotgun, like when I'm going around town and stuff. Like it's a whole different thing, man. It's a whole different thing indeed. And so Sergio says, who is Elaine? Wow, that's crazy. That's almost some instant block type stuff. Elaine Bennis from Seinfeld, my friend. And so it's very, very sad and disappointing that I had to mention that, Sergio. So that's a little bit of a demerit on your record, but you can make it up. I have confidence in you. But yes, that's going to be a Seinfeld reference, my friend. Scramble Everything says, just add those, let's see, those columns to your watch list in the settings, the high and low, and just use the right arrow to toggle or just widen the left gutter temporarily. Oh yeah, for the high and the low, for the charts and stuff. But I like going to the charts, man. I like going to the charts because the content's not going to make itself. And man, that gives us 3 to 14 and a half minutes that we can just let the content kind of flow naturally. Not unlike the lettuce today, which I would say we're right there at the B- level today. This is not your C plus do. Like we're right there at a B-, a B- mark. And so Paul Heyman says, did you have to buy your wife a new car for date night tonight? No, I did not. But what's funny about that is we have a Pathfinder. We have 2 cars. I have a Honda Civic. The thing is a tank. It's a beast, right? It's amazing. I love it. And we have a Nissan Pathfinder. That's kind of Autumn's car for the kids and stuff. She so badly wants a van. And I understand because we got kids, we got crud, there's so much like stuff, right? And so whenever we go on like a trip, like a road trip, we'll rent a Chrysler Pacifica, and man, those things are so nice. It's so roomy. Like I could broadcast my show from the back of that van, and everybody else could still be in there, and they wouldn't even hear me. Like it's amazing. Like there's so much room, and so she's been on me about getting this Chrysler Pacifica, but I'm like, I don't know, man. We gotta wait and see if we get gold down that 80, 90 points that I'm banking on. But Mr. Pillow's in the house. It feels like I should have just bought gold and kept it under my mattress. Yes, potentially so. Again, it's been the best trade on the board the last few weeks, and up 22 today. And so we'll see what happens. I mean, the fact that I'm, have called for the mega pint short now is like, that basically just preordained 3,200. Like it's written now. YJ's in the house. YJ likes it. I appreciate you, YJ. Thanks for being here. Dr. Jim, RC's in the house, says, Dr. Jim, when Tasty FX hits the main platform, so that's going to be the Tasty currencies, does that mean I could sell futures options and then Delta hedge them with the currency? I think so. I think so. I don't know the answer to that. You'd have to ask, like a Pete Malmatz on that one, or ask, like Frank Caberna, just because they're going to be the ones that are going to be heading up that project, of course. I am not really a currency guy. And so that's not even in my wheelhouse. I mean, even when it shows up, you're probably not going to see me doing too much in there. I'm not going to be splashing around with some Japanese yen and some Canadian dollar crosses and things like that. And so I traded currencies when I was a lot younger and had no idea what I was doing, and lost a lot of money pretty quickly. And so that was maybe the last time I traded currencies for the better. And so, but I don't know the answer to your question, RC. I'm going to assume it's yes, but I would double check with Peter Frank on that. YouTube Jim's in the house, says, greetings, Dr. Jim. Late to the party again. Yeah, but you're here, man. You are here. I appreciate you. Thank you so much for being here. And then Scramble Everything actually said that's a P. Malmat question or a Scotty yes. Yeah, big boy Scotty yes. There you go. Rich Linton's in the house, says, Dr. Jim, what's going on there, Rich? Thanks for being here, my friend. Really, really appreciate you. Let's see. Neri T says, hey, Dr. Jim, my strategies have been working until times like today, sadly. Any recommendations to prevent from reacting emotionally? Yes, and we actually already talked about it about, I guess, maybe 15 or 20 minutes ago now. Position size. Staying small. Not only does it give you kind of an organic hedge, right? It's kind of a built-in hedging mechanism because you have the small position size to weather even some pretty significant storms. Again, it's not perfect. Nothing is, but it is going to allow you to potentially kind of make your way forward through the storm a bit more easily. And so that's my biggest recommendation. My biggest recommendation is on a day like today, use this as, an opportunity to see how your portfolio did. Think of it like a bank test. Like they always have those stress tests that they put on banks, right? Where they're like, the bank test, the bank was, stressed to whatever level and they passed. I don't even know how they do those tests, but I know that they do those tests to make sure the banks are, adequately capitalized and things like that. Today is kind of a stress test, not kind of, but today is a stress test for your portfolio. And so again, if you're too big, it's going to stick out like a sore thumb. If you're too big, it's going to stick out like a sore thumb. Now, some of you might be thinking, well, Jim, everything is sticking out in my portfolio. So how do I pick and choose? Well, again, on a big down day like today, that's to be expected to some degree. But, the big problem areas should kind of show up. And if it is across the board, maybe your position sizing is too large across the board. That's very, very possible. And so I would use this as an opportunity there, Neri, to yes, revisit your position sizing parameters, revisit, how much capital you want to have allocated, at various times. That's another kind of aspect to this. It's not only position sizing at the micro level, but it's capital allocation at the macro level. So both of these things are going to matter quite a bit when it comes to controlling risk on a day like today. And so hopefully that helps a little bit there, Neri. But yeah, kind of use the things we talked about a few minutes ago with the hedging discussion. RC says, I don't think we're ever going back to 6,200. That may or may not be what you're talking about. But yeah, we might not be. I just got a little bit distracted. Sorry about that. Scrabble Everything says position sizing to Neri. That's correct. iPod Touch says, Dr. Jim, when you get your haircut, do you ask for the Kevin Bacon? I do a little bit sometimes. Like I'm actually going to go in here pretty soon, but we're not doing anything crazy. I just need a little bit, just a little bit off the top. Like, again, just take a little bit off the sides. Just kind of, let's curtail the chaos just a little bit. But I don't want to mess with kind of, like the Charlie Sheen, Three Musketeers type deal. Like, nah, man, we gotta keep it. We gotta keep it rolling. But I do typically bring in a picture of Kevin Bacon, and that typically makes it pretty clear what I want. Lefty F3's in the house. I'm feeling like English Bob leaving town after tangling with Little Bill in Unforgiven. Ooh, an Unforgiven reference. I'm lost on that. Never saw Unforgiven. That may change how you feel about me, but it is the truth. And so I'm not gonna lie to you guys. And so let's see. Scramble Everything says, Scramble Everything is laughing at iPod. Yes, that was a good one. And so let's see. Oh, we got all the way to the filthy question that I started the show with. Man, that's crazy. That's crazy. Juan Pablo probably didn't think I was gonna get to his question. I kind of didn't either. But here we are. Hey, Dr. Jim. I hope you're doing great. Question. I have a Google 190-200 debit call spread, currently worth nothing. Should I commit to the do nothing strategy, or is there something I could do? Yes, great question. And you are correct, sir. I wouldn't do anything. You've already lost all there is to lose on that strategy. You have however much time you have left. If you're in April, you still have 3 weeks to go, right? You don't do anything. It's probably not coming back, but that's okay. Like that's what you sign up for with a defined risk strategy. It doesn't come back. You don't worry about it, and you move on to the next trade. And again, if you're exposed because you're too big, then use that as a learning opportunity. But I would not close it now. There's no reason to. If you close it now, you're kind of missing out on free time. Because if you've already lost the maximum amount, you can't lose anymore. You literally can't lose anymore, right? And so I would leave it on. And if you get some face rippers, it might print for you. And so, man, I'm out of time. I got to get you guys to Tim Knight is what I meant to say there. But man, look at you guys, man. I see you guys. If I missed you guys, come back on Monday. If we have a market, it's like 50-50 now at this point. But man, I appreciate you guys so much. Thank you guys. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
How much does it cost you guys to do sound?
Hello, everybody. It's Casual Friday. You wouldn't believe this, but hundreds of times I've been look like a slob. I'm like, no, I can't do that to them. I'll put on a dress shirt. But today, I'm letting my hair down. So I also realized that for all these years, I've been mirroring my videos, so I've been backwards. My face is fairly symmetrical, so it shouldn't be too much of a shock. But if you see me looking in a strange direction, it's because it's normal now. Anyway, it's been a great day. If you've been with me all week, I'd say we pretty much nailed it. It was tough for a while there because the bounce kept going up, but it finished 10 days in with the VIX, and everything I was hoping would happen is transpiring. And, great. Well, if you've taken profits, only a little. All I've done is I took my SMH, the semiconductor puts, off the table for one reason and one reason only. They expire too soon. June, which for me is too soon. So all I've got left is mostly September's and January's of next year. I like an obscene amount of cushion in these options positions, even though it's completely unnecessary. Not very rational on my part, but it's comforting. So that's really all I've done. I'm still very, very aggressively short. And I'm really pleased with how things are going. I also mention, personally, that today marks 20 years that I've been running Slope of Hope. Tomorrow's our birthday, March 29, 2005. I started slopeofhope.com, and it has been my life since then, and that's where these charts come from. I made this platform, and some of you are visitors there, and I appreciate that. So it's kind of exciting time because basically Slope's older than, well, the iPhone for one thing, and a lot of other stuff. So happy birthday, Slope, as of tomorrow. I've got the charts preloaded, and let's make the most of it because this is a great day and a great week. Here's the spider. Because God is merciful, the bounce stopped in the middle of this week. We had a nice drop on Wednesday and an even nicer drop today. Thanks, I suppose, to the tariffs. And we'll see if that sticks or not, because, at some point the politicians behind all this will be like, oh no, people are upset the stock market's falling, so they'll rescind the tariffs again or something like that. But rescind them or not, damage is being done across the board. I mean, even Canada, the friendliest country on the planet, is like, screw these guys. So not too good. So from a charting perspective, everything's going exactly as I hoped. Exactly. Here's the diamonds, down hard. And we hit the 50% retrace right here. And we've been plunging down. This might be an argument to go long. Sorry for saying so. I'm not going to do so. But on the diamonds, we are hitting beautifully. By the way, I just realized this 4 seconds ago because I hadn't looked at this until now, but that's nailing the fib quite nicely. So maybe the diamonds are going to bounce hard on Monday. Maybe I can just picture it Sunday afternoon. It's like, well, we've decided not to do anything. April 2nd, Liberation Day, is now deferred to May Day, May 1st, which would be fitting. Could well happen. So maybe I should lighten up. But that's a nice fib touch right there in the short term. IWM, the small caps, this is just, I had feared / wondered if it would go as high as this in terms of the bounce. It did not. It got as high as that instead. And we have, today's the biggest drop we've had since here, back on the 21st of February. And just clicking right along. And it's unfortunate that we're all at the mercy of whatever tariff changes in, vacillations and capitulations take place in this capricious administration that we've got. But all we can do is try to trust the charts and try to respect support and resistance levels and our cute little drone objects. The cubes are going to hit particularly hard. Seems kind of amazing, but the tech peak was about a month ago, a little more than a month ago, on the 19th of February, when all was bright and shiny with the world. And since then, it's been catastrophic. And it's getting deliciously close to what could be a next leg of this failure, which is way down here, this bottom. There ain't much room between here and there. If there's support to this market, it's the persistent notion that he'll change his mind. He doesn't want people mad at him. Maybe not. Maybe he'll stick to his guns, and the tariffs will stay put, and the world will become collectively so irked with us that it causes lasting damage. So that barrier there wouldn't take too much to cut through that, and that would put us into levels not seen since 9/11. Trevor Milton, you may have heard, the fine young man who created Nikola Corporation. You remember the truck being pushed down the hill company? This is what the stock looked like back in the day. This was during the heyday of QE, and this, on a split adjusted basis, went from about $2,300 to 18 cents before they just stopped bothering. He was pardoned apparently yesterday because, I don't know who's next. Elizabeth Holmes, SBF, probably not, because they're a little too lefty, but kind of shocking news, I would say. But yeah, just one from the vault there. There's Nikola. We haven't looked at that in a while for obvious reasons. But yeah, Trevor is coming back, and he promises the greatest comeback story ever. Yeah, we'll see. China, FXI, continuing to fall. I'll just remind you, I shorted it here. I covered it here. Shame on me. It just keeps falling. The financials, the most supported, backstopped government welfare sector that exists, is actually managing to fall, which is really saying something. My own participation in this is limited to a whole passel of puts in Bank of America. We got a 3.37% drop on this. And I've been dropping these stop loss levels just to take into account the droopage. This one, I just mentioning as an aside, all of these long-term bearish positions continue to erode. You've seen this so many times, and as I've said over and over again, I like in a year to see this at $3 wouldn't surprise me in the least. And then younger stocks like Reddit also falling. This one cutting down to lows never seen before in this drop. We're actually cutting down below the kinds of lows we saw even in early March. So Reddit's terribly weak, having fallen from 230 down to way less than half that. So a lot of sinking going on, and there ain't no bears out there. There weren't. I mean, even a few days ago, you'd be amazed. Being a bear is a very lonely thing. Everybody hates bears. Even the aforementioned Trevor Milton, when he was announcing his pardon, he didn't say, upon reflection, I've spoken to God, I've asked for forgiveness. No. What did he blame? The short sellers, of course. Because it's true. I actually was the one who pushed the truck down the hill. It was all me. Now it can be told. But yeah, everybody hates bears, except bears. But there ain't many of us. One or two of you might be. Although, if I found out that all these years I've been staring at a dead camera, I wouldn't be too surprised. But I appreciate the time anyway, for whatever people are out there. What else is going on? Semiconductors. This, as I suspected, continues to kind of drag things down. I'm flabbergasted how weak the likes of Broadcom are. It's just picture perfect, lower lows, lower highs, this waterfall, down, 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 like so. So the whole AI thing and Jensen Huang being the greatest person since Jesus and all the rest, no, all that's in the past. And yeah, I suspect a year from now, you will not be hearing the name Sam Altman every 12 seconds like we have been. On semiconductor, plunging, new lows on this. And when I say new lows, I'm speaking of this iteration of movement that we've seen, because you would have to go back 4 years to see the kinds of prices we're seeing now with the legs on. But SMH, the one and only position I took profits on today, this is down nicely. This line here had been up around here. And as I had said at the time, it was the cleanest trade, I thought, amongst the ETFs. Very clean, a lot of nice overhead supply, squeaky clean to the penny, stop loss, etc. And it worked out great. It worked out great because we basically spent the week falling. And so in terms of where this belongs now, I don't know. We'll put it right there. I mean, I'm not in position anymore. I guess the easy money's been made, but it could just keep falling. So yeah, I'm out of that one. I'm down to 21 positions open at the moment. And then technology, XLK ETF, no surprise, falling also, down about 2.5%. There is one bright green out there, of course, that is precious metals. I don't know if silver's green. No, silver's weak, and this is a bit of a warning sign. Silver's in a dangerous position because even with gold up, I saw it earlier, it was new high earlier, 31 something. But for silver to be selling off in the shadow of a record high gold, not so good. Because if gold starts selling off even a little, I think silver's going to just melt. We have not even matched the high from back on October 22 with silver. So again, it's not participating. It's going down when gold's going up, which is shameful because you can see gold is very elevated. And as thrilled as I am at gold's success and what it means with respect to the Fed, it's not going to just go 3,200, 3,300, 3,400. I mean, it's gonna sink for a few days, maybe, like it did back here. So silver, I think, is quite prone to selling off relatively hard. An enormous focus for me has continued to be oil and the oil and gas producers. USO itself, finally, down a little bit. This has been blasting higher. Finally pooped out on Wednesday. Didn't do much of anything yesterday. Got a little bearish engulfing pattern on it today. But it's, I'll take it because, USO's down like 2/3%, XOP's down a full percent, which on a day like this isn't that big a deal. But oil's been exceptionally strong. XOP has been exceptionally strong. And the fact that this rocket ship that it was on finally has ceased going up and we're starting to slip is encouraging because the broader pattern, that big pink pattern you see there, could still work out as one of the great reversals of the year. So yeah, that's XOP. And then within that, put position on COP, ConocoPhillips. This too peaked on Wednesday, a little bit lower yesterday, a little bit lower today. It's progress. It's progress. As I said yesterday, I went back into home builders XHB. That worked out. As you can see here, a nice drop, 2.61%, because the PCE was this morning, and for the past 4 months, the ostensible inflation rate, which I don't believe for a minute, but for the past 4 months, the trend has been 0.1%, 0.2%, 0.3%, 0.4%. And so that, 4 months in a row, heating up every time. And so it's not like the market plunged when the news came out. The ES was down like, 10 points or something like that. But it wasn't good for what they were hoping. And next week, the big event is, yet another jobs report. And then we'll be into April and can look forward to earnings season. I would also make mention that TLT is being quite strong today. We're approaching a gap on this. So actually, I haven't touched TLT in a coon's age, but I went ahead and shorted a bunch of this based simply upon the gap. And it's kind of a somniferous creature. I don't think it's going to do anything crazy. So if I get stuffed out, it won't be too nasty. I also maintain XLU short with a stop right there. Bang, 79.15. Give it a few pennies because that diamond pattern is still intact. Just to wrap things up, as predicted, Ripple XRP, I mentioned this one yesterday, I think, down over 7%. Beautiful diamond top on that. And very, very pleased to see that. And in turn, Bitcoin down thousands of dollars. I have been mentioning ad nauseum the importance of watching Bitcoin. And we're definitely moving in the right direction. We got repelled up here. We peaked around about 89,000, and we're slip sliding away on that. And the support is down here at around a little under 74,000. Should we break this level, it'll be an entire new chapter in equity bearishness. So we'll get there eventually. Anyway, I shall say fairly well. It's been an absolutely terrific week. Looking forward to next week with you. We'll wrap up March together. And thanks for the 20 years. Here's to the next, if we survive. Have a good weekend. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. What is going on over there, girl?
His hat was a late entry today. He
Girl.
came in, oh, it's all jaunty now. It's late. You gotta move more towards your left.
I hate when that happens.
Your other left.
Like when you can't get your
Yeah, there you go.
can't get your bangs right. Oh, I hate that.
I know, you know?
I hate that.
What's going on with you? I'm watching you walk. What did you do? Did the corned beef king of Chicago get taken down by his own corned beef?
Looks like it.
Is that what happened?
Looks like
You gave yourself the gout, so you use your phone to take a picture. Like if the print on like a bottle or package is too small, if you take a picture of it, you can make it bigger.
Yeah, I do that all the time.
That. My eyesight's perfect.
We literally tweeted a photo of you out this morning.
Put that photo up.
Be so for real right now.
hold
Oh
on.
my God. You can hear them
There you
laughing.
go.
You
Yeah,
can hear
don't
them
have it up here in
laughing.
studio, but that's Tom right now. That's my view of Tom. Beautiful. He came in wearing that today.
Wait, what does the back say? Does it have your name on it?
No, I would never wear a shirt. Now I'm glad you brought that up because only the biggest loser in the world would wear a jersey with their name.
There they are.
Hey.
JJ,
Put him up. Put him up. Put him up.
Only the biggest.
There they go. Scott, what's up, my man? How's Japan?
Scott, you better have not worn the jersey with your name on the back. Nobody wears a jersey with their name on it.
Look how good that looks.
That is so lame. I'm sorry. You can't do that. I'm so embarrassed that JJ is wearing that jersey.
What does it matter
There's a
to you
code.
what someone else wears?
There's a code.
What is the code?
It's all right.
There's a code. In Chicago, if he wears a jersey with his name on it, somebody's gonna throw a beer on him.
Would you like to say hi to Mr. Tom Ricketts?
We're having an argument on air right now, and you got to put it to bed for us. JJ's wearing a jersey with his name on the back, and we're arguing whether or not, according to the guy code, you can wear a jersey to a game with your name on the back if you're not a player.
Mr. Ricketts, sir, my argument was that these beautifully crafted jerseys were a gift from your organization and that it is an honor to wear the jersey with your name on it.
And my argument is no guy in the world should wear a jersey with their name on it and not expect to have a beer.
And I'm trying
not expect to have a beer thrown on them.
I'm trying to stay out of it so I get one of those jerseys one day.
I think it's okay.
Yeah!
I've gotten jerseys. I think it's okay. If you're a big Cubs fan and you go to a lot of Cubs games, having a jersey with your name on it is 100% fine.
There you go.
Did you see Ricketts after we talked to him?
Yeah.
We asked him if he thought it was okay if you wore a jersey with your name on it.
I did see that. He said
And
yes.
he said he would never do it, but, you know.
No, he did not. He said yes.
I think it's okay.
Okay, revisionist history. It's recorded. I saw it.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody. We are back. I'm Tom Sosnoff. I'm here with Chris Vecchio. Chris is sitting in for the Bat. He'll be back on Monday. It's been quite the amazing day because I don't think any of us saw this coming today. I was going to say had this on our bingo card today, down 100, over 100 in the S&Ps, but when the number came out this morning, I thought yesterday's reaction to all the tariff news was kind of muted, and it surprised me. So it fooled me into thinking that, okay, they're not going to do much damage today regardless. And when the number came out this morning, it was pretty much a nothing. Do you know what I think happened? And this is kind of weird. I think that when buyers didn't step in, sellers just took over. They were like, if you're not going to buy this thing, we're just going to sell it. And there has not been an uptick the entire day.
There was a very brief flash where the tick index or the S&P went into positive territory around 215 or so, and that was immediately knocked off. There's been consistent selling pressure all session. We're already at 1.55 million contracts traded here in ES. Our great chat wizard quant internally, Frank Walsh, sharing some of the options volume here today. We have 750,000 options traded, well over the average in options for the SPOOs. For SPX, it's about 4 million, huge daily over the open interest. For the Qs, 5 million, huge daily over open interest. Same thing for Tesla and NVIDIA is 10 million SPYs traded with daily options, almost 10 times the open interest. This has been an actively traded market all session long, and it's been mostly pushing us to the downside. There's no life here going into the weekend, which, I suppose over the course of the week we've been talking, is there a markup coming because of the end of month, end of quarter? Is this a markdown because it's the last Friday of the quarter?
Well, it's not a markup.
Fair enough.
It's pretty incredible actually today's activity. I'm surprised because I simply didn't expect it today. I thought, just like you just said, end of the quarter. If you had said to me today that the VIX was going to be up 10%, VIX futures, I would have had no part of it. I just didn't see it. Today was the first day we've seen a real flight to quality. And I'm not talking about gold so much, even though gold did go up, silver did go down. I'm not talking about that. Really talking about flight to quality in the sense that they came for the bonds and they sold stocks. This was old school flight to quality. This is like 1982 flight to quality. This is like, 2001 flight to quality. This has not been the typical tape action. So this is real selling today. I looked at my watch list, and the other day, we had like a 50-point down day earlier in the week, and half the stocks on my board were up, and half the stocks were down, and it was kind of like we called one of those ugly down days, or one of those weird down days. Today, none of the above, other than gold. Other than gold and the crazy APP stock, I don't have a single stock where I have a position in that is green. And that kind of across the board selling, and it's ugly selling too. The NASDAQ is down 550 points. You're borderline 3%.
It's a bad day, and we were going over some of the stats on Futures Power Hour today. What happens if the Fed is cutting for recession reasons? It actually lines up neatly. The 3-month return is minus 14.3%. Interestingly enough, of the 39 technical corrections we've had in market, 10% declines or more. Since 1950, the average sell-off has been 14.3%. And really the line in the sand is if once you get to 10 or so, do you finally get escape velocity back to the upside? And the fact that we are now 2.5 weeks away from the initial push to those yearly lows before we get this little tepid rebound, obviously failing this week. I'm wondering how deep this thing can go, Tom. Ilya and I were looking at targets near 17,700 in the NASDAQ today, which sounds outlandish, but where's the stopping point right now? There's no life to this thing. And the rotation looks awful on a sector-by-sector basis continually.
Well, there's absolutely no life today. I mean, and you don't get days where, we don't get 12-point down days in the SPYs and things like that. This is a little bit different animal.
So what do you make of the difference in IVR profile here right now? Because the last time we were at these lows, which were basically at the yearly lows now, the IVRs were in the high 60s, but we're only at 40 here. Does that tell you maybe you should be a little bit patient in trying to sell some vol? Like we could still see further expansion before we finally bottom out?
I mean, if you had told me we were going to be back, if the VIX was going to be up 10% today, and we'd still be, and we're at that kind of 10%, the VIX would be up 10%. We're at a 10% drawdown, and we still haven't, and we're still basically at 20 in the VIX. It wouldn't have made much sense to me. But I think there's a bunch of reasons in the market, which is just there's just an incredible amount of money, and the concentration of money into a certain handful of stocks. People just don't have the same kind of fear that they once had when that money was distributed among a lot more growth stocks and not like multi-trillion-dollar stocks. And that's the only explanation I have. I don't really have a better explanation. I think today was a little bit scary, at least to me, because today's the first time when I see this kind of flight to quality. They never sold bonds off basically a tick all day, and they never sold bonds off at all, and they never came for S&Ps, not even once.
Now, bonds have been bouncing really neatly today, and the data this morning actually caters to perhaps what's coming for the economy that bonds are seeing. The savings rate in the most recent monthly data jumped to its highest level in 8 months. People are making a little bit more money than anticipated, but they're also spending less net. So, is there now a decline in spending coming around the corner? That's going to be good for bonds, right? Slower growth in the next few quarters. Good for bonds.
I mean, consumer confidence is crashing, and this is something we talked about earlier on the network, and I talked about it, one of the fallouts. I mean, people think, there's no fallout from this kind of, executive action, but there is. And as consumer confidence crashes, there's a lot of, correlated fallout to that, and you're starting to see it. And the one thing that's held up throughout all the crap over the last, 15 years of rallies is the stock market. So whenever you can go, whenever you say, oh man, we're going to hell in a handbasket type thing, the stock market's always there to say, you know what, we're really not. And if you lose the stock market, you really are. So that's kind of the challenge that they have here. And it's a big challenge.
It's a big challenge right now because all the names that you want to see on top are on the bottom. Consumer discretionary is down 3.37. Retail's off 2.91. Tech is off 2.66. The only guy that's in the green right now is utilities, XLU, which is never a leadership name you want. Second best performer of the day is healthcare, which is still in the red. So roundly down, you can't even find, hiding out in the equal weighted. No, it's not just the mega caps, right? RSP, the equal weighted S&P, is down by 1.61%.
Yeah,
so
I mean, it doesn't. There is no hiding. Utilities don't count. Nobody buys utilities anymore. I mean, the last time I think the last time I looked at a utility was 1980. Like, I'm just telling you, utilities are, in the last 45 years, I don't think anybody's looked at a utility.
In fairness, that's my best performing trade today. EXC is up.
Okay. Yeah.
So it's like, I've been trading the utilities. It's an AI trade. So it's.
Yeah. How did the CoreWeave IPO go? I saw it came out, it was like unchanged or pretty much down like a few pennies or something. Did you see it at all? Did you watch it?
I did. I saw that it kept getting pushed lower over the course of the session.
Okay.
It's now at 39.83. I think it was first offered at 50, then 48, then 46.
No. I think it went live though at about 40.
Yeah. So it's basically, all things considered, how red today is for the broader index.
It's unchanged. Yeah.
Yeah, it's unchanged.
Yeah, I think the anticipation was that it would open 50 or higher, and it was going to be a hot offering, and that's why they reduced the size. But I think that ultimately it came out as pretty much unchanged. I wasn't too sure about that. I think I on the one hand I want to say that I think today is a little bit of an outlier, but there was no. But it's a Friday. And it's 21 DT. Every time we get to 21 DT, I always get scared because I always have something happens either on 21 DT or 19 or 18 DT. And but today, man, this was across the board. This was just This was just ugly. The definition of ugly, and everything except for pretty much for gold, everything except for gold and bonds was down. I mean, there was nothing.
It's a good place to head out, Tom. I'm sleeping well tonight. Just hanging on to my gold positions for dear life and praying.
Well, the problem for gold is that it doesn't even matter because the gold can't save you. In these kind of markets, I mean, especially for premium sellers like me, gold can't save you. Gold's just like, okay. I mean, I thought bonds were going to save me this morning coming in long bonds, and that was a nice trade, but it didn't save me at all. Yeah. It is bonds and gold. I'm sorry, bonds and Japanese yen are the only two green positive P&Ls I have on my screen today. Everything else has a red mark and the commas next to it. So so I don't think it was. There's nothing to write home about today. I don't really have a glimmer of hope in here. Worst performers for us are, man, there's too many to name, but my absolute worst was Netflix, down 44. I sold some premium there the last couple of days because it was the richest IVR, and it came back to bite me in the butt today. Netflix, Marvell, S&Ps, those were all my worst. But it was just across the board, just slappage, slaughter, whatever you want to say. I put on some new positions this morning, about 10 of them, but then I didn't do anything all afternoon because, I'm one of these people that when we get outside of the one, really we get outside of one standard deviation and we get towards that 2 standard deviations where we are right now. I'm one of these people that just back off because I don't know what's going to happen. But outside of like that, when you get into that 5% range, you can throw the numbers out for the day. They don't mean anything.
No, they don't mean anything here, but
yeah, that's right.
You talk about like huge volumes though, right? If I could just draw your attention to this, we look at the 0 DTE right now for March 28th and NVIDIA, for example, volume approaching 300K today, over 22.8 open interest just in those 110 calls. This is
you can
200 million.
Butt. You can bet your butt today that there was no, there was nothing good that happened in the 0 DT SPX. You can't, if you're trading 0 DT SPX, unless you're buying puts early, there's nothing good that can happen in this move. I mean, if you're buying calls or if you're selling premium, there is no escape. I mean, they just didn't have an uptick. NVIDIA here is probably the one stock that was actually stronger this morning, and it's also one of the stocks that, on a relative basis, doesn't look that bad to me on a relative basis. I have a bunch of NVIDIA positions on, and I have a few long deltas, but I think it's the one stock that it doesn't bother me. For whatever reason, it doesn't bother me.
It's not leading on the way lower like it was in the market sell-off in the second half of February, right? And I think that's perhaps a good sign. It's off 1.6%, we'll call it right now, compared to the triple Qs being down closer to 2.7%. That's a nice sign of resiliency, but only a 25.2 IVR. So do you find yourself
at the level when it got under 110 last time? It got a little shaky. It got down to 106 and change, but it mostly traded between 107 and 109, and then it just popped up to like 117 and rallied like 10 handles. It'll be interesting for me to see what they do here on the close. I kind of feel like if they close them underwater, they get a little interesting. So if they're down about if they whack them into the post close, but I think it's going to be the exact opposite. I think they're going to try to bounce them up here a little bit because I think everybody who's leaning short into the close is going to have to cover. They're going to bounce them up a few handles and then maybe close them down 100 and see what happens on Monday. I wouldn't go home long, but we'll see what happens.
So if you're looking for a bounce on Monday, right, maybe this is, there are big volumes here today. We can't rule out the fact that these are capitulation level volumes, to be clear. But what are you looking for on the Monday open, right? Or the Sunday open? You're getting on with Victor, Ilya, Pete the Sunday. What do you want to see? Is it a gap open lower to flush us out or immediate resiliency?
Well, I think that if they gap open down Sunday night, they're probably okay to buy them for a trade, but it's not going to be easy. There's a lot of people that are that bought the dip today that didn't get paid and that are mad right now. There's a lot of dip buyers today because a lot of people thought the same thing. End of the quarter, how could you not buy them? This is a gift. They're handing it to you on a silver platter, the whole deal. I think you're going to see the same thing. And I don't necessarily feel too differently. I'd be inclined to nibble from the long side on a down opening on Sunday night. I don't think you buy them right here.
Buying them right here with 9 minutes left to go to the close ahead of the weekend is a tough sell for me personally. But, we think about risk to reward on those kind of plays. If we open up Sunday night a little bit weaker, we're only 60 handles, 1% away from the yearly lows. The IVR 38.7, if you see a gap open lower, you can imagine that volatility futures are expanding a little bit at the open. You're willing to risk 50 points in ES? This is a great place to trade around for the start of next week. It's certainly a better risk to reward than getting short deep in the hole right now. But it is a technically weak market. So, you get an opportunity to sell some puts down here at the open. We'll see what happens with 55.60 or so.
We did this, we do the quarterly game to guess the market, and we play it with all our customers.
And don't look at my number.
And let's see. Hey, Matt, who's to the show? Matt, or Paul. Paul, do you have the numbers? Let's see. I don't know if he has them. I'm not sure who's producing the show right now. I think it's Paul. Paul, are you guys there? Oh, there they are. Let's see. Matt's there. Let's see what we got here. Numbers. Looks
pretty good.
I'm reasonably close.
It's pretty good.
I had 57.25. Tony had 62.50. So he's only 500 points away. I'm only 100 points away. I don't know where you are, Chris. I don't see you on here.
I guess it's just lost to the sands of time.
But I don't think that's fair. I think you have to come clean.
63. I think it's like 63 or 6,400 for Q1.
Oh, you're 6,300 right there.
Oh, see. Okay, well, there you go. But worse than Tony.
Yeah, you're worse than Tony. The only person who's close to is Jenny at 5,600. I can't read that. What number is she at?
58.
Jenny is at 5,800.
Oh, she's 5,800.
Thank you, Matt.
Now I'm the leader in the clubhouse against the tasty crew, the talent, as we like to say. I'm the leader in the clubhouse. Jenny second. All you guys are way out of here.
And you told me when I first started working for you, your number one job is to make me look good, Chris. So consider this mission accomplished.
There you go. Well, I'm going to be relentless on Monday with all this great information at my fingertips. So we're going to have some fun here with this on Monday. But I'm waiting for the bat to get back because I will enjoy this with him more than anybody.
As you should.
He's only off by 500. All right, thanks. That's perfect. Anyway, it just shows you how difficult the game is of predicting what's going to happen in the markets. And if you remember at the end of the year, almost every single analyst had 66. They were all up 65, 66, 67, 69, 72. Everybody was like, oh, this is the best of all worlds.
Yeah, we did a Let Me Explain in December where we talked about how usually analysts for year ahead are predicting like 7 to 8% expansion in the S&P, but coming into this year they were like 13% growth for the top line, and that was the most bullish analyst had ever come into the next year ever. As for me, did my target, I took 2 shots at the long side early in January and February, didn't work out. I stayed away during the February decline. I took a short put spread on March 14th again, so I actually only traded 3 times in stocks this year. So prediction wrong, but at least I recognized the market trend was going against me, so I didn't get burned too bad. This first quarter was pretty good, all things considered.
I mean, my first quarter was really good until today and yesterday. It's kind of the first little setback, I guess.
You got another day. Monday's still the quarter.
Yeah, I guess that's true. I'm not going to have a lot of delta. I'm going to have a few. I'm going to have a few problem children next week. If they rally, I'm going to get double whammied like everybody else is. I'm not so sure that they're exactly. I'm not so sure they're exploding. Let's put it that way. Early next week, I just think that. I don't know. I just think there's a chance for a bounce. It's the last day of the year, but I thought that today.
We're getting a little bit of a bounce here into the close. We're up about 15 points, 56.30, only off 1.9%.
Yeah, I know, but a bounce into the close, understand, that doesn't mean anything. All that means is that all the day traders are just covering right now because they got to cover. It doesn't really mean something. I think Sunday night will be better. By the way, you can join us at for the Sunday night first call, myself, along with Ilya, Victor Jones, and Pete Momat will be on Sunday night, and we'll talk about the markets. We come on air at 4:55, and we go till about, let's say, 5:35, 5:45, whenever Ilya's done talking. So, no, it's fun, and it's a very good, quick discussion. Nothing that's gonna take too much out of you. Any single stock that you see right here that you think got ultra cheap, like is Apple ultra cheap at 217? Is there something, we had just talked about NVIDIA at 109.5 in that range. I've got a bunch of emails from people that think, you know what, how could you not be long Google here? And it's a good question. Google's probably, one of the uglier sell-offs when you think about it.
What's Google's PE now? I think their PE is only like, this is not a stock ticker, Goog. It's only like 20 right now. Considering that you have some sky high valuations in the other Mag 7 names, and the prevailing consensus is that Google has flubbed its AI handoff. I'm going to paint a different picture here. There is a market on Polymarket that says what will be the best AI model based on some consensus benchmark with public testing by X dates. 2 days ago, Polymarket's now pricing in Google to have the best AI by the end of March. So maybe there is a good story here to be told. A company with a cheap valuation with high IVR heading into lows that we haven't seen since last September. That's a decent place to perhaps sell some puts around, because if you get a bullish tailwind, there's actually a good bit of there's some decent sentiment building up for Google right now, despite today's 5% move lower. I would actually argue that can be an AI leader.
How do you prove that?
So they have these AI benchmark. Well, good point about the contract settlement or proving how good the AIs
settlement. Are. How do you settle that contract?
I believe it's based on an independent benchmarking test that tests like Grok 3, GPT 4.0, Claude 3.7 Sonnet, and it compares the results across the board as of the end of the month.
That's interesting. I could see that. That doesn't seem that clean to me, but I could be way off.
You don't find the Polymarket betting markets to be clean?
I enjoy Polymarkets. I'm a fan. I'm a fan of peer-to-peer. I think it's a very interesting approach to finance. Mm-hmm. I think it's good for the consumer. So I am a fan.
That is the intended ethos of crypto at the end of the day, circumventing banks in the global financial crisis. We have to do a peer-to-peer system so our wealth isn't trapped. I mean, I think it's very actually to the spirit of what crypto's about.
A couple of interesting side notes before we run out of time here, with less than a minute left. VIX 1 day up 7.5 points today, which is really strange going into a weekend. Even with the 100-point down move, VIX 1 day 2460. The VIX itself up almost 3 points today, which is like 15%, and the VIX futures up huge. And again, we'll just point it out: no stone unturned today. There are no good stories if you're a bull.
No silver lining.
No silver lining.
Rotation's ugly. Yep. All the things that you want to see leader down.
Yep.
But the market's going to open next week, Tom. So the good news is there.
You know what's so much fun about this business is that I think we can have the same discussion. We've been having the same discussion for decade after decade after decade, almost every week, almost every Friday, every end of the quarter. It never stops. Just slightly different scenario, same talk, same stuff happening. It's kind of crazy. Chris, have a great weekend. Everybody have a great weekend. We'll see you Sunday night, and fingers crossed for next week.
A very good morning to you. Welcome to Trade Live with IG, with myself, Rich McDonald, and the one and only Ronnie Agnig.
Well, thank you very much for having me, Rich. It's a pleasure to be here. I was just telling the lads outside how there's no place I'd rather be on a Friday